plus international monitors and enforcers of what have been international regimes for counterproliferation, really will be vital in seeing what happens with the nuclear program long term.
The president, President Trump, agreed to extend the ceasefire for 3 weeks, but Benjamin Netanyahu, the Prime Minister of Israel, has said that he wants those attacks on Lebanon, on Hezbollah there, to continue. And I guess that raises the question of whether they are following along, if this is something, like, how do you fit that into the construct of the ceasefire at this point?
My hunch is that the president sees the use of economic power on Iran as linked to the likelihood of being able to make progress on Hezbollah. Getting the government of Iran, whatever the remnants are, to agree not to support the tentacles of terrorism throughout the region is one thing, but that would be an agreement with an entity that you cannot trust and would have to verify everything. But if you economically cripple the entity that's been funding Hezbollah, then it really doesn't matter what the agreement says. They don't have the means to fund regime terror throughout the region. And so I think ultimately these are linked, and Iran has somewhat accidentally reinforced that all along these tentacles really have been them, and that's why maximum pressure and ultimately these actions were necessary.
Just back to the point we started with, this idea of who we're negotiating with. When you hear from some of the parliamentarian members from Iran, they seem to be willing and understand that they need to negotiate at this point, but the rhetoric that comes from the IRG is very different. Who is the one that we should really be listening to in this case? And do you trust the idea of negotiating with elected officials at this point?
Well, the elected officials, even in a system like Iran, have a little bit more ear to the people than the IRGC does. The IRGC is essentially equivalent of a Stasi, a politicized, radicalized combat force meant as much to control its own people as it is to, and protect the so-called revolution, as it is to protect the sovereignty of the nation. They have a military that's separate from the IRGC. You have to listen to what the new leadership of the IRGC is saying, because when people with weapons and influence speak, we have to at least factor in what that is. But ultimately, IRGC as an institution has to be completely degraded, and hopefully these other institutions, civil institutions, the civil military, and others will overwhelm as they see the writing on the wall, that there's only an economic future if there's some kind of a ceasefire, roughly on America's terms and the Gulf allies' terms. And that's really where this manageable landing point is going to need to be.
Steve Yates, thank you for your time.
Thank you.
Coming up, we're going to get into Elon Musk's multi-billion-dollar lawsuit against OpenAI set to kick off today in California. And then next hour, a wide-ranging conversation with U.S. Attorney Jake Clayton. First, I want to get over to our friend Bernie Raymer, the weather forecast and meteorologist, with this week and today's weather.
We have a severe weather outbreak this afternoon and tonight across the Midwest, mostly south of Chicago from St. Louis all the way down toward Paducah, Kentucky. I'm expecting dozens of tornadoes. Sunshine along the East Coast, mostly dry Texas and Florida, and the West remains relatively quiet. If you're doing any traveling, there will be ground stops from Chicago towards St. Louis, maybe a spotty shower in Miami. For AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions so your business stays best prepared. Visit business.accuweather.com.
India's largest drug maker, Sun Pharmaceutical Industries, announcing it's going to buy New Jersey-based Organon for $14 a share. It's tiny. Organon was spun off from Merck in 2021. It specializes in women's health and biosimilars, has more than 70 products that are sold across 140 different countries, and it in recent months has gone up from $6 or $7 up to where you can see it today, up $1.84. I think at 11 the market cap was $2 billion something, so it's tiny.
Coming up, we're going to talk about jury selection set to begin in Elon Musk's case against OpenAI's Sam Altman. We'll bring you the details about that in just a moment. But first, take a look at Intel. Those shares gained more than 23% on Friday, the stock's best day since 1987. That came after Intel reported better than expected first quarter results and gave a sales forecast above estimates. Intel benefiting from a renewed focus on central processing units in AI. This, of course, after years in the spotlight being all of it being on NVIDIA's graphic chips. We'll discuss that and more when we come right back. Welcome back to Squawk Box. The dispute between Elon Musk and Sam Altman over OpenAI's shift to a for-profit model heading to court today. And joining us right now is Tim Higgins, Wall Street Journal business columnist, a CNBC contributor. It all goes down, so here it's going to start. The question, Tim, is how do you handicap this situation in terms of what the permutations or possible outcomes of this could actually be?
Well, legal experts seem to think that Elon Musk has an uphill battle, that it's unlikely that he's going to win. That said, I would almost argue that in a lot of ways he has already won. If you look at kind of the year ahead, Elon Musk is going to taking SpaceX public, an IPO, kind of framing it as an AI company. OpenAI also has ambitions of going public later this year, possibly, and he's beating them to the market. They've got this kind of cloud hanging over them, OpenAI does, and that's in a lot of ways, that's thanks to him. He spent the last 2 years really kicking up a lot of dust, questioning kind of Sam Altman, the CEO of OpenAI, questioning kind of his ethics, which is not a fun thing to be doing as you go into an IPO.
Well, Tim, that's what I was going to ask. How much of this do you think is part of effectively, or will have the impact of damaging the reputations of the characters and the character of the individuals involved in this ahead of this IPO? And how damaging, by the way, could it be also potentially to even Elon?
Yeah, you know, I think a lot of people know who Elon Musk is at this point, right? So it's hard to imagine there's going to be anything that's too revelatory about who he is as a person. There could be lots of interesting nuggets that get a lot of attention, but I think for a lot of people, they know who Musk is. Sam Altman, that's a different story. Here in San Francisco, where I am, people know him, right? He is one of the rising princelings, if you will, in the tech ecosystem. Outside of San Francisco, outside of tech, he's still, I think, relatively new to a lot of people. And Musk, for his credit, for the past couple of years, has helped frame how people think of who Sam Altman is. And of course, Altman doesn't like that framing. He is very vocal in arguing that he is out there trying to do good with OpenAI, that AI can be a force of good. And that's in this backdrop of at a time when people are concerned what AI is all about.
Where are you more broadly on the IPO of OpenAI later this year and the growth of Anthropic versus OpenAI and where you think Gemini is and everything else?
Yeah, you talk about all the players here, right? You got Google out there, and it's interesting because OpenAI, created by Musk and Altman out of concerns about Google's kind of ambitions in that space and wanting to have something to kind of counter them. Now they're fighting each other. And you got Anthropic clearly being very aggressive as it moves towards its own IPO, taking some of the steam, benefiting perhaps from some of this chaos that OpenAI is seeing with Musk. So, you know, a great spectacle for the year ahead in the AI race to raise money, and that's really kind of what's going on here is this never-ending need for cash to buy compute power to fuel the AI growth.
Right. Interestingly, there's a lot of big tech companies that have a huge stake in the future of OpenAI. So NVIDIA's got a piece of the action. Amazon just got a piece of the action. Microsoft, of course, is one of the original investors and backers in OpenAI, so they have a huge piece of the action. How much are they watching this?
Oh, huge, right? We're expecting perhaps the Microsoft CEO might have to testify here in this case. The potential that OpenAI's, you know, that their nonprofit could be kind of change the terms of that and kind of gum up the works of an IPO would have effects for these backers of them and just complicate that kind of future that they were betting on.
What do you think about some of the speculation that the outcome of this could change the actual management of OpenAI in the end?
Well, that's what Musk would like, right? He would like Sam kicked out. That's clearly one of his goals. That's to be determined here. The jury is going to decide the liability, and then the judge is going to decide the remedies. And that's going to be an interesting thing to watch. This is a no-nonsense judge, Judge Gonzalez-Rogers. She's been involved in a lot of huge tech cases over the years. I think about the Apple and Epic antitrust case a number of years ago. She had Tim Cook in her courtroom, and she was pretty tough on him. It'll be interesting to see how she deals with Altman and how she deals with Musk.
But even beyond that, you've seen some speculation online and elsewhere about just some of the challenges inside of OpenAI. There's even been chatter I've seen about the possibility that Brett Taylor, who's the chairman of the company, that maybe they try to buy his company and bring him in to help manage the business as well.
It's part of this kind of overarching narrative. Is Sam Altman, the CEO, to be overseeing this company as a public company, right? He is clearly an operator, clearly a very good fundraiser, helped build up the narrative around OpenAI as this future behemoth in the AI space. Now the question is he the guy to be running things as a publicly traded company, which is a different skill set, it's a different kind of mentality, and you see it a lot here in Silicon Valley. The questions of, do founders make good CEOs down the road? Now, if you look at Tesla, if you look at SpaceX, people are probably pretty happy that Musk was there at the early days and he's there now. That's kind of the constant kind of battle here in the Valley.
Right. Tim, want to leave it there. Thank you. We will, of course, be watching every moment of it, and I'm sure we'll talk about your commentary about it throughout. Thanks.
Thank you.
It is 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Joe Kernan and Becky Quick. We've got a lot going on this Monday morning. Want to check the markets ahead of a very big week of earnings and a big upcoming Fed meeting. We're going to hear from Fed Chair Jay Powell. We'll get into that in just a second. But right now, take a look at where things stand. The Dow off about 31 points if we opened up right now. NASDAQ up 36 points. The S&P 500 basically, we'll call it unch, but basically down a point. Take a look at energy prices, though, because this is important. Axios now reporting that Iran presenting a new plan to reopen the Strait of Hormuz, and you're looking at WTI crude at $95, Brent sitting at just about $106, Jim.
And the Senate Banking Committee now scheduled to vote on Kevin Warsh's nomination on Wednesday after Senator Tom Tillis lifted his objection. Senior economics reporter Steve Leisman joins us now with an early look at how respondents to the CNBC survey are gaming out the Warsh Fed. Hey, Steve.
Good morning, Joe. Yeah, it's time. Kevin Warsh could take the helm of the Fed on schedule in mid-May, assuming that committee vote on Wednesday that Joe talked about and a quick floor vote by the full Senate. His confirmation would open up a very different era for the Fed with big questions on how he runs policy and, of course, on the policy outlook. Respondents to the CNBC Fed survey divided over how independent Warsh will be from the administration. 50% saying he will conduct policy mostly or very independently, and 46% say only somewhat or not at all. Those are high levels of concern over an issue like this, but it's 13 points better than last month. So Warsh may have made a few converts at his nomination hearing where he did proclaim that he would be independent. 58% say Warsh will be dovish when it comes to interest rates. That's up 14 points from Warsh. And 65% say he will be hawkish on the balance sheet, and that's up 9 points. While Warsh has made reducing the balance sheet a major agenda item for his tenure, there's skepticism that he can do it. 42% say he'll bring it down in his first year, but 46% say it's going to remain the same. Among those who see a decline, the average amount would be $800 billion. That's a $6.7 trillion balance sheet. When it comes to the issue of how the Fed should think about AI-led productivity and monetary policy, Warsh has strong disagreements with the survey respondents, something that might be true also among his colleagues on the FOMC. 81% saying the Fed should wait until productivity is in the data before incorporating it into current policy. Just 19% agree with Warsh that the Fed should put it into policy now. Of course, there's also concern about the balance sheet reduction. A 46% plurality think it could increase interest rates, with substantial division about whether it's good for economic growth or bringing down inflation. So, Joe, a lot of questions about the things that Warsh wants to do, but of course, what we're talking about is the 26 strategists and economists probably represent the conventional wisdom, and what we're learning is that Warsh does not.
Yeah. Well, let's get going. Let's do it. Let's get him in and see what happens at the next meeting, and you know, let's move forward. Are you up for that, Steve? Let's see what happens.
Well, let's see what happens, Joe. There's an interesting question as to whether or not separate out what Warsh would want to do in normal times. But the bigger question is the impact of oil prices and inflation.
No doubt.
If Powell was handing Warsh a 2% inflation rate, and without substantial questions about the outlook for inflation, the outlook and what this group thinks Warsh could do might be very different.
Right.
But that's why it's not just this group, Joe, but we'll talk about this more tomorrow, what the outlook is for the Fed funds rate. But even the market does not think that Warsh is going to do a whole lot in the first year.
Well,
and I think it's because of the handcuffs of oil.
He's going to turn over the reins to Warsh and say, don't worry, Kevin, I'm pretty sure this inflation is transitory. And it's transitory. It's transitory at 3%. It's transitory at 3%, not 9%. So I mean,
But the president did tell us
Well-
that he'd be disappointed if he doesn't cut rates right away.
but then Scott Bessent said he's not going to cut
Yeah.
rates right away. Steve, UAL. This is my dream. Anyway, Becky's going to intro this.
Steve, thank
you.
We will talk to you a little later. News just out from United Airlines, and Phil LeBeau joins us with the details. Hi, Phil.
Hi, Becky. This is a statement from United CEO Scott Kirby, further clarifying the discussion that has been swirling around United Airlines and American Airlines over the last 2 weeks about a potential merger between United and American. Just to set the table, remember the reports were a story leaked out a few weeks ago that Scott Kirby had approached someone in the Trump administration about the potential for United buying American. It was always deemed as he approached the administration. Scott Kirby just releasing a statement that United put out in an 8K. Two pieces of news in this statement, and then we'll talk about some of the other parts of the statement. The first one being that he says, for clarification, he approached American. Did not say that he approached the Trump administration. He says he approached American Airlines about the potential for a merger because of the value he believes it would create in terms of size and scale and the ability to bring customers something they don't have right now in the United States, despite the big three airlines all having massive presence internationally. He wants to create what he believes will be an even greater airline. That's the one piece of news in this statement. The other piece of news, he ends it by saying, our pursuit of American Airlines is over. So from this statement, you can take away that he is not going to be considering or approaching American any further on this. Now, we haven't reached out to American to get a comment from them. They've made it clear over the last 2 weeks they have no interest in United Airlines. And Scott Kirby even talks about that in this statement, guys. So the bottom line is this. This is a statement from United Airlines CEO Scott Kirby saying, here's why I approached American, and here's why I think it could have worked. Size, scale, create greater value for the customer, and why he believes it would have been approved by regulators. But he ends the statement by saying, for now, our pursuit of American is over. So that's what we take away from this. Joe, your dream is not going to happen. You will not be seeing American and United getting together anytime soon.
Could be back on track. You never know.
Hey, Phil, this
Could
to
be
me,
back. It could be back tomorrow.
Phil,
You never know,
Wall-
Joe. But for now, it's pretty clear from Scott Kirby's statement that they are going to the pursuit of American
Phil,
is over.
in Wall
but I don't
Street
think it's
parlance-
over in terms of long term.
Phil, can you hear us?
I hear you.
Phil? Okay. In Wall Street parlance,
I hear
they
you.
call this a bear hug.
Bear hug.
And
Or a
even-
pseudo bear hug.
Yeah.
Maybe it's a
Quasi.
quasi bear hug.
Not going to
yeah.
shareholders, but
And
sort
so
of.
the question ultimately is the reason I imagine you put this out in public the way he has, even though he is saying at the very end that he's not doing this, is to put pressure on American to somehow come to
Yes.
the table. Otherwise, you would not do this at all.
That's what I think. We agree.
Correct.
Oh my God.
Correct. And let's be clear here. Scott Kirby and United Airlines, they have been in touch with some of the labor unions at American. I know that from talking with the labor unions at American. And there's not a whole lot of love between, let's take the pilots and the leadership at American. And that's how you create the ability to say to shareholders, large shareholders, look, people aren't happy there. Look what we can create here. There's no doubt about that. Now, on the flip side of this is the question of how long is this going to take? And is this just a case, as you mentioned, a quasi-bear hug? Churn the waters a little bit. Create enough dissent within large shareholders at American Airlines. Perhaps maybe you get to a point where you can create some dissent on the board or get some people on the board at American to say, no, wait a second, is this really the path we want to pursue? Maybe we should consider
They've
United
already been
Airlines.
talking
But
about
that's-
that at American. Like,
Sure, that's a possibility. But I can tell you this: at this point, everybody that I have been able to engage with at American, I do not get the sense that the board is not happy with Robert Isom to the point where they want to get rid of him. So, I mean, could that change? yeah, that's a possibility. Anything's possible.
So it sounds like there may be more to come with this, but obviously this news just hitting. And by the way, you did a really
Yep.
good job of asking him all these questions last week when they reported. It's kind of interesting to see this.
Yeah,
laid
you
out
like how he
here.
danced around that? He called it
Yeah.
a rumor. Well, that's
Or
Scott
not.
Kirby being Scott Kirby. It was not a
Yeah.
rumor. It was out there. It was discussion. And
Phil,
I'm
did-
sure that off camera he probably smiled and said, "Yeah, okay."
So did Scott really ask you what does LFG mean? Does he think it's some kind of natural gas or like LNG or?
He didn't ask me what LFG means. I think people know what LFG means.
No, he didn't. That's what they told me, that off camera he asked, and then he was laughing about it. Okay, never mind. Yeah, because that's
Yeah.
what I said. Yeah. I don't know. That's what people told me.
Phil, thank you. All right, when we come back, the major averages putting up solid gains for the month of April with a few more trading days to go and another big week of earnings and the Fed meeting. The professor of the markets, the Wharton School's Jeremy Siegel, will tell us what he's watching. That's next. Also, a wide-ranging interview with the United States Attorney for the Southern District of New York and former SEC Chair Jay Clayton. That's coming up at 7:30 a.m. Eastern Time. Squawk Box will be right back.
Welcome back to Squawk. Results just out from Verizon. Earnings of $1.28 a share, 8 cents better than analyst expectations. Revenue of $34.4 billion. That was below estimates of $34.8 billion. And Verizon reported total postpaid phone net additions of 55,000. That is better than the street had expected. The company raising its earnings guidance to the range of $4.95 to $4.99 a share versus estimates of $4.90. It also expects total full-year retail postpaid phone net additions in what they're saying is going to be the upper half of the previous guidance. That was between 750,000 to 1 million. So Dan Schulman now in the seat as the company's CEO, and stock moving higher today, about 4%, at least in the pre-market right now.
And by the way, that's after some pretty big gains for the year to date before this. All right, this week is the busiest for earnings yet, and we'll be hearing from the Federal Reserve about the future path for interest rates. Joining us right now is Jeremy Siegel. He is Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. He's also the Chief Economist at Wisdom Tree. And Professor, let's just take stock of where we are with the markets at this point. The S&P 500, the NASDAQ 100 all closed at record highs on Friday. It's happening while we continue with this war in the Middle East and while energy prices are higher. Where do you think about what we've come up with just in terms of all of this while we're also in the middle of earnings season?
Well, first, good morning, Becky. Let me say that I don't think the drama surrounding Jay Powell is over. I understand that Tillis will let Warsh go, but I haven't read anything that says that Powell accepts what Trump has done, stopping the investigation from the Justice Department, whether that's sufficient for him to leave his position, and that's very important. We all know that he won't be chairman, and that's okay, but we know he has 2 more years that he could serve if he wants. And at that last meeting, he seemed to make it clear, unless I am exonerated, completely exonerated, I will stay on as board member. And he will be the second most powerful person there after Warsh in that room. So
The criminal charges are dropped. Now it's just the IG, the Inspector General, is going to look at whether there's cost overruns. This is exactly what. And a lot of people think Powell's like.
There was a question of permanent. He said exoneration. Now I don't know whether Powell accepts that.
I think he wants out. I think he wants to get as far away as he can from all this. He wants to go back and be a normal person again, not have all this swirling around him. I don't think he wants to be a thorn in the side like a gadfly, but
even if he stayed, I don't know that he would try and kick things up and be a dissenter necessarily. I don't see him as somebody who's an activist. I see him as somebody who basically has always kind of voted with what he thinks is the right move.
I mean, I understand that. I think that's going to be interesting. I mean, in the Wednesday news conference that we're going to get at 2:30, I think that's probably the most interesting thing that's going to happen. Is it saying they dropped it, and this clears the way. I am satisfied with that position, because remember, it sort of came out of the blue at that last meeting when he said, unless it is dropped and I am exonerated, I intend to stay on as the Fed member. So I think, given that we all know that there's not going to be any change. That he will not be chairman at the most important meeting, which the June meeting is going to be the fascinating meeting. I think his statement about, does he feel sufficiently clear or not? I don't know whether he talked to Tillis or not, saying, yeah, this is good enough for me, and Tillis said, okay, if it's good enough for you, I'll go on. I mean, that certainly is one thing that's going on.
Who knows? You might be right. He could be totally vindictive and pissed off and everything else.
But even if he stayed, do you see it changing the course of the FOMC voting on rates?
Well, I mean, if don't forget, him staying denies Trump another one of his picks. Right. If he really wants to change the course of the Fed, he needs as many picks as possible. And so I think him staying is very significant in terms of changing the direction of the Fed post Warsh. Because,
do you
you know,
think-
I mean, outside of Warsh, you know, Mirren is leaving, which I actually think, I like Mirren. I wish he would stay, but he has said he is leaving. So where are the other allies that Trump has for aggressively lowering rates?
Do you think that Warsh is going to try and lower rates at the first meeting that go around?
No, I'm not sure. I think he's going to wait and see. I think, you know, we're all going to wait and see. I mean, that's 2 months away, almost. So, you know, what's going to happen in the war? What's going to happen to oil? What's going to happen in prices? You know, he may try. I don't know, you know, how Trump will react, but I think he needs as many allies as possible. And the only way to get an ally is for Powell to leave 2 years before the end of his term and Trump getting another appointment. So I think that is an important development going on.
Jerry, let's just talk. Oh, go ahead. I'm sorry.
Yeah, I mean, outside of that, listen, you know, I think basically the market said we can live with $90 oil. You know, we're energy self-sufficient. We're less affected than anyone else. Earnings are coming in great. War expenditures will be up. Well, we know that's an extra stimulus from the fiscal side that's coming on. Monetary policy, you know, I'm looking at money supply and credit seems to be getting easier. I see an expansion of that. So, you know, and AI is, you know, I mean, even with the war, AI is now considered to be war-linked in the sense of, well, you know, who's going to generate the drones and all the technology that is going to fight our 21st century wars. AI might be even more important than we thought 6 months ago. So, you know, I don't see anything stopping this market going forward, you know, except, you know, hostilities coming on and oil spiking to 140 or 150.
Okay, that's what I was going to ask, because even with oil at these prices, earnings are coming in strong, and the market's sitting at new highs or right around new highs. I mean, that tells you that if hostilities calm down, there's probably more behind that, right?
Oh, yeah. I mean, if there is I mean, I don't know, you know, we've got news that, I mean, if Trump accepts that, all right, we'll open the strait and talk about, you know, energy, that would be a big positive for the market. I mean, you know, because that is restricting, you know, 10 million plus barrels a day of oil. It affects, you know, Europe in particular, Asia, much more than it affects us. But their demands, of course, we live in a global economy, will you know, redound to our benefit if they get the oil that they need. So yeah, if Trump accepts that proposal, that would be a big positive for the market.
Okay, Professor Siegel, thank you. Enjoy talking to you.
Thank you, Becky.
Coming up, stocks on the move, including why shares of Domino's are under pressure. Dom Chu joins us in just a moment, and we're also watching shares of NVIDIA this morning, closing at a record on Friday for the first time since October. The company's market cap sitting above $5 trillion with a T. Squawk Box coming right back after this. Welcome back to Squawk Box. I want to get over to Dom Chu. He's got a look this morning at some pre-market movers, including, for those of us who like pizza.
And that's his handle.
I know.
He is the domino.
I know. We got to talk about this situation.
You are the domino.
I am, and people actually get confused with me. People actually tweet at me sometimes thinking I am Domino's Pizza, but I'm not really Domino's Pizza, but you can kind of understand the reason why the name kind of sounds familiar. Anyway, let's start off with shares of Domino's Pizza. To Andrew, Joe, and Becky's point here, the quick service pizza chain is shedding just about 3.75% right now this morning after a miss pretty much across the board, weighed down by weaker U.S. sales figures. Sales at existing locations in the U.S. grew just about 0.9%. Analysts had expected a more than 2% so-called same-store growth rate. Domino's did approve a $1 billion share repurchase program, but on balance, you can see a nearly 4% decline for Domino's Pizza shares. Verizon is another earnings mover this morning. You can see the telecom giant is jumping just about almost 4% this morning. Despite a more mixed quarter, Verizon gave some profit guidance that was stronger than expected as consumer churn, or the number of customers that's leaving its service, declined by 5 basis points sequentially quarter over quarter. It also guided postpaid phone net additions to be in the kind of top half of the 750,000 to 1 million range, which was its previous guidance. So Verizon shares up by nearly 4%. And we'll round things out with shares of Qualcomm. That stock is surging right now to the tune of almost 14%, as a report circulates on social media that the Apple supplier has partnered with OpenAI to make processors for a smartphone. Now, CNBC has reached out to Qualcomm for comment on that. The stock had its best day in more than a year on Friday, looking back at back-to-back days of double-digit gains. So Qualcomm shares up 14% as of late. Massive move higher, guys. I'll send things, Andrew, back over to you.
Thank you, Dom.
You
Want to
got
let
it.
everybody knows the rules.
Coming up, a proposed billionaire tax in California could be getting closer to making it on the ballot. That story. Squawk Box.
Berkshire Hathaway CEO Greg Abel will be taking center stage in Omaha, Nebraska this coming Saturday, May 2nd. We will be there as he faces shareholders for the first time as CEO, taking questions as Warren Buffett and Charlie Munger did for decades. If you're a Berkshire shareholder and have a question for Abel, you can send it to berkshirequestions@cnbc.com. And then you can join us as we bring you the meeting live. We'll be streaming the whole thing for you only on cnbc.com.
Potential milestone for supporters of a proposed billionaire tax in California. Wall Street Journal report now saying that backers believe they've collected enough signatures to get the one-time, what is a 5% levy on statewide ballots in November. The report says proponents have gathered more than 1.5 million signatures. That is well over the required 875,000, with what they believe is more than enough margin to account for invalid signatures. Now, supporters say the tax is needed to cover healthcare funding shortfalls created by President Trump's 2025 tax and spending law. California Governor Gavin Newsom has come out against that tax, warning it could spark an exodus of affluent residents. And there's always been a question of if it gets on the ballot, therefore, would it get voted upon favorably? That's always been, for those people who've been against it, the scare. We'll see where it lands. Now, I'll separately say, because we keep talking about different wealth taxes and the like, I don't know what we think of this pied-à-terre tax, but there was a fascinating piece in the New York Times over the weekend that looked at the pied-à-terre tax that was put in effect in London, interestingly, and the damage it has done to the real estate environment there. That not just the impact at the very high end, but at the very high end, there's this trickle-down effect, and they go through it actually at great length. And there's the possibility that Brexit played a role in it. But if you look at real estate prices in London since that pied-à-terre tax came into effect, it has had a demonstrable downward effect. And a whole bunch of people I know were passing that around, some chat groups over the weekend. That's worth looking at.
And during the last government shutdown, the prior one, which focused on whether the federal government funds are used to cover illegal immigrants. The way that it's done in California, everybody's covered by Medi-Cal, which is the California version of Medicaid. Everybody, right to the grave. And they don't use direct federal funds, but the way they do it, it's money's fungible, so they use other state funds to cover that. That basically is reimbursed by federal funds. So now they're asking for even, they're saying we need the billionaire tax to continue to cover basically everyone with health insurance. So I don't see how that, if you look at it closely, it's like, what are you doing? Covering transgender for illegal homeless people. Transgender for illegal unhoused. Coming up, a conversation with the United States Attorney for the Southern District of New York, former SEC Chair Jake Clayton. Next to me at the dinner, we'll talk a little bit about everything when Spark Box comes right back. Joining us now, Jay Clayton, United States Attorney for the Southern District of New York, and former SEC Chairman. My date to the Correspondents Association dinner, but like so many people, it's just a meet and greet. People are everywhere, and you, after I got on your hotspot, you left me, and I had no Wi-Fi initially, and then it was a couple minutes later when everything happened. So I talked to you later in the evening. You can recount what happened. You went to a place where there were important people, and you were swept away with them.
I was swept up with a number of the people because I was standing out.
Well, you would have been swept away anyway. You're Southern District. You're an important person. I mean, they left me for they're not getting me out of there. But
it's the office, not the man.
it's the office, not the man. But you went to a secret, undisclosed location with everybody else.
Yeah. But let me say something that I think we were there,
Right.
And I've seen the reporting. We all got caught up. I want to make two things clear. They've been reported, but I think first is the response of law enforcement, and the president has championed the response of law enforcement. But think about this: obviously securing the president and the first lady, the cabinet members, all the other people there. That they did that. They neutralized this person without a single, let's just call it civilian, being harmed. That is a remarkable exercise when you think about it. Everyone's talking about how crowded it was and the like, but I'm trying to, there'll be experts, but I kind of looked at the tape and looked, in less than a minute, or around a minute from the time first noticed to being neutralized, maybe we'll find a little longer, a little less, but not a single person got hurt. And with all that response, all of those people, heavily armed and everything, to me that was truly remarkable. You had, they did an amazing job. The second thing I want to say is, I was close enough when I got swept up to see the President of the United States under this kind of personal pressure and the pressure of the nation. And the American people would be so proud. What are the things that are going through a president's mind in times like this? We don't want our way of life altered. It's kind of paramount, right? I mean, this was an event to celebrate the First Amendment, the rights of all Americans to get together in the public square, exchange ideas, and to be protected in doing that. And this was clearly jeopardizing that, jeopardizing the ability of all these sport people to get together. I mean, think about the conversations that were going on in that room, and all people exchanging ideas, people of different stripes and the like. And the president was like, we can't alter our way of life. And he's thinking about the safety of himself, safety of his cabinet, safety of the First Lady, continuity of government. And at the end of the day, back to where I started, the safety of the people in the room. And with all of that, it was like, okay, we really want the show to go on. We really want to show that we can't be cowed.
He was on his way back in his mind, and we kept hearing that he wanted to come back and was on, but it was a crime scene. It didn't seem like it was.
Joe, it's all of those things, but his commitment to the First Amendment, to not letting our way of life be changed by people,
right,
was so palpable, so clear. At the end of the day, it was if it was only the president's safety, he would have gotten back up on that stage, but it was everybody else.
Yeah, and I don't remember what I think it happened at 8:30. I don't think we left till after 10.
Yeah.
So we were waiting, fully thinking the show he's coming back. Wait a second, he's being people are saying that it's there was a guy on the floor. At that point, we thought that they were calling it a body.
And this was real.
It was not.
But there was never panic.
No.
Like, we can go back through history of events that are congested with crowds of that size.
2,600 people.
Crowds of that size where panic ensues, concerts and the like.
Stampede. Yeah,
and
scary.
So the Secret Service gets all of their, protected people away without causing any kind of panic like that. Truly, truly remarkable.
It was, and they knew where every single.
They knew where
They had a
people were.
seating chart where every single, and they went on over the top of tables to find people and take them out. And it was also a measured response later in the evening from the president about the kind of speech he had planned on giving and the kind of speech that he would give if he does have a chance next time. Because we were all together there.
But here's a time of immense pressure.
Yep.
You know your life's under threat, and you have the most, and you can agree or disagree with policy. You have the most transparent president of the United States in my lifetime getting up there and saying exactly what was going through his mind, exactly what he was thinking, how decisions were made, and engaging with the American people. I thought that was, that's another decision he made. He said, I'm going to talk to the American people. I thought that was incredibly, incredibly powerful.
Okay. We talked about the 60 Minutes interview. I don't know whether you saw that as well. There has been I can remember times where the name of the perpetrator wouldn't even be released, so there would be no publicity associated with it, so people wouldn't use that as a motivating factor. Also, the ravings of a lunatic, is that normal to read and to call them accusations or alleged and to read that? I thought that was beyond the pale yesterday.
I think that we all need to take a step back. I need to take a step back. Everybody in the media needs to take a step back and say, are we amplifying hate and fringe elements in
You really, you don't know the answer to that?
we are.
Yeah.
People are.
I know.
But let me tie this to a recent event. I mean, this was horrible. Amplifying somebody like this's message, just stupid. Let's just call it what it is, stupid. Okay. We had a case in the Justice Department last week, the Southern Poverty Law Center. The case, at bottom, and these are allegations, but at bottom, the allegations are that this organization was creating hate in order to expand their mission of combating hate. If that's going on, and it is, it's going on in America, it's going on through organizations like that, it's also going on with foreign actors funding these types of organizations because they want us to fight with each other. So everybody needs to take a step back and say, who is causing me to have these emotions? And are we creating an environment where those emotions are causing us to do things that are harmful to the American public?
I want to switch gears for a second to Jay Powell, if I could, for a second, because I'm curious where you land on this. So it appears that case has ended as of Friday, but there's still the question mark about whether Jay Powell is going to remain on the board of the Federal Reserve for the next 2 years, which he's eligible to do if he decides to. And he appears to have suggested, at least previously, that it wasn't just the end of the case that would make him step down, but a sense that he was exonerated. And there's two elements to this that I want to ask you about. One is Puro effectively said, look, if there's new evidence that comes or if there's a reason that warrants it, we could come back and bring this case again. So that therefore sort of leaves on the table the possibility that he's not exonerated and this is not over, in which case maybe he would stay in this role. And then the second, which is a legal question, is whether you think that Puro should appeal the subpoena, even the subpoena issue in the case, even if she doesn't plan to bring the case, but for legal reasons, for precedent, whether she needs to appeal the subpoena issue in the case that the judge ruled against.
Okay.
So those are two sort of, one's a legal one, one's a sort of philosophical, maybe they're combined.
I got you. Let me add something to the context.
Okay.
That's important. You have an inspector general now inserted into the mix. Inspector General Horowitz, who everyone respects, who's going to get to the bottom of the issue, which is
Right.
why are these costs?
He was doing that from the beginning, though.
No, but it's now reporting to Congress, focusing on it, exigent that he does his job, and we figure out whether there are cost overruns. So that's an important part of the context. Jeanine Pirro, terrific person. Look at the job she has done in Washington. I mean, crime gone. She was on the crime scene last night, taking charge, filing federal charges. Unbelievable. I have tremendous respect for her. She's going to handle this in the right way. The question, the narrow legal question you ask, is not whether they're going to enforce the subpoenas, which she has addressed. It's a question of whether the judge's basis for his ruling is one that should stand.
Right, but therefore the question becomes, do you believe that she needs to continue the appeal process over that, even if she is not planning to pursue the case?
That happens because you don't want a precedent that you think is incorrect out there, particularly on these types of things. I am not as familiar with it as she is, or as the main justice folks are. I'll let them make that decision.
Jay, back to the Southern Poverty Law Center. You heard the their defense, is there any possible way that to get people inside these hate groups, that you're paying informants for information so that you're able to fight the hate better? The sums that we're talking about that were funneled to these organizations, is it possible that was a legitimate use of funds to try to get inside the hate? Because that's what they immediately say, that defenders of what we're talking about here. Is that possible?
Well, let me say there are allegations. They're going to get that proved out in court. A grand jury returned this. I think it's appropriate for me to take a little bit of a step back and put this in context. The amount, if I'm asked to authorize the spending of money on informants or this type of exercise, the rigor that we go through and the audit trail and the approvals all up through the system as to whether that is the right thing to do, nothing like that was happening. Instead, it's actually the other way around, setting up shell corporations to hide this. If you read the indictment spells out clearly that those corporations made statements to the bank that the indictment alleges were not true. That's not why those shell corporations.
But do you believe that do you believe they were informants or not?
But I believe. Look, if you read just because you're an informant doesn't mean you're not a whole lot of other things. Okay, that's what is clearly alleged in the indictment.
No, I read the indictment.
You're giving people money to do a whole bunch of stuff.
I understand that. The question is whether you genuinely believe in your heart that the people at the Southern District, at the Southern Property Center, actually are trying to want the violence to be incited, or whether they actually are trying to get informants and then are effectively lying around the edges.
Of course,
to
that's what
figure
we're
it out.
saying. But people are saying that they are ginning up the hate. Now, that's why I'm at. That was why I asked him. You don't have to need to re-ask it. That is the question. Do you believe that they're doing this legitimately, to get an informant in there, or are they ginning up their own business to try to tackle hate?
I am going to take a step back from this case. I'm going to let.
Because I really believe they are.
But let me say this: I absolutely believe, and I believe to a certainty, that there are many groups who do exactly that.
That's what I mean.
That they gin up hate, gin up distrust, gin up controversy, in order to raise money, to then say they're doing something about it, and that's disgusting.
So I guess the answer is yes. Do you? You don't.
I don't know. I mean, it just seems so antithetical to what any of these places should be about.
Andrew, follow the money, follow the incentives.
And I'm a big follow the money kind of guy.
You
The
are.
question is, the question is, what is the money being used for informants in a genuine way or not a genuine way? And that's, I think, going to be very hard.
There are times I admire your cynicism and times when I wish you had more cynicism. You know what I mean?
Throw some cynicism at this one.
Jay, let me ask you about the OpenAI trial that's starting today, that federal trial. What should we watch for this? What do you anticipate? Walk us through the legal expectations, what this is going to mean.
I think there are two things going on here. One I will call civilian to civilian. Okay, was Musk wronged in the way he was enticed to support and provide money to the organization? And then another one is the charitable issue. This was an entity that was started for a charitable purpose. We have the state of Delaware, the state of California involved here. The judge has addressed that. That hasn't really been talked about that much. But when can a charity switch to being a for-profit entity, and how does that take place, and who are you supposed to protect when that takes place? Is the public getting a benefit here? And who determines whether the public benefit is appropriate, enough, too little, and the like in this type of situation? That's a big issue going forward. I mean, going back to the Southern Poverty Law Center case, one of the disturbing things for me, and should be disturbing for the public, is we're subsidizing that in the tax breaks that these entities receive. These 501c3 entities raise more money because the American people are willing to give them a tax break.
So do you, just on that point, do you think 501c3 Do you think all charities should be investigated on this?
I don't
Do you
think
we should
all.
take that?
I don't think all charities should be investigated, but I think that we need to look at the regulations, the reporting, the representations that you make. And I know the Treasury is doing that. You know, people should tell us. You know, believe it or not, there's a Treasury regulation
Yeah.
that does allow you to not report as payment to somebody, payments to informants. But those informants, and let's just say they're genuine informants, they still have to record that on their taxes. I don't.
They recorded as a
And what
informant
were they
payment?
doing it? Were they?
Not that I've seen.
Okay. Yeah, but it'd be very interesting to see.
Right? No. Andrew, if I say, you know what, Andrew, come talk to people, give me information. Here's a sum of money. You're going to report that to the IRS.
Right. And you're saying that those informants were not.
I don't. I have no indicia that they did.
So we'll end on. Can we end on?
Did the one guy record on his taxes $6,000 taking the fall?
Yeah, right, exactly. So we'll end on prediction markets, because every week something else I see it, and it just seems like the whole thing is just out of control. It's just you're never going to be able to police inside information. You're an SEC guy.
We do it really well around securities.
What's going to happen in this whole industry? Is it okay what's happening? Isn't there going to be?
No, I don't think the American public thinks it's okay that somebody takes a government secret and trades on that. Now, you know,
It's just rife with the opportunity to know something that you shouldn't know and to make lots of money on it.
yes, it is.
And I don't see it covers so many different things. You've got to, with stocks or options or whatever, futures. It's a really narrow little universe to have to look at. You have to look at virtually everything in the world and decide whether somebody knew something to be able to have made this.
One of the key things in securities and commodities is the information that you're using. Is it information that you have a duty to keep confidential and not profit on? And at bottom, at the nub of it, that's where we need to start looking at these things.
Because the horses before the cart or whatever it is, they're out there. We're doing it, and no one really thought this through.
But let's start with that. Does the person have a duty to keep it confidential?
I had a bet on a couple of words you were going to say, and I'm trying to get you to say it. It would have had a huge payoff if, like the president's interview. There were people betting on whether he'd say Iran wants the deal, or whether he'd say Barack Hussein Obama. Or whatever. I mean, that's crazy that we're betting on things like this, isn't it?
I would agree with you, Joe.
Do you think that there should be rules in place, very specific rules in place? Apparently, the president, by the way, not only said that he is not in favor of this whole world, which is surprising to me because I think people thought that given his son's involvement in this, that it was being blessed. He was basically saying, I don't like any of it. But apparently, they told White House official members not to be betting on what they're hearing. The question is whether you think that there should be a broader restriction on all government employees. I don't know what you think where do you think the line should be?
I clearly think national secrets, the types of things in the case that we charged related to the raid on Venezuela, those have to be protected. You can't.
Well, that's just top secret clearance.
Top secret, right? You
That
can't
should never be
signal
out there.
to the market.
Right, I guess I'm asking a different question. Do you think there should be a broad ban that says if you're a government official of some sort of a politically exposed person, I don't know what you want to
In
classify
the
them
White House,
as,
in Congress, wherever
that
you may be.
having a Polymarket or Kalshi account or what have you is verboten?
Yeah, I think we should definitely consider that question, whether it's an outright ban or limitations. But I'm going to put my private sector hat on. If I were running, or a member of a financial institution's management, I might just say, you know what, until this gets sorted out.
They're going to do it themselves. But
Yeah,
we've talked about this for a very long time. I've always thought,
Yeah.
in the same way that you might argue Polymarket and Kalshi should say, this is a politically exposed class of people, and we're just banning them either from our platform completely or from certain types of trades. You could do that. But I've always thought, we talked about it when you ran the SEC, that if you were a broker, if you're Morgan Stanley, Goldman Sachs, Merrill Lynch, whatever it is, that you would say, my client is a politically exposed person. There's a certain policy for how these people are going to trade, and we're going to take it upon ourselves to do it. They don't.
Look, you know where I am as a citizen on this. which is members of Congress, people in sensitive government positions, they should actually have a very limited window every year, with exceptions for hardship, where they can trade.
Right.
Other than that, be fixed, be exposed to the American economy, join with your fellow Americans. Day trading when you're in one of those positions makes no sense.
We gotta go. Jay, thank you. Appreciate it.
Yeah.
Thanks for everything. Squawk Box will be right back.
Welcome back, everybody. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and among today's top stories, talks between the United States and Iran stalling as a second face-to-face in Pakistan appears less and less likely. Uncertainty keeping energy prices elevated right now. Oil right now, WTI, up at 95.08. That's actually down from where we were earlier. Brent is higher as well, up by about 1%, but it's below the 107 that we had seen earlier today as well, 106.45 a barrel. In a statement released this morning, United Airlines CEO Scott Kirby said that he approached American Airlines about a merger, calling it, quote, a big, bold vision. He believed regulators would approve. American declined, with CEO Robert Isom arguing that it would harm customers and be anti-competitive. And Republican Senator Tom Tillis says that he is prepared to lift his block on Kevin Warsh. Tillis told Meet the Press that he thinks Warsh will be, in his words, a great Fed chair. Results out from Amazon about an hour ago.
Verizon.
Oh, did I say, where did I come up with Amazon? I made that up.
Oh.
Came up with Verizon results about an hour ago. Those earnings came in at $1.28 a share. That is better than expected. Revenue came in at $34.4 billion. That slightly missed the $34.8 billion the street was expecting. Postpaid phone ads of 55,000 beat expectations. Verizon raising its earnings guidance to $4.95 to $4.99. The street was looking for $4.90. The company also sees full-year postpaid ads in the upper half of the 750,000 to 1 million range, and that stock is up by about 3.1%.
When you're reading, it's very easy to get ahead about what you're going to say next, and you don't even remember what the thing that you.
Well, the teleprompter is not really. You're not supposed to read it verbatim. It's supposed to be the guide.
Right,
for what
supposed to
you're
be the
reading.
guide too.
It's not. You don't.
I know I've called it the Iraq War a couple of times.
Yeah.
Because we've said it.
Yeah.
It's not. Let's check the futures this morning, down 30 now. That's really not that bad for, no progress over the weekend, and really it doesn't seem like there's an Axios piece. I don't know, maybe Santoli knows something. Let's get to Mike Santoli at the NYSE. Hey Mike, once again, it's kind of complacency about, there's a war going on, it seems, and the strait is still closed.
For sure, Joe, and I've been asking this for weeks. Is it complacency or is it composure? Or is the market trying to kind of localize the parts of the tape that are kind of exposed to ongoing lack of progress there and just take refuge in some of the more high conviction themes like technology? Here's what the S&P 500 index fund looks like. Spent most of last week kind of digesting a huge 3-week sprint to the upside. You see we've broken out pretty decisively above what had been a ceiling to this market around 7,000. That's basically multiplied by 10 to get the index level from the ETF here. One of the reasons, even though it's kind of come far in a short period of time, one of the reasons that maybe mitigated the idea that we're super overbought is really 3.5% where we were above where we were 6 months ago. So the very last couple trading days of October, we traded at 69.20. We're 3.5% above that. So you see, if we fall below that line, maybe then we have to question whether this was a big head fake to the upside. Otherwise, so far, we're hanging in there. Take a look here when I mentioned that the market has kind of taken refuge in mega cap tech again. That's the NASDAQ 100. That's right here. This is a 6-month look. That's the equal weighted S&P 500. Everybody was celebrating the broadening of the market, right? Equal weight doing better than the mega cap tech, the Mag 7. Well, that's gone. Mag 7 is now, or virtually Mag 7, NASDAQ 100, has caught up to the median stock right now. So it's the AI theme that's sort of regained control of this market. Most evident in the semiconductor index. Everybody's been talking about how wild it is, going for, I guess, 19 straight up days. It is now the semiconductor ETF, the Philadelphia Semiconductor Index, is now 50% above its 200-day moving average. And there's a lot of talk out there. It's the biggest gap between the 200-day average since the year 2000, at the peak of the tech bubble. Yes, that's true. Since then, but at the peak back then, it was double the 200-day moving average. So who's to say if this is an extreme or we're on our way to further extremes? Don't be surprised if you get some kind of nasty pullback here, but it wouldn't change the trend very soon, guys.
Wow, that's pretty amazing. Yeah, it's up on a stilt, but it could get a lot stiltier, or it has in the past, I guess. Okay. All right. Thanks, Mike.
Yep.
Okay, we got a lot more coming up. Huge week ahead for corporate earnings, including 5 Mag 7 names. We're going to talk markets after the break with a guest who sees tech leading the way. Don't go anywhere. Squawk Box coming right back after this. Welcome back to Squawk Box. Deal news: Shell buying Canadian energy company Arc Resources. The price tag $13.6 billion. It is a cash and stock deal, and Shell saying that the deal is expected to generate double-digit returns for the company and bolster long-term cash flow. Arc is an oil and gas producer that operates in Canada's Montney Shale Basin. Joining us right now with some insights on the markets is Alicia Levine. She's the head of investment strategy of equities at BNY Mellon Wealth. Good morning to you. So we have all these earnings coming up, but the big question that I have is we have the situation in the Middle East and the oil shock, or I don't know if we're even calling it a shock anymore, and the equity markets, which have almost diverged completely, and whether that makes sense to you.
So the equity markets moved on a while ago,
Right.
as we know. We had a rapid recovery. It makes sense in that the key factor here is the oil price, and the curve is in backwardation, suggesting that the market is pricing in a shock akin to a natural disaster. So bad things happen in the short term, and then over time, things normalize and move out.
You think that's what the oil prices are suggesting?
I think the oil prices are suggesting that, and so you see that in long-term inflation expectations as well, and so it shows up in pricing everywhere in markets. So with that, equity markets have resumed doing what they always do, which is
Right, but
key off of multiples and earnings.
So I was with two guys who are brand names on Wall Street on Saturday. One of whom said to me, Andrew, in 6 weeks from now, we're all going to feel it. It's going to be in the economy, and it's going to be bad, and this whole divergence makes no sense. And another guy who was like, no. It's the AI boom. The oil thing doesn't even matter because AI and tech are so strong, you almost just need to put blinders on and look away. But his rationale wasn't like that the oil thing wasn't going to have an impact. It was just that the other part of the market is so strong that it doesn't matter.
So I would agree with your second dinner guest.
Okay.
Meaning that the AI part is so strong, the investment is so strong, the growth is so strong, and the U.S. economy is simply less exposed to the detrimental effects of higher oil prices. And by the way, we're exporting now higher as well. So we're getting a little bit back in growth just from exporting. So I would say it's no secret that the economy is going to feel higher oil prices in inflation in the next few months. That is what the Fed is saying.
Right.
We know that. We know that.
But if you're right.
But the growth is so spectacular on the other side of the equation, which is essentially where the equity market is levered to, and that's why the equity market is moving higher.
Well, and you're right. The S&P 500 is completely levered to it. If you were buying stocks right now, though, would you just be buying the Mag 7? Would you be buying the S&P 500? Would you buy an index, or would you buy some AI index? Or do you think that that's just
So I think
crazy?
you have to be broadly exposed because the growth is everywhere. I would still
But you
own
can't
energy.
really be broadly exposed with some of these index funds. It's not really broad exposure
But
anymore.
you're being exposed to the growth, and
Okay.
that's where the growth is. That's where the earnings growth is. I mean, right now, just if you just take the broad IT sector, the technology sector, earnings growth is going to be about 30% this year. It's a little bit about double what the rest of the S&P is going to be. That's where you have to be. You have to be where the growth is. Now, one day this will be an overinvestment, but it's not here yet, and we're far from that.
You remember when the internet came, first all the internet stocks went up. 5 years later, Walmart was going to go up because of using the internet, or take your pick.
Mm-hmm.
Everybody benefited from this unbelievable change in the way we do things. How far off is that, where we don't talk about AI with the build out, people benefiting from selling chips, but where everyday companies are suddenly doing better because of when is that?
So I think we're feeling it now. I think you're seeing.
What, first inning or something?
I'd say something like the first or second inning. I can tell you that all the financial companies, for instance, are using AI to
Remember
achieve productivity.
B2B, all that stuff with the remember how long it took?
It took a long
I mean,
time.
start with Netscape.
But you see, if you just look at the results from some of the LLMs and the ramp in their revenue line, it's quite extraordinary because compute is going everywhere and it's filtering everywhere. I'd expect to see it in healthcare right away. We're seeing it in financial services. Any sector that is data dependent is using it right now and building it out now, and all employees are using it.
And then there go the jobs. No more agents. There will be no such thing. Will there still be secret agents?
You know, when I get stuck in one of those phone calls where you're trying to get to a real person, I used to say, agent, I want to talk to an agent.
Yeah.
I realize I can't say that because I'm asking basically to talk to an AI agent. Customer service rep, I want to talk to a
Right.
person?
They'll all be gone eventually, I think.
Thank you for coming in.
Thank
Okay.
you.
Coming up, we're going to talk AI. More, I guess. Iran and more with New Jersey Congressman Josh Gottheimer. That's next. And later, a preview of this week's FOMC meeting with former Fed Vice Chair Roger Ferguson. Squawk Box is coming right back.
Tech titans facing off in court starting today. Elon Musk is suing Sam Altman over OpenAI's shift from a nonprofit to a for-profit. Musk claiming that he was misled, while OpenAI has grown into a near $1 trillion company that's eyeing a stock listing. As all that's happening, an executive order from the Trump administration meant to rein in AI legislation coming from the states missed its March deadline. Lawmakers continue to navigate the complexities of AI regulation and policy. And joining us right now to talk more about it is New Jersey Congressman Josh Gottheimer. He is the co-chair of the House Democratic Commission on AI and the Innovation Economy. And Congressman, thank you for being with us today.
Thanks for having me, Becky.
The executive order was supposed to prevent the states from having all their own rules and making kind of a mess just in terms of what AI companies are supposed to do looking at regulation. It was supposed to replace it with regulation coming from the federal government, and that is where we don't have anything just yet.
No, obviously we're not there yet. We saw the White House put out what I call a leaflet with a couple pages of their ideas of what direction AI should move in and what the guardrails should look like. It covered a couple things, but left a lot of question marks So a group of us, led by me and Valerie Fouché and Ted Lieu in the Congress, are focused on a commission of driving toward a framework to address many of the issues. And our goal with this AI framework is to put something out hopefully this summer of where we need to go as a Congress, and obviously so address some of the issues that I think have been left out of this discussion but have to be addressed.
What are those issues?
I mean, everything from workforce issues to, you were mentioning agents before the break, and what should the agent policy be? Who do the agents represent? Education issues, things related obviously to preemption more broadly, energy questions, you name it, the chip policy, national security issues, what we saw with Mythos in the last couple of weeks. How should this work? What should those guardrails look like? And what direction do we need to move in? Obviously, huge opportunity, Becky, in this space. A lot of excitement on healthcare and education, and changing how government should work more efficiently. Lots of great things for us to lead in as a country, and I think it's critical that we do. But obviously, we need to do it in a smart way, and it just can't be a free-for-all. We need to have proper guardrails in place to protect people, to think through some of these workforce issues, and to train people properly. And those are the kind of things we're planning to address, and the process we're going through right now, meeting with stakeholders across the board.
Congressman, one of the problems with any sort of legislation or regulation that comes from Washington is that it doesn't keep up with the pace of technological innovation. That's been the case for decades and decades. This innovation is happening faster than any previous technological revolution we've ever seen. So what's the government doing differently to feel like you are moving at that same pace and can keep up with this?
Well, you're right that it's impossible. I mean, there's a rev every couple of weeks in this space, right? Something new happening and change, and that's what makes it exciting. But there should be certain rules of the road, whether it's about energy policy or water policy or protecting our kids. You know, there's certain basic things we should set out, certain transparency we should have in place. Should there be some sort of centralized government agency that's set up to be able to review the latest platform and make sure that the latest model that comes out is safe and secure? We saw again with Mythos and others that are coming that they admit there's great offensive opportunities with cybersecurity, but of course that leaves us with certain vulnerabilities too. So the question there is, are we prepared? Are we ready? What impact will this have on the American people, on our critical infrastructure? These are the types of things we have to have a system in place for. It just can't be, again, a free-for-all. It's got to be done smart. And listen, some of my colleagues think we should try to put it back in a box. That's ridiculous and impossible. The question is, how do we seize this opportunity and do it in a smart and right way?
But I mean, there's not even federal legislation that's been passed to take on like child safety on the internet when it comes to social media companies and beyond. Do you think that this is something, like why is Congress going to get faster and more willing to work together on an issue like this when you can't even get after the last revolution?
Well, as you know, there's the Take It Down Act, which is one step that's law now to take down something that's obviously offensive and concerning. But you're right. I mean, like the deep fake pieces and other things, we have to move faster. But part of what I'm hoping we drive toward is with this framework, and this is really our strategy of what needs to happen, is that we think these things through before there is a crisis, before something happens where we're playing defense and then we overreact or do the wrong thing. So you're right, Becky, to be concerned that we're certainly not moving fast, but the answer is not to do anything as a result. The answer is actually to put something together and say, here's the direction we need to move in, and you see what's happening right now and the concerns and impact it can have on society if we don't think ahead. And so I'm really encouraging my colleagues on both sides, and we're doing a lot of this, to sit down and figure out what we need to do. It will start with this framework. It'll start with some legislative recommendations. And my hope is either in this Congress or the next Congress that we drive fast to get something done.
I guess when you describe what you've already heard from some of your colleagues, trying to get 535 people together to act on something is pretty difficult. You've got, admittedly, people who say they just want to put this back in the box. That's not going to happen. How closely do you work with industry on this? Where are the areas where you're finding common consensus and think that you can get something passed?
Well, that's a great question. We're working with everybody, whether that's industry or civil society, nonprofits, academics, of course, listening to other members of Congress. Everyone's been brought to the table in this process. And I think what's interesting, including from industry, and you're seeing a lot of that. I mean, Sam Altman put something out recently. You're seeing a lot of consensus that we have to do something, that we have to have these rules of the road in place, that it just can't be a free-for-all. And that's given that, and it's helped drive our conversations and trying to put together what we think is necessary. Obviously, is this going to be easy? No, nothing in the Congress is easy, but we've been successful in the past at putting together comprehensive legislation that addresses these issues like this, and we're going to have to. We have no choice. And to your point, Becky, which I think is important, is you're not going to be able to prescribe, be prepared for everything, but it's more of a framework for how you address issues as they come. If you have transparency set up, and whether that's out of the Department of Commerce or with something like Casey that's in place right now, we need to make sure that we have some structure in place to review the latest innovation. We need to have certain rules of the road in place about protecting our kids and deepfakes and agent's bill of rights, so people understand, is that agent working for you? We need IP protections. So there's plenty of places that we know there are issues. We know that we have challenges. What are the broad structures that we should put in place to address them for whatever comes at us? It's exciting, very exciting time, but also we got to do this in the right way.
The sense you get from the White House, we just had David Sachs, who was the former White House advisor or czar for AI on Friday. The sense you get from the White House and from industry is that, hey, this is a race that we have to beat the Chinese and others
Absolutely.
at, so we should be moving as quickly as possible. On the one hand, you're worried that Republicans maybe just, damn the torpedoes, full speed ahead. On the other hand, you worry that the Democrats are going to do something to slow us down to the point where it looks like Europe with that. How do you manage those two extremes?
I think that's exactly the way to look at this. I mean, from my perspective, this is the next Cold War. We have to beat China. It's the government of China. It's critically important that we're the leader. And so David's right that we have to do it that way. We also can't throw a bunch of roadblocks in the way to stop innovation. That's why it's got to be smart and done in a way that actually encourages that growth and innovation without the roadblocks, but protects consumers and protects our country, right? This is challenges we've dealt with on other military developments in the past. We can do it in this case as well with this innovation. So yes, I think that's the way to look at this. This is a war we have to win. We have to make sure that we've got all the tools to win it, and that includes making sure we're thinking through all the protections we need to have in place as we innovate. Right? That's the way you do this. You do this in a smart way. What you can't do, and what I'm concerned of some of my colleagues saying, which is, well, we shouldn't do anything at all. We should just let this thing go. And you could imagine what that could do, the impact that could have on our families, on our critical infrastructure, on our jobs.
Congressman Gottheimer, thank you.
Thanks, Becky.
Okay, coming up next, actress Selena Blair, who was diagnosed with MS in 2018, has become a prominent advocate of chronic illness awareness. She shares her story on how she's transformed it into an inspiration. And later, a decision on interest rates expected this week. Former Fed Vice Chair Roger Ferguson is going to join us with a look at what investors can expect. We're coming right back.
episode of our CNBC Cures podcast series, The Path, available today. This episode features my conversation with actress Selma Blair. She's taken the shock of being diagnosed with multiple sclerosis and transformed it into action. She's an advocate not only for MS patients, but also for anyone who's been traveling the difficult path of searching for a diagnosis. For Selma, that journey took decades. The thing that's so amazing to me is you're so well known. You have resources, you have connections, you can reach out and find these things. And you couldn't get this diagnosis.
I was lost. It was a hard thing. I felt very hopeless. I cried a lot from fatigue and fear I would provide for my son. And still, you know, I will always have a lot of empathy for the scared parts of us that are trying to do the right thing by the people we love.
Yeah.
And feeling so awful at the same time.
Selma Blair has relapsing remittent MS, which means that it can flare up over her life and impact her ability to walk and communicate. Thankfully, she's been relapse-free for a while, and she powers through speech difficulties, which are known as dystonia. Selma has an excellent service dog called Scout. You may have seen it in that clip, by her side all the time. The Path is available on YouTube and on our Squawk Pod feed. You should check it out. And she really is somebody who's a huge advocate for anybody who's going through this. MS is not a rare disease, but she really relates to people who are on that rare disease path.
What is this current state of the art treatment? I remember Biogen and others that had to try to. It's never curable, but you can delay the onset of the relapsing remitting form.
Yeah. I have some friends with MS. I don't know enough about it to tell you the truth.
There are some things you can tip it. Obviously not. You can't cure it, but you can manage it much better than.
It's like multiple myeloma in that sense, that you can manage and tamp down a lot of the symptoms that come.
Right.
Yeah.
Still to come, the Fed likely to keep rates on hold this week. What Jay Powell may say about economic conditions, and what presumably is his last meeting. And then on this National Prime Rib Day.
Today?
Apparently it is. Who knew? Love the end cut. I started thinking about it. I saw it on Twitter. I was like, God, I can't get it off my mind. I need to go on one of those things, Sorkin, because I still lust for, you know?
Yeah.
A GLP-1?
Yeah, because I'm thinking about it, so I must need something. Majority Whip Tom, this had nothing to do with Tom, with the Majority Whip, but he's going to be on the House's efforts to pass the Senate's reconciliation bill. Squawk Box will be right back.
Welcome back to Squawk Box. X Energy gaining 27% in its Wall Street debut. That took place on Friday. The company's CEO, Clay Sale, joining us ahead of the first trade and talked about the business.
The key is to find a new technology that makes it easier to build nuclear power plants. That's fundamentally what we do at X Energy, is we make it easy to build nuclear power plants. And we do it with the safest possible technology that is simpler, that is elegant, that is of a size that can be built over and over and over again. And we have the customer backlog to do that.
Trend continuing for X Energy this morning. You can take a look right now. It looks like it would open up about 7% higher just now.
The Fed's two-day policy meeting kicks off tomorrow. Join us now, a former Fed Vice Chairman, Roger Ferguson, now a CNBC contributor. And it's good to see you, as always, Roger. And normally we talk policy and what's likely, to be on the Fed's radar and what they're going to do with monetary policy. But we usually don't talk gossip or innuendo or your opinion about things. But can we do that a little bit today? Do you think?
Absolutely. I love gossiping with just the two of us, nobody watching.
Okay, no one's listening. No one just talk just to me. So do you think that when Jay Powell, when we were talking to Jeremy Siegel about that, when Jay Powell said he wants full exoneration, does dropping the criminal investigation by the Justice Department and moving it to an overall look at cost overruns by the Inspector General, does that qualify for, in his view, enough of an exoneration for him to leave when he's no longer chair, or would he still be mad and take up that position as sort of a thorn in President Trump's side, preventing him from putting someone else there?
Yeah, that's a great question in the mode of gossip. Obviously, no one really knows. He'll tell us maybe this week. But frankly, in the world of, complete, total exoneration, put this behind us, I'm not sure that the move of this investigation from Justice Department someplace else really fully checks the box of putting this behind us. It's important that it not be a criminal investigation, obviously.
Right.
But I'm not sure that if I were sitting in his seat or his advisors, that I would say, let's blow the all clear whistle on this and move forward. The other thing is, we need a Supreme Court approach on Lisa Cook, which also tells us, what the guardrails are. So right. I think there are a number of reasons why, if I was his seat, I might just stay for a little while longer.
Really? Okay, because I was going to ask you, what would Roger Ferguson do? Because some people would be like, I'm out of here. I'm done. It has not been pleasant, I don't think, recently for Chair Powell. And I don't know what he likes to do, but whether it's fishing or laying in the sun or something is looking good. Wouldn't it be for you at this point?
Yes and no. I think there are many great things that he'll be able to do after this. Likes to play golf. He's got grandchildren. He plays the guitar, other things. Lovely wife. On the other hand, he's an institutionalist, and the question of independence is really pretty important. And right now, he's the face and the voice of the independent Fed. And so I think there might be some reasons for him to stay until there's just greater clarity around the rules of the road vis-a-vis independence.
So Roger, what do you think though what do you think that looks like? That's what we were talking to Jay Clayton about earlier, because I had raised the issue that Puro may decide, for example, that she needs to, for precedent purposes, appeal the decision over the subpoena. That's one side of the story. The other is, as long as you have this Inspector General overseeing an ongoing investigation, you also have Puro suggest that there's the possibility that, if either new evidence emerged or there was a reason that would warranted bringing the case again. He's talked about sort of, I don't know if he used the word exoneration, but what do you think it would take, either in front of the scenes, behind the scenes, or elsewhere, for him to decide, I'm stepping off the pedestal?
Not 100% certain, but what I heard, or the way I interpreted what I heard, is a statement of innocence. That's completely putting this aside or away and not leaving it hanging out there. Right now, it's sort of hanging out there, and that's not exactly a resolution. I thought he said phrases like full and complete resolution, and that strikes me as someone saying, we've completed the investigation, we found that there's nothing here, we're not going to raise this again, and we're all just going to move forward. That's not the state of play right now. So I think, what this looks like is some of these authorities, the Inspector General, Hero, the Justice Department, all saying, we've looked at all the data, we've turned over every stone, we have found nothing to merit moving this thing forward, and therefore we are dropping this. That is not the state of play right now.
Roger, when the new Fed or the Wash Fed meets to decide what to do, will $94 or $95 oil, will they say, well, that's not core, we're looking at core, or is core itself hot enough at this point, even if you don't back out, food and energy? Is it hot enough right now to prevent any further rate cuts, especially if you're if you're also trying to shrink the balance sheet at the same time?
Yeah, so look, Joe, I think you've heard me say this many times. I think the core at 3, which is what it is at PC, if I were there, and I think they will agree with this, it's sufficient to sit tight for a period of time. I just don't see how you can maintain credibility around inflation fighting, cutting rates in the face of what has been a sticky 3% core. And by the way, the labor market, the thing that they've been most concerned about, the last statements they made, they wanted to see signs of stability. While the labor market numbers have been quite volatile, if you move through them all and average them out for the first 3 months of this year, I think the economy made something like an average of 60, 65, 70,000 jobs a month, and unemployment is sitting at roughly 4.3%, which in the old days would sort of really sound familiar to something that seemed like full employment. So I think on the dual mandate, they'd say we're roughly at a stable labor market. It's not falling off, low high or low 5, but stable. And on the inflation side of the mandate, a lot more work to be done within a sticky 3%. So I would argue, and I hope they argue, we're going to sit tight for a little while to see how all this plays out.
Okay, good. All right, Roger. Appreciate it. Thank you.
Thank you.
Okay.
Up next, House Majority Whip Tom Emmer talks Iran, the reconciliation bill, and the events that unfolded over the weekend at the White House Correspondents' Dinner. Check out the futures this morning, down, but not by a lot. 45 points down for the Dow. The NASDAQ off by about 24. S&P futures down by 6.5. Squawk Box, we'll be right back.
Welcome back, Squawk. It is a busy week for Congress with the House taking up reconciliation. Joining us right now is House Majority Whip Tom Emmer. It's good to see you. We're all trying to understand where this budget reconciliation issue goes, where you think it really stands right now, and what the permutations of this they might all take, Tom.
Well, good to be with you, Andrew. First off, this all started because we had passed out of the House all 12 appropriations bills, including the DHS, the Department of Homeland Security bill, which has many different parts to it. It was a bicameral, bipartisan, Republicans and Democrats in both the House and the Senate agreed to the bill. It was over in the Senate's jurisdiction, and in the middle of the night, with nobody around, the Senate passed the DHS bill, excluding two pieces of it that relate to Customs and Border Patrol and to the Immigration and Customs Enforcement pieces, and then sent it back to the House. Look, it's not the way we do business, but I think Mick Jagger and the Rolling Stones once said, you don't always get what you want, but sometimes you get what you need. And I think the reconciliation, the budget reconciliation piece that just came over last week is what we need, and we're going to get it passed this weekend.
Well, what's happened here? I'm just looking, this is what Punchbowl wrote on Friday. They say Speaker Mike Johnson twice failed in humiliating fashion to pass an extension of FISA, the controversial intelligence surveillance law, next week. Johnson, the House GOP will see if the third time is the charm. What's happening right now just within the party?
Well, it's a completely different topic, but back to the bill that we're going to have to pass to fund all of the Department of Homeland Security. Unfortunately, Democrats refuse to vote for this stuff. They refuse to put American safety first. Instead, they want to put politics first. So we're going to have to do that with Republican votes. And when it comes to what's happening in the Republican Party, it's a great time to be alive and be in this grand party with all these different points of view. This is the way it works. I mean, we started this at the beginning of this Congress with the most narrow majority in the history of Congress, and we have done more in this Congress than majorities of much larger numbers have ever accomplished. So don't underestimate us, Andrew. I think people do this on a regular basis, and I know you gotta put content out there. Our friends here on the Hill got to put content out there that catch people's eyes and get them talking. We'll just keep boring them to death by succeeding.
Well, let me ask you a different question. Is there any place of overlap between you and the Democrats right now on these issues where you think you could actually pull some votes?
I think there's a lot. I mean, I think there's a lot of Democrats who are still just left of center. They don't agree on all the policy stuff, but they've got a civil war going on the other side of the aisle. You've got these progressives that are challenging any candidate who wants to run for office and govern. They just want anarchy on the far left. And look, we've had our issues on the right. They're dealing with theirs on the left. You still have a large group of people here that understand how important FISA, the Section 702 collection is to our military, to our national security. That's on both sides of the aisle. The question is, are they going to be willing to come out against, they got to stand up and speak out against the radicals in their party, and they got to do the right thing. Hopefully you'll see that this week.
While we have you, the situation in Iran, we keep waiting for some kind of deal to be had. Obviously, Witkoff and Kushner did not go over there. Now there's potentially some plan, Axios has reported, has been put out by the Iranians about something around how the strait will be managed. What do you think is sort of an answer that is acceptable to the American people?
Well, the American people, contrary to the polling that I see, I'm getting all kinds of positive feedback about what our president has done. Finally, someone has addressed the organization, Iran, that has killed more Americans than any terrorist group on the face of the planet. And all previous presidents have done is kick this can down the road. This president is dealing with it. You saw that they have long-range capability, at least to hit Western Europe. And if they can do that, they can certainly take the next step. So he's taking care of a threat to the region, to the world, and to everyone here in this country, to our safety. But I think the red line, and I don't know this to be a fact, but you hear the president talk about it all the time, they will not have a nuclear weapon. So this is about the enriched uranium at this point, and if they're not willing to give it up, it's not going to be done. That will be the key. And I mean, you hear the president talking about you got some reasonable people, you got the rumors floating around. I'm not in the intelligence briefing, so this is not coming from classified information. But the mullahs and the Royal Guard seem to be at odds as to how to resolve this matter. That's an issue that they're going to have to take care of. But the red line, I think, for all of us would be they will never have a nuclear weapon.
Congressman, I didn't get to say hi. I think I saw you from a distance. 2,600 people, that's a lot of people. Take all night just to do that. But I guess my question revolves around some of the comments the president made, that he had planned to deliver a really scathing takedown of the news media. And he said that the events that had transpired, there was such a feeling of congeniality and I don't know, unity, that he said, when we do this again, I would have a much different tone in speech, is what he said. But then he was interviewed on 60 Minutes. And the correspondent decided to read verbatim from the manifesto from this lunatic that tried to get the most incendiary part of this, you know, this individual's, I wouldn't even call them accusations, just the rantings, and just decided to read that. So are we back to another scathing indictment of the press at the next time that he does it again? I could see how he might go back. And this is the new 60 Minutes. This is the Barry Weiss 60 Minutes.
Yeah, his favorite show. Look, Joe, I don't ever expect the press wants him to go back to that. This is a back and forth that he and the press have had ever since he came down the escalator. So I don't expect that to change. I think what he was saying the other night, a couple of things. You saw how calm the president was throughout. He came out after, said he wanted to come back and finish the speech because he doesn't want these lunatics, these anti-American freedom of speech people literally trying to disrupt our lives. He's not going to let them win, which is why he wanted to come right back and finish his speech. And then on the tone of the speech, look, Joe, this president has had more assassination attempts, I think, than any other that we know of. One, he knows that it was divine intervention is the reason that he's here. And I think that experience, because he's had it for all of the people in the room, whether he agrees with them, whether he disagrees with them, whether they like him or they have Trump derangement syndrome, they went through something similar the other night. It was a very traumatic event when you hear multiple shots fired and people scrambling and running and diving under their tables. I think the president was throwing out an olive branch about, look, I feel for you people because I know what this feels like.
Right. I wonder, in your view, will there be another one in 30 days? It's just hard to... He wanted to come back that night, and I think logistically that was going to be impossible. It's a crime scene, and it's would have been hard to carry on, obviously. Is it possible to do it? Will you be back in 30 days if it is going to happen again?
If this is about supporting the First Amendment and freedom of speech, one of the pillars of our free governing society, and the president is willing to do it, I'm willing to support him and be there. I think it'd be great.
Okay. Majority Whip Tom Emmer, it's always good to see you. Thank you.
Thank you, guys.
Okay, up next, stories making headlines, including why Verizon shares are trading higher. Coming right back.
Breaking on Squawk Box this morning, Verizon reporting upbeat guidance on stronger growth in new customers and lower churn. This is the first full quarter under the new CEO, Dan Schulman. United Airlines CEO confirming that he approached American Airlines and outlining the benefits of a merger. However, he says American rejected that idea. And Qualcomm shares popping on reports that it's partnering with OpenAI to create smartphone processing chips.
And I can never say this properly. Mizuho.
Like that's unique about this word.
Thank you. Mizuho taking a more optimistic stance on CrowdStrike while dialing back expectations for Adobe. For CrowdStrike, the analyst moves to outperform from neutral with a price target raised now from $520 or to $520 from $490. In contrast, Adobe downgraded to neutral from buy, with its price target lowered to $270 from $315. And the analyst citing, by the way, growing concerns about competitive pressures, particularly in the small to medium-sized business segments where AI-driven tools have been rapidly gaining a lot of traction.
What do we got? We got about 50 seconds to get a final check on the markets. You can see that we are now red across the board, but nothing too substantial given that the Strait is closed and oil is 95, although it was higher.
And that the talks were on. Oil was at Brent at least was at 107 earlier today. It's back.
Oh, it's back. Yeah, and so was WTI crude. That's an Axios report, although we haven't seen it updated on whether there is. But it's so. Do we have any idea who's in charge and who can speak for the country of Iran at this point? I think that's what the Trump administration is dealing with as well. It says crypto. I got 15 seconds. Steck's doing a dance over there. St. Vitus dance. Anyway, there was Bitcoin down about 77.6. We're going to do this again tomorrow.
Join us then.
Still trying to figure out National Prime Rib Day. Where can I go? Make sure you join us. Squawk on the Street is next.
Good Monday morning. Welcome to Squawk on the Street. I'm David Faber. He is Jim Cramer. And we are live from Post 9 at the New York Stock Exchange. Happy Monday morning, everybody. Carl has this morning off. We're going to get started, of course, with trading for the week. About a half hour from now, you can see we're looking for a slightly slower open. Looks what?
It's fine.
It's fine.
It's the same stocks going up every morning.
It's the same stocks going up, and we're going to get to that because our roadmap this morning does begin with AI and its boost to stocks to new highs. NVIDIA, by the way, above $5 trillion now in market cap. That is another record close. It has Intel's coming off what was its best day since 1987. And Qualcomm also up on reports from an analyst about a new deal potentially involving OpenAI. By the way, speaking of OpenAI, Elon Musk and Sam Altman are set to face off. It's a high-stakes trial on the West Coast. This, of course, over OpenAI and its founding mission and Musk's opposition to what he says was unjust enrichment. We will go live to that courthouse. And speaking of AI again, Related Digital secures $16 billion. This will be to finance Oracle's Michigan data center for who else? OpenAI.
Boy, I wish
we're going to speak with Related Digital's chairman, Jeff Blau. He's going to join us right here on set, Jim.
Wow, that's cool. That's good.
Yeah, about the new project. But let's start with the markets. There's Jeff. And let's turn to Mr. Cramer and just get your sense here in terms of how we're thinking about things after what's been a historic run in certainly the semis. 18 straight days.
They're sapping this market of cash. Every single available new dollar seems to go into this group. So you'll see things like healthcare. Just every day they go down, you say, what's the matter with health? What's the matter? What's the matter with Merck? Nothing. The money keeps going to the data center. It is one of those things that there'll be a lot of, let's say, graybeards, official, people who come on stentorian on our network and say this can't last. And I come back and say, so what ends it? Supply has to end it. Either supply of stocks that are being involved, or supply of, say, more memory for SanDisk or Western Dig. And there's a shortage. Western Dig, Micron, SanDisk. So what happens, David, is the prices keep going up. Now,
look at that. Let's just stop for one moment.
It's all yours.
Just gape at that move. That's a month-to-date move in a and a large index. I mean, granted, it includes some massively market cap companies.
Right.
But nonetheless, 40+% for a month, Jim. Do you remember anything like that in your career?
No. I mean, there was this period where Intel started pulling away from everybody else, and they had a bit of a run, but not the group. The group's made up of a lot of commodity and proprietary, and both are moving up. And they're moving up and up and up. Now, another way, the negative way we look at it is they're going up on the same earnings per share. But David, they're not. The earnings per share keep increasing. So the multiple is actually not keeping pace. That's why I think right now, if you say you should buy them today, I don't know. It could be, I don't like it when I come in. And when you come in, there's a little TV when you go by the gate. And I look at it. And already at 5:30, 6 o'clock, these things are popping. Now that tends to be blow-off category.
Talk to me then. I mean,
but it's not
those who want to make references to the late 90s, to the bubble that we saw amongst internet companies, internet being the quotes around it, because
these are such profits.
It is different, but it does. We had one guest, I think it was Dan Niles. It does rhyme to a certain extent, doesn't it? A bit. I mean.
Yeah, but
or should I not be concerned at all?
No, you have to be concerned if the earnings per share stop going up and we're just paying more and more for the same. That means that we're just dealing with multiple expansion. Some people feel greater fool theory.
But to your point, the data centers just keep getting built. That's what we're going to be talking with Jeff Blau about 40 minutes from now.
I think that when you
that's a gigawatt they're building in Michigan there.
Yeah.
And every day there's another announcement of a gigawatt here, a gigawatt there, 2 here, 3.5 there. I mean, the number of chips and other supplies that go into these data centers to deliver that is endless.
Well, I mean, theoretically, when you have a new chip or new iteration, you can charge more, but the demand is so great, doesn't matter. And that brings us always to NVIDIA. I mean, NVIDIA.
Sorry about that.
Okay, so Oracle, they have balance sheet stretch. Okay, NVIDIA is very interesting. I was watching it trading on Friday.
Yeah.
There was 200, 200, keep taking 200, keep 200, and then boom. The obvious, it's like 20 million share sellers together, finished. And as soon as they finished, the stock went to 208 on no volume.
Right.
So there's been one seller laying on this stock, or two, major institutions, and they finished. Now, they weren't short sellers. I really believe that. I think they were people who said, listen, I've made enough money. But there was nothing at 201, 202, 203, 205. And by the way, the reason why you could tell it was a seller finished is because, amazingly, there was no news whatsoever. No news whatsoever.
Okay, all of which means what? By the way, I would, as we continue to have the prospect of a war that there's a ceasefire now on, but there are no real talks going on to actually come to a settlement.
Well, I think...
And the price of oil continues to trade above.
Right.
I think we're above 100.
This is, you go back to 1999, there you win on that one if you're negative, because these companies shouldn't continue to...
Sorry, crude is 96.14.
But this morning, Korea's up.
WTI.
I mean, Korea is one of the
Brent
most levered countries to the problem of LNG.
Yes.
And the chip stocks are all up there, and the chip stocks represent a plurality of that of the.
By the way, the Kospi though is completely rebounded from the tumble it took not long ago. Completely.
That's Hynix,
as you can see right there.
Samsung. But look, David, it is the same stocks over and over again. It is SanDisk. It is NVIDIA wasn't because it was a big seller, but there's just no stock available for a SanDisk, for a Micron, for Western Digital. It's rather incredible. There's just nothing. It's almost, David, as if there's no stock to the point where SanDisk could go to 1,200 without a problem. Because there's no supply, and the people who want to sell Seagate, they've all pulled back. They would have been offering stock at 600. They've all pulled back. Yep. In the meantime, David, we have a lot on OpenAI. I don't know when we have to get to.
Let's do it now. Let's do it now, because while we've been speaking, and that's our viewers may have seen me sort of trying to go through some things here as well while you were talking, Jim. We did get a revision of the agreement that has been in place between OpenAI and Microsoft. Our viewers may obviously recall it's been, since 2019, the two companies had a partnership, which initially brought them incredibly close together. Remember, OpenAI solely using Microsoft's compute during those earlier years. And it did result in Microsoft obviously investing a lot of which just came back in terms of the money that OpenAI would spend using Microsoft's cloud, using Azure. But it has changed a bit, and it's changing some more as OpenAI gets ready, it would appear, for an IPO. Remember, my last take, as I recall, Microsoft still owned 27% of the equity at OpenAI, roughly. I believe that is unchanged as part of what is a new agreement. Let me share some of what we have with you. It is out this morning. It's on very little type, which I was having a hard time reading, but I can give you some more of the specifics in terms of what's going on here. Microsoft will remain their primary cloud partner, and the products will ship first on Azure unless Microsoft cannot and chooses not to support the necessary capabilities.
But they can go on any cloud now. That's
Correct.
a very big
They
deal.
will continue to have a license to OpenAI for models and products through 2032. Microsoft's license will now be non-exclusive. Microsoft will no longer pay a revenue share to OpenAI. Revenue share payments from OpenAI to Microsoft continue through 2030, independent of OpenAI's technology progress, at the same percentage, but subject to a total cap. Remember, they originally had this thing where it would end after they reached AGI, and you have to have a panel of experts decide what represented artificial general intelligence. That's all gone at this point. So they continue to participate directly in their growth. They still are a major shareholder, but from OpenAI's perspective, they kind of see it as an unlock because they can now serve customers to the point you just made across any cloud provider. They can meet enterprise customers where they already operate. And the non-exclusivity of the IP license as well. So a lot of this would seem, Jim, to put OpenAI on an even firmer footing in terms of pursuing its IPO with very clear boundaries around the Microsoft relationship.
Right, and also we should point out Amazon Web Services. Very good for them. They had nothing from nothing but Anthropic until this. Now, I think this is terrific for them. I wonder whether, you know, the run that Amazon has had. People were talking about it.
Good morning, retail traders.
Well, everybody's investing in everything. I mean, remember,
Except for
Amazon.
Yeah, oh yeah. We'll pull back here on Microsoft. AI and Microsoft amend partnership to simplify collaboration terms. I think this OpenAI has too much of a chokehold on people. Ooh. I'm in still. Oh my gosh. Do, 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 do. Sophie. SoFi. That's why they were talking about it. Elon Musk X Money offers 6% savings rate. What? I knew somebody was very bullish on SoFi. I mean, at one time. Probably doesn't show around no more. Because it has tanked right to support. Man, if I was watching SoFi, I'd have bought that there. Can't tell on the daily, but you sure could tell on the weekly. AMD might be good when it opened. Although it has had an excellent run. I mean, probably a little bit too much. Yeah, oh yeah, 192 to 347. $150 in just 3.5 weeks. So yeah, it's got to pull back. I think I got 310 on it. There are a lot of traders out there that were bearish this weekend. And then you listen to CNBC, their jaws are dropping. Overbought. We're not broadening out. Index was not as true as they thought it was. And people piled back into tech. And I brought that up last week. You got to pay attention. You got to be in the now if you really want to be a good trader. You got to pay attention to what's going on. Oh, there's my pork rinds. What I have left of them. I don't know if I should make a coffee or a cider. I've only had 1 cup of coffee, so I'll take 1 more. I'll be right back. Oak. Come to his little poopy. Come. Ooh, Korean car. Westward leading, still proceeding. Oh yeah, good morning, Jesse, Mark, and R. Green. Hope we had a pleasant weekend. YouTubers, good morning. Yaza. So we've got Sophie, Pinterest, P-I-N-S, After Hours, and Snap. Monday morning we have Lily, Caterpillar, UPS, McDonald's, Coca-Cola, General Motors, Charter. After Hours at AMD, that's the big one. Palo Alto, they talk about that one a lot, P-A-N-W. Then we got Microsoft Wednesday morning with Meta and Pfizer. Briscoe Myers. And then After Hours, got Google on Wednesday with Amazon and Mr. MSTR. CrowdStrike. Well, we got some interesting earnings this week. Got oil Thursday morning, Exxon, Chevron. We got Merck, Honeywell, Siri, Comcast, and we got Apple Thursday evening, DEC, Datadog, DDog, and Coinbase, and Roblox. A lot of good earnings this week. We got Airbnb, one I haven't watched in a long time, Fubo, Warner Brothers. So what did I say? Airbnb. Yeah, oh yeah, Airbnb. Sophie's pulled back, was it? My support. ABNB. I made so. Oh, wow. Missed this one. I had really high hopes on this stock here. I thought they could do, a lot of crap. And sorry, had a good bounce. Bounced off the Head and Shoulders. 1 2 3 4 times. And we have another Head and Shoulders right here. Interesting. SPX, like to see a small pullback, but probably not much. I mean, there's a lot of bears out there. I don't pay much attention to, I mean, retail traders that have good followings, they just see the megaphone set up, and we broke out of the megaphone. Depends on how you chart it. I think my charting's a little bit better than theirs sometimes, because they use like wicks, I use bodies. They don't see a head and shoulders, I see a head and shoulders, so I might do the shoulder line instead of the head, which has more connections. So that's the way I feel about that. You got to be in the now. CNBC still whining about Iran. I don't think the market really gives a crap unless we get nuked or we get hit. I mean, you heard what happened this weekend, another assassination attempt. All the liberals are saying it's a con artist. It's not real, but I know how wacky these left-wing wackos are. I don't know what it is with America. Assassination, they wish him dead. It just makes me so... I would wish nobody dead unless you're a serial killer or a rapist, a serial rapist. I want the left to talk, but I mean, there's people out there that'll listen and be nutty. Somebody's got to know a nut out there somewhere. I live in Missouri, we got some nuts out here. I mean, everybody has a different way of looking at things. Roblox is also Thursday after hours. We got some good earnings this week. Banks did well. Oil got their little boost for the year. Travel's back up again. You still find a few deals, but they're not like they were. Oil has a big thing to do with our economy. No matter how you look at it, how resilient things are. I mean, I just keep looking at the earnings. I really want to do some good on earnings this week. I'm going to see where Penn's is. But just a lot of experienced traders out there. I don't know. I just was going through X and just kind of seeing the reaction of the liberals. And then I noticed a lot of people charting up the megaphone on the SPX. So we'll look it over real fast. We got 3 minutes, not much time left. I mean, here's your well, I've got this charted already. I'll do it again. There's two ways of charting this out. You could chart it from this here high, and we can break 7,200, or you can chart it here, and we broke the megaphone. This is on the daily. We got a head and shoulders here. So they were calling for another big pullback. And Trump deranged syndrome, there's a lot of them out there. Wall Street, more or less, is controlled by progressive liberals. I mean, I don't even think like them. It's like they don't have a care. They act like they have a care, but they don't. They don't have a care. They just care about the money. Then you got that vote up in New York for the billionaire tax, which it won't hurt a billionaire, but it does hurt the philosophy of a billionaire. We're taxed enough. I'd actually like to see what do you call it? Just what you purchase becomes a tax, and that's it. Taxes have always been a thorn. Okay, here we go. Well, we didn't, like I said, we didn't close down much. We're going to consolidate, I think. We got a lot of things to think about this week. And we have had the greatest run that I've seen probably in the 22 years that I've been trading in the past 4 weeks. And I've seen days a whole lot worse, but it's a little different now because there's so many Kool-Aid drinkers on Wall Street. We got a double bottom on the /ES right at open. So I'm going right to it. Today's the 27th. $71.90s or the 71.70s. We're at the 200 right now. There's a SPY, and we got the VWAP break on the SPY. QCOM. Wow, that shot up. $2 right there. The 71.70s. So that was a no-brainer, the double bottom. Now we're above the 200. See if we get a pullback here. We got, what is that in red? We got 3 white soldiers. Actually, what the fudge is that? That looks different. Oh, that's /ES. Oh. 3 white soldiers. So the SPXs went from 820 all the way to 10 something, 1070. Inverted hammer. AMD's pulled back here. We've got Amazon. IWM, nice little bounce. We got QQQ with a double bottom. Baba, China. Baba's at 130. Baba's at my support level that I called out on Friday. Let's see what Baba's. Got a big volume spike on Baba. This could be a lead out. May 1st, the 136 strike. Got a spread on it. 14 cents. Particularly don't like that much. AMD's starting to reverse a little bit. We got a double bottom on AMD. No, we don't. That's Tesla. Okay, we're starting to curl here on AMD. I don't know. I just feel like it's way overbought. PLTR broke out. The 200 so far is acting like a pivot point today on the SPX. 3 white soldiers. QCOM's had 2 huge breakouts, and now we're bullish because we're above the 200 on the daily. We got 2 big gaps. Man, that's a tough one to call. SNDK, which I think is a little bit overdone. Yeah, big. We broke out at past 1,000. SNDK. So they told you to get out of chips, to get out of AI, and they were fools. You really can't listen to CNBC one bit. They think they're they've been market makers for a long time, until the retail trader come to the scene, and they've lost that grip. They can't control the markets like they used to. Baba's coming down for me now. 132. I'm gonna swing Baba. $132, baby. These are the 136 strikes. Look at that, 132 to 147. I'm hitting boom, boom. Josh. Up. It's already at 154. It just, after I saw that chart, man, I'm jumped in it. I didn't hesitate. My eyes have seen the coming of the terrible swift sword. She's stomping out the villages where the grips were rather stored. Let's have a big breakout and make $1 per contract. CRM. Oh, look at PLTR. PLTR, boom. Oh, don't go in with that $200 barrel stuff. We'd have to be nuked. Bachelor's living food. Tesla's doing a double bottom here. AMD pulling back. AMD's had a huge run. My calls are at 152. SPX is setting up here. Let's see what we got here on SPX. Are we going to stay bullish or are we going to stay bearish? That's question. Oh, damn it. I'm late. I'm late for a very important date. The 7180s at $5. I'm not in them yet. I'm watching this very closely. See if we can get back down here to these here wicks on this body. That's how I'm going to judge this trade. We're at the VWAP on /ES. It'd be nice for a double bottom. It'd be nice for this thing to break. But the market's not nice all the time. There's $5. 490. A lot of bears out there, I'm telling you. So I'm being very cautious. A lot of earnings, a lot of information this week. 490. Okay, prepare ye in the name of the Lord. We're at 153 on my Baba. I haven't traded Baba in a long time. Ooh, yeah. Come on. Come on. Give it to me. So I'm going to go in one contract. My eyes have seen the glory of the coming of the Lord. He's in at 440, yes, just like the vintage restored. We're on our way down. I'm in for the first one at $4. Okay, it's time to get serum. I almost got in at 440. Glory, glory, hallelujah. He tries to do his best. Sometimes that's the test. Yes, 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 yes. Oh, yeah, 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 yeah. Oh, yeah, 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 yeah. Oh. Oh. There's $4. What we need is a hold, yes we do. What we need is a hold, yes we do. What we need is a hold. Go smoke a bowl. RISKY. Enter at your own risk level. Oh, 360. No. Countdown races, 5 miles long. Doo-doo. A lot of bears out there today. This is it. We're going to find out. F around and find out. Boom. Okay, he's trying. Patience. Spy kind of has a megaphone. Yeah. It's a big mouth. Uh-oh. Come on. You got a hold right here. Look at that. I'm gonna add one more. Come on. There it is. $3.30. One at 340, one at 4, and one at 330. Hallelujah. Bob has come back down. I'm at 370. SPX, I'm 380. There we go. There you go. Break the... Oh! Yeah. As we approach the 200, we want to go ahead and boogie. I'm up 140 bucks, Jim. 150. Let's go. Okay. Right about now. 450. I don't fuck around. $470. Thank you very much, Lord. That's what I needed. glory. Hallelujah. Glory, glory, hallelujah. $5.10. Shit. How dare you, you mongoloid. Attention deficit disorder. Are you there? This is the IRS. We just caught you with 2 hammers with 3 white soldiers. How dare you? And they told me that it couldn't be done. I've had so much fun, yeah. Woo-hoo-hoo-hoo-hoo! Jimmy! Jimmy just left $260 on the table. Jimmy! You know, I was sitting there watching a remove. Oh my God. How do you do it? Oh, how dare you? Okay. Someone's being difficult this morning. So we got snake. I really want you to pick up on this. Pay attention to the hammers. Pay attention to what at the end of the snake. You've got to pay attention to those. Just 1 or 2 candles can tell you exactly what direction this market's going to go in. I'm telling you from experience. I'm wondering what kind of song I'm going to really pick up on today. Glory, glory, hallelujah. Glory, glory, hallelujah. Okay, that ain't gonna work. Last week they came in here inspecting for marijuana. I smelled it again as I was coming in this morning. Somebody's going to get kicked out. The blue's not good with green. How about pink? Oh yeah. What'd you think about that, V-Whopper? It's actually Whapper. V-Whapper. NVIDIA is at the 200. We got to pull back on Meta. Watch your eyes on Meta. Put your eyes on Meta. Put your eyes on Meta. Is Meta overbought? That's the question we got to ask ourselves. So let's find out. META. First thing I want to do is go to the weekly time frame. Yes, Meta is at resistance. Time to buy Meta was at the 100. Take off the Fibonacci. Although it probably would. Yeah, Meta's going to come down. Remove. 3 white soldiers. Consolidation. I'm going to move this up just a little bit. I want to get it above that wick. That wick right there. So somewhere around 660, set your alerts for Meta, please. Whenever you're shopping, look for crispy sauerkraut. I like it better than the regular. What gets me is you got to be the devil's advocate these days. Yeah, I really, sometimes I like to look at the comments on X and social media when something does happen, like what happened this weekend with that idiot. And just listen to some of the people, and it just puts you in a mood like, I don't want to be like them. I mean, who'd want to wish death on anybody? Especially when I'm convinced that he's doing a great job, but he basically did what I want to do, is close them fucking borders. That didn't have to be like that. I guarantee it, if them borders were closed, Kamala would have won the election. That was the major reason why Trump got elected. Just can't have people crossing the border tens and thousands a day like that every day for years. It's just not something I have never seen and not be vented. And I love immigrants more than I love white people. Amazon's starting to move a little bit. That's why I travel a lot, because I want to meet. Spy acts like it wants to break out. See how it stopped at the shoulder line? This is I'm gonna do a lesson here. I'm gonna do a lesson. This is very important. Hello, retail traders. I'm Washboardjim with a sneaky snake trading strategy, where I love talking about chart patterns, moving averages, and especially being in the now. Now, there's a lot going on this week, so I'm going to show you a trick play here that I'm a great chartist. I want to show you how I charted up the trade I took today and how important it is to recognize patterns. Sometimes you have more than one pattern in a pattern or outside of a pattern. And I'm going to show you exactly how I chart a megaphone when I feel like I see another pattern that needs to be mentioned or alerted to. But we've got a lot going. We've got great earnings coming on this week. We've got a lot in the news. We had the assassination attempt with Donald Trump, which makes it number 3. And just crazy times we're living in right now, and I don't think it's going to get any better. So that's just the way it is. You got to be in the now. So I was sitting here charting out the SPY and the SPX, and I went to the SPY and I was looking at the SPY, and I noticed a megaphone pattern. I traded the SPX, and now we're at the VWAP here on the /ES. So we're coming down to a major support level. And we had 3 white soldiers on that on the /ES and also here on the SPX. This is a TTM trend chart. So when I'm typing out, let me get here. So this morning I started noticing the megaphone pattern. And I went from this body to this body and drew that bottom support. And we hit that wick right there. So that's a key indicator right at open that we could maybe come back down and hit that again after that breakout. So this was a quad. If you can count to 4, you might learn to make a little bit more. And if you can count to 3, you can trade with me. So I drew this here megaphone. Now this is what I want to teach right here. I could have took that trend line and put it to the top of that there bar. But what I noticed was an inverse head and shoulders. So when I jumped in this trade down here on the bottom of that megaphone, I drew this trend line straight across and created the left shoulder. And then after we took the trade, there was a couple hammers that got me in this trade on the SPX. And then we had the 3 white soldiers for an exit idea. I got out a little bit soon. If I would have held on a little bit longer, I could have probably got another $150 out of the contract. But remember, the key secret is looking for other patterns. Once I noticed the megaphone pattern, I spotted this here head and shoulders. So I went ahead and drew my line on the shoulder line of that head and shoulders, which now becomes resistance. So you have the bottom of the entry right here, which was an easy call out, and I got in a little bit early, and I added 1 contract once we hit that support level. That was my final time to get into the trade. So I ended up with 2 contracts and did pretty good on that trade. Within 3 minutes, 2.5 minutes, I was, 5 or 6 minutes, I was out of that trade. But always remember, look for patterns. This was a good example. See how we run up and we hit that right shoulder line? We got the left shoulder, head, and then I just assumed maybe that we could come up and hit that right shoulder one more time. And that's exactly what we did for a good exit idea if you stayed longer in the trade. So I'm Washboard Jim with a sneaky snake trading strategy, trying to teach people how to trade, where I talk about chart patterns, moving averages, and being in the now. Have a great day. Right now we're at the 63 on AMD. I was reluctant to trade it this morning. We're back at 380, 390 on the SPX. Yeah. No, this guy don't look happy. Who is this dude?
The second PCE, we're not going to throw a headline out the window right now. It's not, I don't think, terribly important because of the situation with oil. I get why higher oil is a concern for pressure on the consumer, but sometimes
This is bullshit.
We're in an off season for oil and gas consumption. Remember, it's
I mean, these guys are in the ruffling feathers. There's plenty of oil out there. We had an oil crisis under Biden. We had an oil crisis under Obama. They weren't even going to allow fracking. By the time Obama left office, he said he was the oil president, and that wasn't the case throughout his whole watch. We actually had a war on oil. We don't have a war on oil right now. I could look at this guy stressed out. I've seen days a whole lot worse. Oil. I mean, he can go fuck himself. I lasted not even a half a minute on there, and I had to turn it off. They're probably stuck short in the market, is what I'm thinking. Good morning, Arm, on YouTube. Good morning, Bobby. Good morning, Mate. Uh-oh, watching the video. Spy's coming down to the shoulder line. Now, see what I was talking about earlier about the head and shoulders? We got a two-headed snake right here. We got the left shoulder, head, right shoulder, head. So you want to set your alert right above that shoulder line. And that's a two-headed snake. We extend this out. I mean, this line probably goes right to that left shoulder. Okay, prepare ye in the name of the Lord. We're going to do the same one, 7180s. And I'm going to wait until we get close to this, and then I'm going to go ahead and buy a contract. How's he do it? Let's see where we are on the /ES. If we're close to... Oh, we're under the VWAP. But that don't scare me. I don't scare too easy. Okay, get ready. Oh, yeah. Oh, yeah. That's a SPY. Let's look at the SPX. So we just got a Head and Shoulders. There it is, right there, 71.52. Well, they didn't go up much on that. On that candle. Mister's at 170. It's probably up too much. Yeah, again. Strategy buys 3,273 Bitcoin for 255 million. Mr. targets 205. Play follow the leader, huh? Bitmine Immersion Technologies, BMNR, announces ETH holdings reach unprecedented world record of 5 million tokens. Kryptonite is a lucky man. Still waiting. Good morning, Belly. I'm just kind of taking my time right now. We're just kind of stalling out. Google has a new high. AVGO new low. Mr. has news.
MBS is probably something that he wants to switch.
Okay. And just getting to these markets as we stand right now, obviously coming into a fresh week with record highs for equities, what are you seeing as far as the market impact on credit spreads? Because the market's seemingly pricing in, you know, the war
Pricing in, they say.
Here, continuing to double down on obviously the AI story. What are you seeing out there as far as credit's concerned?
Yeah, credit has performed well this year, even though there were some ups and downs in the initial stages of the conflict in the Middle East. Just like equities continue to rise, credit spreads remain very, very low. So the credit markets appear to be shrugging off any of the concerns over in the Middle East. When we look at credit investing or corporate bond investing, fundamentals do look okay. We've seen improving credit quality in both the investment grade and the high yield markets, where the average credit ratings have been improving. But the challenge is, if you're an investor, low credit spreads mean lower potential, outperformance relative to treasuries. So even though corporate fundamentals remain relatively strong and credit quality has been improving, the actual yields they're offering don't look super attractive. So with that sort of outlook, we're neutral on taking credit risk. Doesn't mean you need to get out of investment grade or high yield. We think they can kind of hold steady for a little while, but those low spreads make it a little bit difficult to be more excited about those.
Okay, understood. Colin, always appreciate it. Thanks so much for joining us on the program and jumping on. Colin Martin there, Head of Fixed Income Research and Strategy, Schwab Center for Financial Research. Coming up, it's time for the morning trade. We're going to be taking a look at CrowdStrike this morning. Morning Trade Live, we'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
There we go. Shit.
Let's recap the news. I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane King Hall, and connect with me on LinkedIn for more.
Sometimes
Watch SPX.
You could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
We're back on Morning Trade Live. Let's focus on CrowdStrike. Last week, the company expanded its cloud detection and response capabilities to
$2.60.
security partner of the year. Looking higher today off the back of this.
Oh, yeah.
So thanks to a shout out from Mizuho. So let's focus on this for the morning trade. Joining us now for a closer look at this call is Marley Caden. Very good morning to you. Hope you had a nice weekend, Marley. Just walk us through what Mizuho is saying behind this
Mizuho.
today on CrowdStrike.
Good morning, Sam. Yes, you mentioned that. Shout out from Mizuho helping with this move higher, also boosted by those headlines from last week, but we are seeing them up about 1.5% so far this morning. Mizuho is saying that they're upgrading CrowdStrike to outperform from neutral with a price target of $520. That's up from $490. Right now, we're trading just over $450. So some pretty significant upside potential here. The analyst says he's grown more constructive on CrowdStrike's fundamentals in recent months, saying that channel checks have become more favorable and indicates what the firm calls very healthy demand across CrowdStrike's platform.
Damn, girl.
The firm also pointed to several growth drivers, including Falcon Flex, hyperscaler marketplaces, and AI security initiatives, adding that it, quote, fully expects CrowdStrike to capitalize on AI
Heard her news.
The analyst also believes that the company, quote, arguably has the strongest set
Oh,
of offerings
Marley.
in the space.
You look hot
also
today.
flagging Project Glasswing as a potential catalyst for the company, seeing what they call a legitimate possibility that Project Glasswing will catalyze good incremental business activity for CrowdStrike over time. Now, with shares right now trading at roughly 14 times their calendar year 27 ARR, the firm calls the valuation more than reasonable and says that the risk-reward is now favorable for CrowdStrike. Now, the company's revenue growth stands at about 21.7%. Gross profit margins are close to 75%, Sam. So also underscoring their strong market position. And we kind of see that across most of the analysts who cover here. This is not the first bullish call we've seen on this name. Average price target right now standing at $491.14. So Mizuho's increase to $520 is higher than that average. But of the analysts who cover CrowdStrike, 77% of them have a buy rating. The rest have hold ratings. There are no sell ratings
Jim, you're
currently on CrowdStrike.
3 white soldiers to the 200.
The AI disruption fears on a day where we are seeing software is also higher, broadly speaking, and the IGV's up at 910. So, okay, a good look at CrowdStrike there and this call from Mizuho. I really appreciate it, Marley. Thanks so much. Let's trade it now with Mike Shaw, Director of Trading Education, Prospect Trading Academy. Mike, how would you approach an example trade on this name this morning for us?
Yeah, so I mean, kind of in my gut, I do like the upside in CrowdStrike, but then I also have to be pragmatic about what the prices are telling me. And the prices are telling me we can't get above and stay above this 200-day moving average. Implied volatility, even though that we are in a slightly bullish type of scenario here, the IVI implied volatility range. That means it's 66%. That means that 37% that implied volatility is higher, is lower.
Oh my gosh.
Or excuse me, 66% of the
Say
time,
what?
IV is lower than this. So we are selling it on the higher end of this. And so I'm going to play this just on the technicals by doing an implied volatility sell with an iron condor. Not this week, next week, May 8th, 435, 440, 460, 465. It's kind of a wide market, or it was a little bit earlier, but we should be able to sell that for $2.75 to $3. If we sell it at $3, then that's pretty easy. We have 1.5 to 1 that we're getting. We can
Now
lose
that
3,
was a trade.
we can lose 2. And so, I'm just playing that we just can't go higher than this, and it's banged up against this 3 or 4 times.
Understood. All right, CrowdStrike is currently trading at 2%, $457 and change. Thoughts on the overall market today? We're looking pretty much directionless into a pretty consequential week here, Mike. What are your takeaways?
Yeah, it's not surprising that we're not doing a whole lot today. We have a lot coming with earnings throughout the week, and then of course we have the Fed, which widely nothing is going to happen, but it's more about what they say than what they do at this point. And then of course with any sort of elections or votes that are going on with confirming
Unbelievable.
Mr. Warsh.
That was perfect.
I don't think that the market will look at that badly. And
You know what? I don't give a crap what you think right now. Do you understand me? I don't give a crap what you think, 'cause I think on my own. I alerted this support, jump right in. This is the prettiest trade I've ever been in. Thank you very much. Thank you very much. I went into the kitchen and warmed up some taters, threw a little cheddar cheese on top of it. Oh man, that was great. Unbelievable, that's what you are. That was sweet. Unbelievable. That's crazy. I'm going, what? I seen that gap up. I'm market sell. I'm out of there. Whew. Wow.
Have 6 sectors lower, you have 5
God, I
sectors
just
higher.
can't believe it.
So what I see is a
I mean, I can get back in this trade
relatively
again.
mixed, although the moves themselves aren't as small as the headline performance may suggest. So it's a very nice tug of war, a very nice sort of push and pull as you phrased it. When I look at the performance, 60-40, 60% of the names are higher, 40% of them are lower. It goes to show sector-wise, more down than up. Individual company-wise, more up than down. But at the index level, really, really unchanged. Aggressively unchanged, though, because I said it's not necessarily quiet across the board, but the net result looks like a pretty quiet day.
Let's talk about the Mag 7. Obviously, a huge week for some of these names. I mean, not to mention Nvidia, which is not going to be reporting, but that $5 trillion market cap. Microsoft coming off the lows, it seems, after amending this partnership with OpenAI around revenue. Just walk us through what you're seeing there, what sort of stands out about some of these companies for us this morning.
Yeah, I mean, if you have looked at a calendar for the week and you haven't circled Wednesday afternoon, maybe you should do that now, because you have something like 15% of the S&P 500 market cap reporting in a matter of, 15 minutes. So that's going to be unique. It's going to be impactful, and all those names fall into this list. So what you'll see here is 4 of these names are lower, 3 of them are higher. And again, none of the moves are necessarily small. You see Alphabet up about 2%. You have Tesla down 2%. Apple lower on some of those Qualcomm, OpenAI headlines that came out as well. So you mentioned Microsoft. I think that's probably the early story of the day, is the recovery you're seeing intraday in Microsoft. But, this part of the index right now is down about 20 basis points. Well, you look at the difference between the S&P 500 and the NASDAQ 100 performance today, about the average would be somewhere around 20 basis points. So
They bounced right off the moving average. This is a clean day today.
That you see at the headline index.
Now, I don't want to get complacent, but these charts are clean today. SPX is real clean today. So after a good trade, you want to take it a breath and not get complacent. You don't want to get complacent. Because the bears are strong, but the market and the earnings are telling me something different. Like I've said, I've seen times a whole lot worse than this. This is nothing. They make it sound like it's the end of the world. I mean, I was listening to CNBC this morning, and they got to talking about some of the goofiest shit that had nothing to do with stocks. It had every bit to do with sympathy. And I do not want to listen to CNBC talking about sympathy. The stock channel. That's not their job. Oh, we care. Oh. They don't care. They don't. Or they'd be more honest with you. Oh, we care. We have a breakout of the symmetrical flag on IWM. They're so easy to read. CNBC is. It's because I've watched them for years, and I used to love watching them, but now I just, it grosses me out. They definitely think the market's way overbought right now. And they're kind of, mind buggled that we had that good bounce. Swinging, I got a scalp and a swing. That's too, can't read that. So we clear it. Here we go again. Prepare ye in the name of the Lord. Can we make it 3 times the charm? We want 3 of them. These are the 7180s. I'm looking at the clock. I'm going to ask myself, do I have time to take this trade? We're at a head and shoulders. Head and shoulders, people. Prepare ye in the name of the Lord. Head and shoulders. SPX. We're under the VWAP on the /ES. SPX. Bye-bye. We got one of them, 2 bits and a freebie. Symmetrical flag. This was the previous resistance. So we're under that. Come on, get on down there. I dare you. Remove. $2.65, $2.70. Okay. As I prepare to take this trade, we are looking at the 7180s. And I'd love to see one more red candle. Medicare. There she is. Go take care of that today. Come on, give me that red candle. I'm not jumping in yet. See, I'm looking at the time of day. Now I'm getting ready to go to lunch. I had a little snack. I can get away with that, but I want to go in there and make a... oh, here we come. I'm going to have a little bit more patience. The time of day means everything when I'm trading now. I get that beach trades out of the way. I'm done with the beach trade. Those are the easy scalps where I make most of my money. And there's so much negativity out there. And we are at all-time highs. We got a big earnings week. Big earnings week. So far, our earnings have been better than expected by far. And but they're being in the now thinks we're in some kind of supply issue problem. We're not having a supply issue problem at all with oil. we had supply problems under Biden. I mean, the grocery stores, the car lots were empty. Everybody had to drive an EV car. Who's king? Who's actually the king around here? You're going to drive an EV car if you like it or not. We're going to shove it up your ass by 2030. You're going to have solar panels on your house if you like it or not. I'm the king. We're going to decide who social media platform you can talk on. I got blocked on StockTwits and Facebook. Thrown in jail 4 different times under the Biden watch. And warned on Twitter. And had suspensions on Twitter too. If I remember right, a couple of them. You know, I don't even have Disney on my watch list. I got to thinking about how many times I was thrown in jail, and when I got thrown in jail for talking bad about the CEO of Disney. May 15th, Nikes. here we go again. As much as they try too hard to lose your mind. Oh yeah, I'm glad some calls it 185. Well, I got lucky. I got lucky, yeah, I got lucky, oh yeah. It'll be peace in the valley for me someday. It'll be peace in the valley for me. Oh Lord, I pray. The man, you're deep in my soul. Ooh. Ooh, yeah. Ooh. Well, we just don't understand. Come on, baby. Jim, you're at $15 a contract. Have you ever thought about selling? No, I am hungry, and I do got to call Lindsay here. Cherry. Is her name really Cherry? Damn, I'm calling her Cherry. I'm going to cherry pick. I'm going to be getting my blood test done soon. And I want to buy a lawnmower. I want to buy a lawnmower. Come on, beach. Do not drop on Bobo. I got a tight stop on, well, the double bottom's right here. So we got to hold that support. I'm going to move you right up here. Put you in safekeeping up there. Baby, 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 oh, come on, give me a big old gap up. Jim, you're up $20 a contract. You're up $60. Oh no, you got 5. You got 5. You're up $100, Jim. Come on, break it. Break it. There we go. We have the 21 coming up. I see a shoulder line. You see the shoulder line? Let's draw the shoulder line. Take that left shoulder. Oh, that ain't the shoulder line. There's the shoulder line. There. And I think we can break it. And hit the 63 and the 50. Like, boom, boom. I'm going to go into the kitchen and I'm going to watch my trade. I think we're ready for a song because I want to move this right along.
Candles on the cake, chart lines on the screen. You're checking all your tickers, we're bringing in the cake again.
Bring my dream, yeah.
Coffee in your mug, charts glued to your eyes. Still calling out those bangers like a birthday surprise. Happy
Birthday, Washboard Jim.
Stacking years like you stack them wins. It's 65, a special day. Let's begin. Here's to you.
Here's to you.
The sneaky
Snake trade.
Happy
birthday, Washboard Jim.
May your wins keep rolling in. Asking ourselves how they do it again. That's the work of the sneaky
Snake trade.
taking profit.
Got a snake breakout.
Red growing your account. Nancy waiting in your bed. The setup is there as you head her away. Forget that bitch. There's another trade.
I think it's about time. Here we go. Time to make it. Yes, and yeah. Day Washboard Jim.
Stacking years like you stack them wins. It's 65, a special day. Let's begin. Here's to you. The
Sneaky snake trade.
Happy birthday, Washboard Jim. May your wins keep rolling in. Asking ourselves how they do it again. That's the work of the sneaky snake king. Life's our only chart that we wanna never end. So we cherish all the moments we have with our friends. Happy birthday, Washboard Jim, the one and only.
Sneaky snake trade. We got a snake breakout, pull back. We're waiting on the boom. I don't see it, Uncle Zimmy. Snake breakout, pull back, higher low. We want to keep a higher low. Boom. To resistance, to the shoulder line at the 63. That's our target right here. Washboard Jim. Sneaky snake trade. Do I have time to go pee? That's the question. Do I have time to go pee? No, you can't be doing this. Now we're at a double bottom. Still got the, oh, that hurt. That's not good for the heart right there. Come on. Debating on if I want to get out before it gets worse. But I ain't gonna do it. I'm not gonna do it. Whatever happens, gonna happen soon. Washboard Jim. A little bit lower low, see. There's the fallen wedge. Come on. My eyes have seen the glory. Jim, you're up $50 contract. You're up $50 period. You're up a lot more than that, Jimmy. Nope, $50. Now I'm 60. Or, oh, come on. My nose is itching bad today. Burning a lot of stuff last night on my property. Break the 21, please, in fine order. Jim, come on. You're up $75. Yeah, I don't know. It don't seem like it was being very stubborn. Here we go for a triple bottom. Let's see what I said about the SPX this weekend. Uh-oh. No. There it is, a double bottom right there. With a wick and a body. Kind of just sitting around here. I don't like it. 5, 10, 15, 18 minutes. Nope, it ain't working. Ugh. Ooh. We went below support. There's a double bottom wick. Add 5 more here. See if it works. $130. Come on, baby. There we go. Oak. Come on, baby. I'm gonna go start my cooking. I gotta use my cilantro before it goes bad.
My thought on Adobe is simple. I looked at first my own consumer behavior. I used to have the Adobe suite, and when it came time to renew, I just said, how much are you going to charge me for that? There's so many AI tools that are coming out that are doing it better, faster, and cheaper. And so I looked at my own consumer behavior, and it just made me question, where is Adobe going? Then when I looked at the chart confirmed what I thought. Even though the company had a really great beat on earnings, and if you look at back over the last couple earnings, you can see they had an increase in revenue and EPS, yet the stock continues to sell off because I think people are questioning where they're going with this rise of AI. And then on their conference call, management said, quote, "We saw greater than anticipated decline in our traditional standalone stock business, and that decline is happening faster than expected." I think when you pay attention, all the signs are lining up to say, can Adobe keep their crown as the suite for creative products? And I really think that's being challenged. You got CapCut, you have Canva, you have so many different apps, even AI, ChatGPT is now creating images better than you can create using these softwares and doing it manually. So I just think their crown is being challenged. I think there's more downside to go on the stock.
All right, Rick, so as we take a look at Adobe, Jason mentioned the downside here, and you can see it. We're moving down, although more recently with a more aggressive slope than we saw earlier in the year.
Adobe also kind of destroyed their customers' goodwill. They kind of pioneered this reviled kind of software as a subscription idea here. That's something that always kind of sticks out to me as well. But anyway, yes, definitely downward sloping here. Downward trend is being slightly broken here. We crossed above our blue trend line, but really overall still declining on the year. 224.13 was our recent lows. So you could say we have a bit of a range now. We have our highs here at 258. We have our gap near 269, along with those lows near 224. So when we look at our moving average picture here, we have our 5 and 21 day clustered on top of each other, coming in right around 244. So that could be a point to watch for a potential break to the upside. That could pave the way to our gold 63-day EMA here at 261. RSI, triangular shape once again. A little bit of bullish divergence here, but hasn't really translated into a big move to the upside. Look for a crossover back above the 50 260 midline if you have a bullish outlook, because we are still below that point. So again, more of a bearish lean so far. But now we can see that our volume profile shows that we had our activity mostly centered here between 238 to 260. We're near the lower end of that range, so that could be a rather precarious situation if we start to get too far below, 240 or so. If we do push back to the upside, the area around 300 stands out as another notable area of activity.
All right, but as we take a look at Adobe again with that downward move today and your more bearish outlook here, Jason, how would you trade this name?
December 18th, 2026, I'm looking at the 260 strike price. It cost you about $40. I also noticed that it was about 1,000 open interest at that level, which I like to go where there's enough open interest to get in and get out. With your break even being down there at 220, I think the stock can get there. I always want to, with trades like this that have been down for a while, you
I should have added there.
wrong level, just above that 50-day moving average. It's run up to it before and sold off at least 2 times since March. So I would if it breaks through that 50-day moving average, then momentum or something has changed. But I would take half my position now, knowing that it could potentially go up to the 50-day moving average, then add the other half if it goes up. Or I take half the position now, and then if it continues to fall and drops below the 220, I'd add the other half of the position on its way down.
All right, the gift of duration in all three today, Jason. We really appreciate you being with us and bringing those picks for the big three. Jason Brown, our stock market expert at thebrownreport.com and the author of 5-Year Millionaire. And of course, thank you to Rick Ducat, our lead market technician, for always taking a closer look at the technicals with us. Coming up next, we are going to spotlight Huntington Bank after earnings and some key acquisitions. That's next. Stay with us.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you go.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were...
How come Grandpa doesn't sleep with me anymore?
He worked hard, and after he passed away, the torch has been
Well,
passed to me. And my advisor.
That was a bad entry on that one.
With me,
I'm at
with the journey,
165.
helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
My man.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times.
We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight the latest earnings from Huntington Bank. Joining us now is Brant Stanbridge, the president of Consumer Regional Banking at Huntington National Bank. Brant, thank you so much for being with us today. Let's start with the quarter. You beat on adjusted earnings. We saw really good numbers across the board. Investors still somewhat talking about regional bank risk, so we'll get to that in a moment. But what stood out to you most on the quarter?
Well, Marley, thank you so much for having us today. It was an exceptional quarter for Huntington, and 2025 was a transformational year for the company. We announced 2 large partnerships. We made a capital markets acquisition at the end of the year, and so to come into 2026 with EPS growth 9% year over year, another quarter of sequential loan and deposit growth, and specifically in the fee areas where we've been investing substantially, payments, wealth, and capital markets, we saw 18% growth in fee income year over year. So it was just an exceptional quarter for the company, and really was a combination of both continued strong performance of the core, but also beginning to see the value of these partnerships that we announced in 2025.
So as you see the partnership announcements starting to drive some value here for this quarter, how much of what would you say was integration driven versus organic growth?
It's really organic, but the partnerships, we're not yet seeing substantial amounts of impact from the revenue synergies. There's some significant early signs. In fact, we rolled out our digital capabilities in Texas at the beginning of this year, and we're already seeing a 30% lift year over year in our Veritex footprint for deposit production. We launched a deposit builder campaign in the new Cadence footprint, and year over year, that production is up almost 160%. So just examples of what we're beginning to see, but they're not impactful yet for the first quarter results. The first quarter results are really impacted by continued strength in the core, and then also a number of other growth initiatives that we've been focused on for really the last 3 to 5 years that continue to mature and create opportunity for the company.
And I saw your loan growth was particularly strong as I'm just looking at your numbers here, particularly on the commercial side. What are you seeing from your business customers right now?
Well, our business customers have been quite resilient. In fact, we are seeing a cautionary eye towards what's happening in the Middle East, and we're thinking about that also as a company. But we're not seeing yet a significant slowdown. I believe everyone looks at it and wants to see this resolved in a timely manner, and would be concerned if this continues to extend. But at this point, businesses seem very resilient. We're continuing to see businesses invest. We're not seeing significant slowdown in projects or other things that we would be involved in or potentially finance. And so overall, it appears the economy is quite resilient and things are still optimistic.
And so you mentioned resiliency there twice. As far as the consumer and what the consumer looks like to you, are there any pockets of stress where you have concern, where there might be a lack of resiliency in the consumer, or the consumer looks strong to you as well?
Well, we're seeing what a number of folks have spoken about, which is more of a K-shaped economy. So our higher income customers have not really been impacted, and we're not seeing any real significant changes in their spend levels or any stress really in our consumer portfolios for that customer segment. We do see impacts to our lower income customers. We're beginning to see lower savings balances. We're beginning to see higher occurrences of overdrafts or things that might indicate that some of the early inflationary forces are impacting that customer base. But we're not overall seeing major challenges with the consumer.
And Brant, I want to switch gears here a little bit because I'm a golfer and it's not every day that I get to talk about golf on air. So I saw that you've leaned into golf as part of your brand strategy, and I'd love to know why you felt this was a good fit for your customer base.
Well, as we continue to expand as a company, and we have a number of businesses that actually operate nationally today, it's really important that we tell the Huntington story and
This is
do that with a
H-band?
broader and broader audience. We have a lot of overlap with
I haven't thought about H-band in a while.
customers and a number of businesses in which we operate with golf. Many of them are golf fans, and so it's a very, very effective way for us to communicate and introduce the Huntington brand. We also are intentional in our approach, and our approach has been about investing in players all throughout their careers. We're not just investing in the number one player in the world, Scottie Scheffler. We're also investing in amateur players, and for example, Mason Howell, who just won the U.S. Amateur, or this past week, Farrah O'Keefe, who is a golfer at the University of Texas and showed quite well in the Chevron Championship and LPGA event. So we're investing in golfers across the spectrum, and ultimately, it's about investing in where we see potential in players and being there for as their careers progress and grow.
And Brant, how do you measure the ROI on an investment like that versus a traditional marketing strategy?
Well, we view that as a tactic in our broad reach marketing strategy. So we have a number of broad reach strategies, And the way we think about that is really what does it do to increase the aided and unaided awareness of Huntington? We know specifically the impact that awareness has on our acquisition capabilities. We also know what the awareness levels are in a number of the markets, all the markets that we operate or those that we would intend to operate. So by deploying these tactics, we can measure the impact that they ultimately have on awareness, which then drives really greater efficiency in all other marketing capabilities that follow.
Well, Brent, we really appreciate you joining us to highlight your better than expected Q1 earnings, but also to give me a chance to talk about golf, which I don't get to do on a regular basis.
We love doing that.
Really appreciate you joining us. Brant Standridge, the president of Consumer Regional Banking at Huntington National Bank. Coming up next, we've got the Disruptors. We'll be taking a closer look at Meta with some key new energy partnerships.
Connected to the markets, the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device.
Okay, we're flagging out again.
How's it going? First base.
Sometimes, you know,
Next. Try it again.
you could have done better.
Please.
I think it needs to happen.
Same goes for where you invest.
Boom!
Level up and invest smarter with Schwab.
Get up there.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the
we're at a
trends
struggle
driving
again.
the markets with a sharp focus on technology, innovation, and companies leading the
We're at
next wave
resistance,
of
triple
growth.
top.
Big
With
moves,
what? With wick.
real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
It's time now for the Disruptors. Welcome back to Trading 360. George Tillis, our senior markets correspondent, is here with today's company. We're talking about Meta, partnering with some energy companies to provide power for its continued AI build out. You know, a nice move we saw earlier, and now we've pretty much given back all those gains, and we're just ever so slightly in negative territory here for Meta. George, take us through this announcement.
Yeah, we're seeing a lot of volatility today at the beginning of the week with VIX actually rising last week with the markets. So with that said, it's probably going to be a choppy week considering we've got a lot of catalysts with earnings and the Fed. But nonetheless, you know, one of the constraints that everyone's really talking about with AI data centers is electricity. And so any additional supplies of electricity for whatever reasons are going to be accretive to businesses like hyperscalers and Meta platforms, and it looks like they secured a couple of solar contracts with a couple of alternative energy names called Overview as well as Moon Energy. So this is a positive catalyst for Meta platforms as well as these other two businesses. The other thing is we have to consider the earnings events that are coming up, including Meta platforms earnings on the 29th. They are expected to report around $6.82. On an adjusted basis. That's only higher by about 6.5% compared to last year. But their sales numbers at $55.5 billion are expected to be higher by 30%. So it looks like the numbers going into the report this Wednesday are inclusive of the high capex that, of course, Meta Platforms is deploying to build out their AI infrastructure. So for what it's worth, again, sales numbers continue to move to the upside.
but going forward, earnings are expected to grow around 18% for the full year. So it looks like this might be a low bar quarter for Meta Platforms that they're going to be reporting on Wednesday.
And I love reading these announcements. Sometimes I feel like I'm in a sci-fi movie, George, when I was reading through what Overview does. And they're going to have space-based solar platforms. So we'll be getting our solar energy orbitally as opposed to hooked to your house or in one of these solar farms. But just fascinating. Also, Meta had another headline I saw come across this morning that China has asked Meta to withdraw its acquisition transaction for Manus, that they're going to block it entirely, this $2 billion takeover of an AI startup in China. So, you know, another
I don't blame 'em.
interesting potential downside push.
We should be doing the same thing to them.
The bar may be lower for Meta this quarter, but we've seen Meta historically get more beat up than some of the Mag 7 names, most recently on that CapEx number, which then saw a nice move to the upside on CapEx here. But as you look to trade, knowing that we have earnings this week and the volatility we've seen post-earnings from this name, how would you structure a trade for Meta right now?
So this is going to be interesting. I think if you look at the CapEx numbers, Marley, they're between 115 and 135 billion this year. That's about 56% of sales. And you know, Meta's already talking about cutting expenses through labor. So we'll see if they actually increase that number. I don't necessarily think they will, but I could be wrong. But with that said, I'm going to structure a bullish trade going in earnings, but if you look at the volatility premium for this week's options, they're very expensive. So I'm going to structure a long call diagonal spread, and I'm basically going to sell the high implied volatility options that expire this week. I'm basically going to sell the 720 out of the money call. I'm going to use the proceeds, because those calls expire this week. I'm going to buy basically at the money monthly May contract that expires in 18 days at the 675 strike. So altogether, just keep in mind, we're selling this week's 720 call, buying the monthly 675 call. Altogether, it costs about $22 a share or $2,200 a contract. So the whole premise behind the trade is, if the stock goes higher above 720 this week, we just won't participate past that. Now, if it expires below that, the 720 will roll off, and of course, the monthly May contract at 675 will have effectively unlimited profitability, but your break even is 697, and you have at least 18 days to hit that number for that break even.
All right, and as we look at Meta in advance of those earnings, which we're going to get on the 29th here, we are at 673.38, down about 0.25% right now, but not a huge move, just down sort of along with the general markets here. George, appreciate you taking us through the latest on Meta for that earnings preview there, and also for the example trade. That's George Tillis. Coming up next, we've got our 360 round. We'll have the latest outlook for energy and oil with everything that's going on in Iran right now. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
You're at another resistance here if you bought the dip.
That could certainly be a short to near term.
But they're not going up much.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad.
Dad?
I have a question for you.
Sure.
When
You're
did
at
Granddad
resistance.
first start investing?
Granddad had an account with Schwab before there were branches in the area. We really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution. From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Had a stroke.
He was vulnerable.
Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim is my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Vulnerable.
Welcome back to Trading 360. I'm Marley Kate, and it's time now for our 360 round to take a closer look at energy and
cleavage.
Oil. But we do have some breaking news to cover quickly before I bring in our guests today. There are reports through two regional Iranian officials that Iran has submitted a deal to potentially end the war to the U.S. through Pakistan. The new deal, according to reports, says that the war will end if the U.S. will simply reopen the Strait of Hormuz.
Fuck
now,
them.
This new deal, which was reportedly handed through Pakistani mediators, postpones the nuclear negotiations for a later stage and does not address the ongoing issues with Israel. It is simply between the U.S. and Tehran, and it requests the Strait of Hormuz be opened. This, of course, all coming while the U.S. Navy has officially begun demining operations in the Strait of Hormuz to remove some of those mines that were reportedly placed there by Iran and to try to reopen those critical shipping lanes. We did also over the weekend see President Trump cancel some peace talks in Islamabad. So this is the latest reports as of about the start of this show, while we've been on air so far, that Iran has submitted a new potential peace deal to the United States. No comment yet from the U.S. government on their response to this. But I do want to welcome in our guest, Anthony Rappa, the co-chair of the International Trade Practice Group right now, to talk about this latest development in this situation. And if you think there's any possibility here, Anthony, that this deal could go through, knowing that it just pushes off the nuclear conversation, also doesn't deal with Israel at all.
So, good morning, Marley. Thank you for having me. And yeah, we've been following this latest development here at our firm. If there's at least a distinct possibility that the administration would be interested in taking Iran up on this offer, I think that what is unattractive to them is the notion of kicking the can down the road when it comes to the nuclear negotiations, which is really the whole point of all of this. But the administration may see this as perhaps, maybe at least a temporary pathway towards easing the conditions around the Strait of Hormuz at the moment.
And let's talk about those conditions. We've got the Strait of Hormuz, we've got damage to a lot of important facilities here. From your viewpoint, are we in the middle of a true energy crisis yet?
Well, we are in the midst of very significant strain on energy markets that are resulting from the closure of the Strait of Hormuz. I think that, perhaps it's not entirely clear how energy importers in Asia are managing at the moment. We know that so much of the traffic passing through the strait is intended for energy markets in Asia. It may be the case that certain Asian countries are beginning to draw down on their reserves. We know that the energy infrastructure within some of the Gulf states that have been hit by Iran, the energy infrastructure is suffering. In some cases, it could take a long time, maybe years, for it to be fully restored back to what it was before the war. We also know that at the same time, for example, Saudi Arabia...
UCAR's got a big bounce here.
...expanding pipeline capacity and looking at, perhaps over a longer time horizon, end runs around having to rely upon passage through the strait. So crisis, maybe borderline, substantial strain on markets, very much so.
All right, Anthony, I want to have another guest join us now. Bring Dr. Ariel Cohen, the Senior Fellow at the Atlantic Council and founder of International Market Analysis, into this conversation. Dr. Cohen, thanks for joining us today. As you look at this, you said in the notes that you sent over that every 10% move in oil, in your viewpoint, is essentially a geopolitical signal. So with what we're seeing right now, what is the market pricing in?
The market is pricing the oil crisis, and I would argue with the last tankers that were loaded before the war started being unloaded now in Europe and Asia, the scarcity of oil, 20% of the daily supply, around 20 million barrels a day, will drive the prices up. What is underpriced is the LNG, liquefied natural gas, that was coming out of Qatar and now is severely disrupted. And what the colleague just said, that the longer term solutions will be to bypass the Strait of Hormuz, but look what geography is dictating. It's going to the Red Sea, and in the Red Sea there is another factor that Iran is explicitly threatening to activate, the Houthis. And the Houthis have the attack capability, be it drones, be it missiles, to attack the terminal of the east-west pipeline that goes from the Saudi oil fields from Eastern Province to the Red Sea and try to disrupt loading of oil there. They have closed the Bab el-Mandeb Strait in the past, and they're threatening to do it again. They also can try in the future, theoretically, if Saudi builds a pipeline to the Mediterranean, to Israel or Syria, they may attack the Mediterranean terminals as well. So the conclusion is you have to deal with the regime in Iran to the point where they are incapable of producing nuclear weapons, building the ballistic missiles arsenal, or activating their proxies in the future.
And Anthony, Ariel just highlighted there that we have potential issues beyond just the Strait of Hormuz, that there are some concerns in the Red Sea here. So to try to backfill some of this supply and all the disruption we've already seen, we are seeing the administration ease sanctions. How much and how effective are moves like that going to be in the overall grand scheme of things?
Yeah, I think the effectiveness is maybe a little, it's a little hard to gauge, and there may not exactly be a straight pathway from this sanctions relief to, you know, full replacement of what has been taken offline as a result of the war. But specifically what the administration has done in recent months, it has worked as rapidly as possible with respect to Venezuela in particular to try to ease sanctions that have been directed against the government of Venezuela, to bring a lot of their production back online. The latest statistics show they are now up over 1 million barrels per day. A lot of that, according to reports, was headed for refineries in India and also for storage in the Caribbean. To a lesser extent, the administration has issued some authorizations in connection with the Russian oil that is already on the water. They have renewed that a couple of times. That's going to remain in effect through mid-May. They've also targeted certain things that are downstream of these stresses on the oil market. So, for example, the administration has lifted sanctions on Belarusian origin fertilizer. Belarus is a major producer of fertilizer, and now those sanctions essentially have been lifted. Again, as I had mentioned, it's maybe hard to square all of that exactly with complete easing or satisfaction of all of the strain that has resulted from the war and the closure of the strait. But at least on the sanctions side, they have tried to push these levers to try to bring things back online that had been offline for a long period of time.
All right, well, as we look at prices here, Brent north of 108 right now, oil standing at 96.67 a barrel. Really appreciate you both joining us today, Dr. Ariel Cohen from the Atlantic Council and founder of International Market Analysis, and Anthony Rappa, the co-chair of International Trade Practice Group. I also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store, but don't go anywhere. Fast Market with Diane King Hall is coming up next.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up her college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Just
somebody need a match?
Schwab.
Invest your way with Schwab. Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing. We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you in chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in.
There we go.
Pace.
Boom.
Webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences.
We're back at another resistance.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Free. I think I'm going to get out.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Come on, give me just a little bit more. 200 here. I mean, that's a hard resistance. I just don't. Damn it. They're not moving like they should. And this would get a big break. There's a negative flag. Ugh. Right back at support.
All right, welcome to Fast Market right here on Schwab Network. I'm Nicole Petalides. It's noon. We are live on the floor of the New York Stock Exchange and so glad that you are with us. I'm in for my friend Diane King Hall. We're seeing markets here for the Dow, for example. We went from positive to negative. A lot of back and forth action here on Wall Street after some records last week. The S&P 500 right now is down about 14 points at 71.51. The Dow Jones Industrial Average squeezing out a gain, up 6 at 49,237. The Nasdaq 100 is down 1/4% at 27,232, and the Russell's really flat at the moment. We have a big show for you today. Here's a roadmap for what we'll be looking at. We'll look at example options trades for General Motors, right? And that's reporting this week. Then the team from Lightfolio will look at the latest sentiment data for Spotify. And we'll break down Coca-Cola ahead of its earnings that are due out tomorrow morning. And of course, we're going to have all of those mega cap names that are reporting this week. Now, for this roadmap in today's trading action, I bring in my co-hosts, Tom
We got to break the V-block.
Chicago studio, and Kevin Hanks live at the CBOE, and it's great to
We got
see
cleavage?
you both. So
No.
look at this market. We see the back and forth action. We've had
Damn it.
4 weeks of gains for the S&P and the Nasdaq. Tom, what do you think? I mean, we have a huge week of earnings and all kinds of news that we have to, really dive into every day. Tom, your thoughts?
Yeah, I think maybe a little consolidation warranted after, the S&P 500 and NASDAQ 100 rallied to, settle at record highs on Friday. And you start taking a look at some of the, reasons behind that, right? We're kind of pushing aside the geopolitical headlines, pushing aside the fact that, hey, crude's up another 2%, and you're $96 a barrel, and the market doesn't really care. You start
focusing on earnings, and that's what's been driving the rally. You saw that move in Intel last Friday up nearly 24%. You're seeing the SOX, the Philly Semiconductor Index, 18 sessions of gains in a row. It's pulling back about 1.9% today. But that's been the driver. It's been a few of the big names that have been driving the markets. NVIDIA settled at record highs, didn't hit an intraday all-time high, but settled at a record high on Friday. So I think it's just a continuation that investors are thinking that we're going to get through this geopolitical risk, the tensions that are out there, that we're going to get a deal done soon, and they're focusing more on what we've seen out of earnings. And that's kind of been the driver, I think, for this next leg up. Now, you start looking at valuations in the S&P 500, they're getting pretty extended at this point. But now, we've got a lot of earnings this week that could trigger another leg up or maybe a pullback. So there's a lot to kind of go over, this week, as far as economic data, earnings that could drive markets, and then those geopolitical headlines, if anything positive comes out, because it seems like the market's just pushing aside any of the headwinds that are created from the conflict in the Middle East.
Yeah, this as oil's at $96. We had an 8 handle. Last week there was a lot of maybe, look that we were going to have our team go to Islamabad, and that was canceled on Saturday. The president did not send the team. I guess they're talking by phone, and the ceasefire continues. So we'll have to wait and see on that. Kevin, some of your thoughts on the action?
This is going to be a big week for the markets.
It is.
And it's already, we look at the future and the next couple of days, and it's going to be incredible. But still today, it's still headlines that are taking over this market. Crude oil is higher. Many of the other trades for crude and energy are all higher today. Why? Because the weekend didn't go like we thought. Now they're starting to creep some headlines out, and what we're really learning is there are headlines that Iran is saying and the U.S. are saying, and then there's behind-the-scenes negotiations. Now Vladimir Putin appears to be involved, so there's still a lot of geopolitics driving these markets. But as the week goes on, we're going to get something for everyone. Wednesday is going to be a day where you're going to deal with the Fed. You're going to deal with a Senate Banking Committee vote on Kevin Warsh. You're going to deal with a Jerome Powell press conference. You're going to deal with 4 of the Magnificent 7 earnings after the bell. It's going to be a pretty incredible day. The day after that, it'll be a lot of economic data. 181 S&P names with earnings, 32 NASDAQ names coming out with earnings. So it's going to be a massive week. I still think, Nicole and Tom, at the end of the week, what we're going to be talking about? We're going to be talking about Iran and crude oil, and we're going to talk about CapEx spending. Trying to predict what the end of the week will bring, I think it'll be those 3 things. We'll still be dealing with geopolitics in Iran, but CapEx is going to creep back into the conversation, guys.
I think it's interesting that Iran's saying it'll offer to end the chokehold if the U.S. ends the blockade. Now, President Trump had said, we're not ending the blockade until we have an agreement that you will not enrich uranium and make nuclear weapons, Tom, right? So Iran's sort of changing the parameters here of what President Trump was saying originally, of what he would want.
Yeah, I think you put it into the context where there is going to be no deal whatsoever if Iran has control over the Straits of Hormuz and the international waters there. And that's going to be the sticking point, because Iran thinks they're going to be able to, create this, toll system. That's never going to
I'm back at 165.
With the administration. At
170, let's go.
That are leaving U.S. ports, going to Japan. Others are coming here to fill up, to take back
get out the
their
trade for
refineries.
one.
From the context of where the U.S. sits, they're kind of, holding all the cards as far as the administration says. And
is the Iran hitting the algorithms? Okay. Now, anybody in this trade with Bobo? Anybody in the trade with Bobo? Okay. Jimmy's getting out. I hit my resistance. We were all wondering, how's he do it? Because he's at 190, 195. There it is, 195. I tried my best, and then I told her no. You cannot marry me. My mom tried to fix me up with an old hillbilly yesterday. I said, God, Mom, she does. Come on, what the hell's wrong with you? But we've been piss in our lawn. But we want peace. No, do not enter calls. Not when I'm getting out of calls. What's wrong with you? My name is Washboardjim. Victory, that is my battle cry. Okay. Say la ti da. Say la ti da for me. We're at 190 now, 195. Jim, did you sell them too early? I think I did. It was added. It was added. It was added. $2. Go, God. No. Okay. Do 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 do. Okay. Damn it. 210. That's it. I mean, I'm okay, but I could have got squeezed out a little bit more, 20 more cents, $200 more. We came back and we hit that shoulder line. Oh, darn, 215 now. Okay. It's all right. Rub it in, rub it in. Rub it in, rub it in. 220. Yeah. Woo, 220. 220. $220. Okay. 220. $240. You know what? You're a maniac. Okay. 235. Well, shoot, I wish I'd held that a little longer.
This is Schwab Network.
There's like $500 left on the table.
Welcome back to Fast Market right here on Schwab Network. We're watching General Motors set to report its earnings tomorrow before the bell. The street is expecting adjusted earnings per share of $2.61 on revenue of $43.94 billion, both slightly lower than 1 year ago. GM stock is up more than 60% in the last 12 months, but down
a little overdone
from the 52-week highs that it hit in February, on February 4th. All right, so let's welcome back in our team, our co-hosts, Tom
Always
Wayne
clean as
and
Jim.
Kevin Hanks. So let's talk about GM. We're going to hear from Mary Barra on the team tomorrow from GM.
Hello?
Hi, this is Melissa with Medicare Support. I'm reaching out because we're reviewing Medicare members in your state for new benefits you might not be aware of.
I have to put that out there first. But this is a company that's been slowly but surely transforming itself towards EVs, now away from EVs. But the key thing, I think, that is going to surprise people is they are developing recurring revenue streams. OnStar and Super Cruise, they're now subscriptions, and those could bring in a significant amount of money, and they've got extremely high margins. We all know that GM over the years has gone from many brands to a small amount of brands, and they've really cleaned up that. And they're winding down, and they've already taken the charges from EVs to kind of back that up slightly. But this is a company now that is going to look a little different than it has. And oh, by the way, don't forget, they've had talks with the Pentagon about military production for the government and the Pentagon. So you've got that way that they could be earning more money. So all those things together, auto demand, wholesale prices, that you look for the health of their industry, and potentially recurring revenue from subscriptions and military could make up for a pretty solid earnings event coming up from GM. Nicole and Tom.
Yeah, we saw what working with the administration is like, right? For Intel, for example. Let's talk about this, Tom. Your thoughts on General Motors.
Yeah, you look at what they've done the past few quarters. It's inventory control. They've pivoted away from EVs back to the internal combustion engines, the ICE engines, and then also starting to come out with new models in the hybrid scale that have worked so well for Toyota and some of the other manufacturers here. So pretty decent free cash flow, $25 billion over the last couple of years because of their cost cutting and the demand, right? They're taking a little bit of market share from their competitors. They've increased their margins a little bit. That's why you saw the stock hit 25-year highs at the beginning of the year. In January, we pulled back a little bit, about 11% from those levels, but it's been a good run. Mary Barra has been doing a good job as far as, pivoting away from maybe spending all this money, even though they had to take a couple of hits from the last couple of quarters as far as divesting that portions of their EV business and pivoting back to the ICE vehicles and hybrids. Wall Street didn't seem to mind too much that they had to take some charge-offs on that part of their business because they're taking market share away from Ford, Stellantis, and some of the others.
All right. What do you think now? Should we get some example trades here? How about, Kevin, you start us off?
Okay, Tom mentioned that this stock traded as high as $87 a short time ago. Basically in February of this year. It has sold off since then. So when I looked at something, it's not a big premium name, but it is trading with a little bit of difference between the front implied volatility, which is an 80, and then 56 in the May 8th, and then the May 15th is a 51. So I went with a 2-week call calendar. So I bought the May 15th, 82 calls. I looked at the expected move. It's about 470. We'll round that to about $5. And I looked at the 82 strike. Bought the May 15th 82 call, sold this week's May 1st 82 call. I did that 2-week.
AMD bounced and hit the 200. We got a double top on NVIDIA. Triple bottom this morning. Triple bottom on Meta right now.
Of the 73 strike puts
Butterfly
to go, and then by one of
Put.
the 71 strike puts. You're paying roughly about $1.60 debit for that. Probably get it for $1.50 right now. The debit you pay is
What
going
one?
to be risk.
May 1st.
$160 if you pay $1.60, $150 if you pay $1.50. But it takes
70
you even on this one down
Well, when
below
is it?
the
May 1st.
77, about 77.40 or 76.40
Butterfly.
on this one to the downside. So on a percentage basis, Kevin, well within that one standard deviation move to get to the break even to the downside on this one. But you're shooting for that one standard deviation move to the downside for the apex of
What day?
profitability, right?
May 1st.
Yeah, this is one, and again, the key thing for our viewers to notice here is my target
Put.
strike about $4.5, $5
This is
higher.
78.
Times
His are
target
different.
strike, the 73 strike about $4.5, $5 lower. That's the
Yeah,
key to
lot
using
lower.
the Thinkorswim platform to do the math for you. It gives you the expected move. That's what he's looking at. Now he did it in the butterfly, but he unbalanced it. So if it does move past that one standard deviation move, he's still locked in terms of profitability as long as he gets the direction right. His direction's to the downside, mine's to the upside, Nicole. So this is the way that the platform helps you with your strike selection. It gives you that expected move. Then you can build the strategy that fits, either bullish or bearish, Nicole.
All right, I like that bull bear. Meantime, I was looking at the year-to-date numbers, and it turns out GM is down 4.7%, but Stellantis is worse. That's down 26%. But you know what the winner is? Ford.
No.
Ford is up 24% when you look at our sort of big three automakers. Okay, thank you for that,
Ford.
gentlemen, Tom and Kevin.
Ford.
Up next, it's time for cash tags, and the team from Likefolio is standing by,
Damn,
joining us.
Amazon
for
took off.
data on Spotify ahead of the company's earnings that are due out tomorrow. Fast Market will be right back.
Tesla hit my resistance just now.
I'm Sam Vardas, live from the New York Stock Exchange when the
Sammy.
market is where on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out that I wasn't middle class. I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem.
Wrestled around.
This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
No politics, no spin, just the market from
Wrestled
and beyond.
around.
Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been.
Schwab helped you have children? Did you get impregnated?
That can help me give my family a happy financial future.
Schwab had sex with you? That's gross.
Welcome back to Fast Market right here on Schwab Network. I'm Nicole Petalides alongside Tom White there in Chicago, and it is time for
Tom looking a little straggled.
And for that, we bring in
Not looking too good, Tom.
Founder of Likefolio, and I know you're taking a close look at Spotify.
Wake up.
It has the earnings tomorrow. We have lots of data. We know 290 million premium subscribers for this company. Also, a recent announcement.
Prison guy was sleeping.
With the partnership with.
I mean, he looks tired. He was sleeping there a little bit ago.
Spotify has for a really long time. This is a stock that we've been on.
Did you ever get any sleep?
While, and the driver is simply consumer demand. Spotify simply wins over and over. They're on 2,000 plus devices. They're everywhere.
Who? Spotify?
And have become, kind of a staple of listening to music and listening to audiobooks.
Man, I don't listen to them.
In North America.
I got this thing called a CD.
So, our data is showing that Spotify consumer demand continues to grow.
I'm going to pick a song out of my CDs today.
And
see if we can find it on the internet.
To me is the mind share that Spotify has, or the amount of that music on
CB
devices and on their platforms compared to Apple Music, compared to Sirius, compared to Pandora. Spotify is just dominant all around, and you combine this.
Marvel had that big run last week.
In consumer demand, with the fact that they were able to raise prices without meaningful churn and increase profit margins at the same time, and that's the type of recipe we like on a stock that's down 30+% from its highs last year. So, Wall Street has taken a pause and reevaluated the company. But the consumer is absolutely hooked on Spotify, and that's not changing anytime soon. We really like what we're seeing from the company on the consumer demand side of things.
Yeah, and you see that chart that you had 73% on that consumer demand volume compare, but your other chart's the one that always sticks out to me when I see those big divergences. And you mentioned it. I mean, this stock's down over 30% from those all-time highs, and it kind of followed Netflix when it was getting hit even before they were trying to buy Warner Brothers Discovery. So it seemed like a lot of these, the leaders in their spaces, and I compare Spotify to Netflix as far as streaming goes, that maybe this divergence that's been caused is maybe a red flag that, hey, you know what? They're not losing market share. They're actually taking market share from their competitors.
Yeah, I think it's very clear they continue to take market share. It's not just market share, they continue to grow the mind share that they have with the consumer. So people on Spotify platforms listen to Spotify more and more, whether it's music, whether it's audiobooks, whether it's podcasts. Spotify's just really figured out
Dadgummit, now they're $2.75.
Share of wallet. We see that continuing well into the future. This is a company that executes at a very, very high level. To think, 5 or 6 years ago, the narrative on Spotify was, but what about Apple? What about Apple Music? They've got all the distribution. Well, Spotify overcame that and then some. And so they put Apple in their place. And, now we think they're going to put Wall Street in their place because this move downward, they got sold off with all of the high PE companies, a lot of the software stocks. We think it's overdone, and the consumer continues to flock to Spotify, and that will show up in the results, we believe.
We don't want to listen to you pump your Spotify.
I mean, the others even...
It's up too much. How dare you? Here's a band I used to play with.
Now you do. Smart deals, low prices. PetSmart, anything for pets.
Day 57 of wearing hollow compression socks. Here's what nobody tells you. I am wearing hollow compression socks every single day. I started this as an experiment.
I'm in love. I'm in love. That would have been a great trade if I'd have kept it. I think a real good trade. We're in love, family, little boy. With a delivery boy. Woo! Mike West, Truck Stop Honeymoon from New Orleans. I'm in love. Truck Stop boy. Two for Tuesday, and it's Monday.
Making out in the booth. Waitress took our order, 2 eggs scrambled, cold grits, hash browns scattered, smothered. Is that all? Yeah, that's it. Maybe it was the coffee, maybe the half and half. All your lines were working on me, all your jokes that made me laugh. When you said you liked me, knew it was the truth. We got thrown out of the Waffle House, making out. Some Otis and some grain. We didn't even notice the waitress clear them plates away. And your hair smelled of fried bacon as your lips they touched mine. And the coffee refills
Microsoft
flowing like wine. When you said you liked me, I knew it was the truth. We got thrown out of the
Hey, hey.
And we pleaded, but she would not let us stay. Now the thing about the Waffle House, that they're the same everywhere. It don't no matter where you go, they all got that special atmosphere.
I don't know what keeps us coming back when it's sore in the food. Maybe our that yellow upholstery just puts us in the mood.
When you say you like me, I know it is the truth. We get thrown out of the Waffle House.
Out in the booth, yeah. You ever made out in the Waffle House booth?
Out of the Waffle House.
Making out in the booth. I made out in the Waffle House booth. Sure did. You can't tell me you've never made out in a Waffle House booth. Come on. Well, I did get... Admit it. These things went to $2.90. I want to shit my britches twice. Gosh. I had an average, a real good average of around 160. And they went to, and I had 10 contracts, and they went to 290. That's approximately $1,300 profit. Do you understand? It could have been. Damn it. Spink. Sick. This Truck Stop Honeymoon. The album that I played live with. Not on the C. I'm not on the CD, but I percussioned it. And this one's the one. I don't think it's on the CD, but this one I drove to Richmond, Virginia. Recorded on that one, called The Shiners. One more song and I'll be done for the day. Now, there's a band here called the Dillards. They were on the indie. Oh, I met Mrs. Beadle yesterday from the house on the Little House on the Prairie. Miss Beadle. If you remember her, she was a school teacher. But this song I played live with mini bands. Dooley, and we'll play it with the original band. Dooley, Dooley, Dooley. Dooley, 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 pay back someday. Dale Dooley died. Dooley, Dooley, Dooley. Dooley.
Dear Friday.
Okay. Well, Marvell and Microsoft MSFT needs to break resistance here at 425. Nicole Paratidis. I love you. Every time I look at you, I lick my lips. Tesla new high. I'm gonna go into the kitchen and make my afternoon cider. We got AMD at the 200 squeezing. AMD at the 200 squeezing. Nike's at 45.08. Oh boy. I just don't even look at SPX anymore after that. That was a tough trade. I was in that thing for quite a bit. Longer than I wanted to be. Oh boy. Uh-oh. Jimmy's mic's on. I don't even look at SPX anymore after... Man of many talents. That is correct. FIFA Binger on YouTube. Can't believe it, $290, man. That's $1,000 I left on the table. Left $1,000 on the table. Oh. Iran peace talks. Equity decline amid stalled Iran peace talks. Well, didn't you just hear the news here? They want to make peace. They want to open up Hormuz so they can get some bombs in there. From Russia and China. Google new high. We got earnings coming out on Google this week. So let's look at Google. Is Jimmy going to say it's overbought? What do you think? I think he's going to say it. We'll start off with a weekly time frame. Well, we broke resistance of $349. So we need to put a support at $349. The alert will be set at $349.85. And I'm going to go in the Dare and do my dishes here in a second. And we got Amazon, AMZN. The weekly. 4 white soldiers. So we'll go back to the wick and set the alert at 258. Man, it's a pretty trade. Snake, breakout, pullback, boom. Sometimes ignorance.
Welcome to Next Gen Investing and happy Monday. I am Jenny Horn alongside Alex Coffey, and we check in on markets here looking pretty tame, and I know it hasn't felt that way, all things considered, but we're pretty much now unchanged in most of our major averages, with some of that pressure leaning a bit towards the downside here, down 0.2% in the S&Ps. The Dow's the standout, trying to see some positive territory on the day. Nasdaq also pulling back about 0.2% in the Russell 2000. Again, I'd call it unchanged at this point, but slightly lower here as we assess a busy week expected for earnings as well as the Fed. We get further Fed clarity on Wednesday, and we also get about 30 to 35% of the S&P 500 companies.
Oh wow, bounced right up to 63.
Yeah, and Wednesday, I mean, if you
Netflix is still down. So let me go over their earnings. Where are you? There are 5 that are important to me. We got Amazon, did that, Google and Meta, Microsoft and Apple. Mister, I got at 164.55. Apple's below support. Very interesting. Very interesting. I'm gonna go get my tea and I'll be right back. Very interesting. It's had already a good run too. Jenny Horny.
As well as Cadence Design Systems, both with earnings out after the close today. For promo today, we'll dive into a Mizuho note on CrowdStrike with at least some optimism and an upgrade on CrowdStrike. Name reports later in the earnings cycle, but some analyst conviction on CrowdStrike nonetheless. We'll also dive into
CRWD
we got from Domino's Pizza with a bit of a lackluster move, as well as then Snap, also with at least some analyst, not favorability, but
Snap earnings coming up
from Rothschild and Redburn Co. with an upgrade to buy. And Snap actually has been pretty favorable, at least throughout today's session. Doesn't really look that way when you zoom out, though.
Yeah, no, it really doesn't. And just because today doesn't feel quite as impactful as maybe the rest of the week will be, doesn't mean that we're not going to see some movement, especially among some of these individual stock movers, of which Qualcomm's already moved quite a bit here today. Earlier, this was like the story of the session. I covered it with Marley around 10 a.m. Saturday, 11 a.m. on Wall Street. And it was like there was no story anymore. Stock was down. What's going on here? I know it's recovering again. It's trying to move higher. But this was setting up to be like a big market story, and now it looks like it's nothing.
I know, we were up almost 10% pre-market this morning, and so it did seem like when we were making that big of a climb that we were finally starting to see more and more encouragement regarding that AI
profit takers
that has been not really beneficial to a name like Qualcomm, although they have come back considerably from 52-week lows. But this was on the result of this news we got from an article posted on X from TF International Securities, an analyst who wrote that Qualcomm is working with OpenAI to develop smartphone chips. And then, of course, MediaTek, who's the Taiwanese chip maker, will also be developing the processors for OpenAI with Chinese electronic manufacturers that will work exclusively with ChatGPT in terms of OpenAI, really, on co-designing and manufacturing all of their various systems. And so, as co-development partners, they did note that Qualcomm and MediaTek will likely benefit from the long-term replacement demand, referring to users choosing new devices over, say, these modern smartphones. In the near term, they did say the smartphones remain relatively the largest scale device category, but perhaps this was not really read through as such meaningful news, again, with a 10% spike that we've given back. I know that we're at least outperforming today, but because it was one outlet reporting, we haven't really gotten confirmation on that collaboration, at least from Qualcomm themselves.
Yeah, there's been no confirmation that I've seen either, but you see the fallout. The fallout was, hey, the worst performer in the SOX index is finally getting maybe some good news. Big rally pre-market as indicated by QCOM's quotes. You see the initial spike lower in Apple, which is, okay, maybe their moat in this space is challenged a little bit. And then the market opens, no further news on this, Qualcomm fades. Apple's tried to rally a bit, but Apple's still lower too. So it's a situation where the good news has faded, but the bad news kind of still exists there, which is, yeah, it's going to help Qualcomm maybe, but it's still struggling. And, oh, Apple, your position in the space, maybe it's challenged a little bit, or at least there's some digging around for companies trying to figure out how to challenge you.
Yeah, that is absolutely true. And unfortunately, I know that the push lately for a name like Qualcomm has been definitely all things hardware, but I think that the chart speaks to the fact that not even hardware has been immune to some of the repricing for names that have not really shown the ability to monetize AI as quickly as perhaps the street is hoping for. But
well, in that case too, it's almost as if it's been seen, and maybe it's accurate, that we've seen investment shift and consumer demand shift away from electronics towards some of this stuff that's more AI driven. And so naturally, sort of the business investment has too. And so companies are just probably not building as much consumer electronic stuff right now, which is going to weigh on a company that's exposed to that. See Qualcomm a lot more than it's going to be some of these memory names that have really just gone to the moon.
Yeah, that is also a good point there, which also speaks to our next story, which is Microsoft and OpenAI actually no longer having this exclusive partnership. A change that did push Microsoft shares lower, but I would call it relatively unchanged here in real time. But giving now, the result of this is giving more companies freedom as they each work to expand their individual AI products. And it does come, of course, ahead of OpenAI's, and I expected at least, IPO. So in a blog post, both OpenAI and Microsoft said they had amended their agreement. Microsoft, which is a longtime investor of OpenAI, will still license OpenAI models and products through at least the year 2032, but that arrangement will no longer be exclusive. OpenAI will also, on the other hand, still very much rely on Microsoft, which is its primary cloud provider, but not as its exclusive provider. It can now strike deals with its competition, like AWS and Google Cloud, but Microsoft will stop paying a revenue share to OpenAI as a result. Revenue share payments to Microsoft from OpenAI will stop after 2030, but are subject to a total cap. And so many have said that this is not surprising. A Piper Sandler analyst actually threw in his input saying this update is really the accumulation of many announcements Microsoft and OpenAI have made over the past several months. And so, for example, like we know that at least as of last July, OpenAI was gearing up to add Google Cloud services to meet its growing need for compute capacity. They did say that they were we got like confirmation basically directly from Alphabet themselves saying on their earnings call that they were partnering with them for Google Cloud. And so this has been months in the making, many say, but again, Microsoft does have its own partnership with OpenAI's one of its greatest competition, Anthropic. And so you could say on both sort of sides of the debate here that you're seeing more and more of this expansion as these companies seek further infrastructure needs, frankly.
You know, I always love to, whenever something like this happens, to go to Wedbush's Dan Ives, because I know I'm going to get the silver lining. I'm going to find the rose-colored look here, and no surprise. It's good to get this ongoing partnership limbo now in the rearview mirror, as we view this as a net positive for Microsoft, and then he goes on to talk about some of the other details. But initially was certainly not seen that way as the stock moved lower, but maybe there's some credence to what Mr. Ives and the team at Wedbush are saying as the stocks work back towards unchanged.
Yeah, and that's a good point also, the fact that we've been able to erase some of those losses here despite the raw market not really giving much aid to that price performance today. But our next name today was one of our big movers up last week. That is AMD, which is now down about 4% here today, still up 64% for the month of April. So still holding on to, I mean, what has been a phenomenal run for AMD shares, but so much of that enthusiasm last week tied to the blowout results from Intel, of course. Today, with a downgrade, though, from Northland to market perform from outperform with a $260 price target. So obviously, well below where we're currently trading at $334 a share. Now, they did say that with Intel catching up to AMD and Taiwan Semi partnering with NVIDIA for AI infrastructure and PCs, they do believe that competition right now limits their gross margin expansion, as R&D spend will likely remain elevated for AMD for the coming midterm. They did state that while AMD is a phenomenal company, they do contend that calendar year 2027 consensus is likely too high at these current levels. And so we do get earnings from them next Tuesday after the closing bell. That will be, I think, definitely a tone shift or tone setter if they're able to continue to acknowledge some upside that we saw from, say, like Intel, or if they're seeing some more headwinds of their own, because obviously these companies comparable, but I was making the case on Friday, they are slightly different because they do not have their own foundry or their own ability to manufacture their own chips.
You know, this company, or this stock, I should say, in the next, like, hours could still fall another, it could double this loss. And I don't know that any technical damage is really done. That's how powerful this rally's been, kind of culminating in the move that you saw on Friday. So maybe just natural, you know, repricing and sort of an easing. But I will say, I give all the credit in the world to the analysts that want to step out on the ledge and make these kind of decisions and these kind of calls. But they are not, you know, they're not necessarily the ones that have been profitable over the last few years. Kind of stepping out and saying, hey, valuation, yada, yada, overpriced. The market has not cared about that one bit for 3 years.
At least not for the names that have like the various, I would say, TPU, CPU, GPU exposure, or anything tied to memory. I feel like that has been still like the trade that has held up so relatively well. And I know today we are lower substantially, again, coming off of one of the strongest weeks we've seen from a lot of these semiconductor names in quite some time. And the stocks index even was posting its 18th consecutive gain, at least as of last Friday, but I believe a bit lower here today to break that nice winning streak. But last name today here is Adobe. Adobe also with a downgrade from Mizuho to neutral from outperform with a price target that was trimmed to 270 from 315. The analyst has become more cautious on Adobe amid competitive threats from AI, which I feel like has been the entire theme of any note we've seen on Adobe as of late. They did say Adobe faces intense competition in the prosumer and small business segments, which threatens that its long-term terminal value. They also went on to say there's no clear catalyst for the stock, and they see this risk of margin erosion. And their organic revenue growth over the next 2 to 3 years is, in their opinion, the high single digits at best. So Adobe also reports later in the earnings cycle on June 15th after the close, but this name is a great example of where we've not seen that AI halo effect really take hold for years now in Adobe.
Yeah, this is Greg Moskowitz over at Mizuho. Same analyst actually that upgraded CrowdStrike today, and that's going to be our subject of discussion for FOMO later on. So a little bit of a teaser for what's to come. But sometimes these analysts set up narratives and they kind of give you tomorrow's news today. This to me kind of reads like yesterday's news today. I mean, this is kind of what we've been saying for a year and a half now with some of these names.
I know, I think some of these calls are interesting. It's like, where have you been as far as like falling asleep at the wheel here? But at least adjusting a price target that was substantially lower from 315 again, but still does imply, I mean, $30 of upside roughly from where we're currently trading, and Adobe shares down about 2% here on at the session. So still lower this year, and still not really looking like we're caught up in any of that AI frenzy for the month, as we're down by about 1% this month. And
last thing I want to say about this, I think it's kind of interesting. And so this may go to show kind of the bullish, I guess, bias, but for maybe good reasons, kind of how the market performs over time. You read this analyst, I'll summarize. It was basically like, hey, we see a bunch of competition. We have very little confidence in the growth. We think it's going to be this at best, which would be disappointing for a software company. And this is a situation where there's no clear catalyst right now to get you excited. And we still see over 10% upside in the next year. Like, where's that coming from?
Right.
If it's just general market.
Then you must be a bull in the overall market, yeah, because I can't imagine, based on Adobe's performance, especially on the back of earnings, that we'd have to see like a major catalyst to see, $30 of upside. But I mean, I guess I appreciate the cautiously optimistic take, although that's not really how some of the headline depiction of this analyst note did seem. But nonetheless, Adobe shares have pulled back about 2% at least today. Now we'll leave it here for the top of our show today, but coming up next, we'll dive into two names with earnings out after the closing bell today, Celestica and Cadence Design Systems. Both names looking higher on a month-to-date basis and actually higher on the year, but earnings obviously will be a key catalyst that we'll be keeping on our radar.
I'll send him one more message. I love you, buddy. Life is good. Yep. How can you hold a grudge for someone? I don't even remember him asking for that. I really don't. I think I would really remember something like that. Maybe a car, maybe it could be $1,000 or something. I would get one if I had it.
Stay connected to what moves markets.
Randy a truck.
Download the Schwab
Plus a
Network
lot of
app
shit, a lot of
and
money.
stream live coverage wherever you are.
I used to give them
Sir,
$100 both
this
as
place
Randy
is
and Cody when
incredible.
they come down.
That's where I get all your office supplies.
$100 bill.
Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now.
No shit.
Invest your way. with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Get back.
Welcome
Watching
back
the
to
market,
Next Gen
talking to
Investing. It's
people.
now time for the chart master, and joining us, of course, is Rick Ducat to help us break down some key technicals and two names with earnings out after the close. So we are looking at Celestica as well as Cadence Design. We'll start off with what has been the better performer of the two, at least on a year-to-date and month-to-date basis, which is Celestica, which is up now about 46% this month. And so not one that is ever on our radar frequently, but going into earnings today here, Rick, what are you watching for?
Yes, one of these charts with a few key phases that are easily to see. We had our rally here, we had our period of consolidation that gave us this range between here at about 265 and here roughly at about 350 or 351 or so. From there, we have started to rally. We had our downward sloping trend line in blue that was broken. Now we have recently topped out here 422.89. So today's price activity, not too terribly much of a change since yesterday's close, despite making new intraday highs. So we'll have to wait and see what happens with the fallout from earnings, be that as it may. So now we can see that our blue 5-day exponential moving average here comes in at about 403, a short-term boundary, roughly lining up with our lows today. You could also see our 21-day EMA 361.47 being a further supported area if things do start to travel downward. RSI moderated somewhat, but kind of interestingly still in the overbought area. Oftentimes momentum trails off as we head into these earnings situations here, but still remaining fairly high. Anything above 70 is usually regarded as being a rather notable rating here. We are making somewhat lower highs here, but still look for the crossover back below the 70 area to suggest more of a bearish signal. Now we can also see that our volume profile study shows that we have had a small clump of trading activity here right around 400 or so, 400, 405, but really things pick up much more noticeably down here around 340 to 328, kind of matching up with these old highs that we established here. Things drop off a little bit in between that area and then pick up again at about 312. So this is much more heavy trading, relatively speaking here, but the point of control, the heaviest area of all the way down here near 120. So these would be the noteworthy areas that are much more relevant to current price.
Okay, yeah, and definitely we'll be watching this earnings event because this is not, again, one that's frequently on our radar, but is at least outperforming the overall market today ever so slightly. So now as we do things through trading this name for example purposes, of course, Alex, walk us through your thinking, considering we've been on a pretty nice run this month and this year.
No doubt about it. Kind of going with the trend, looking at some of the expectations for volatility around an earnings event. I looked at selling a neutral to bullish short credit spread, or put vertical below the market. Goes out to the end of this week, which is the May 1st expiration. And looked at the 360, 357.5, which was kind of down by where those moving averages for the 1 month were. It's 360, 357.5, looking to collect 50 cents. So it creates a 4-to-1 risk reward. First thing you should see then is that this is on the higher probability of success side of things, quite a bit out of the money. 4-to-1, so you're risking 200, chance to make 50, break even. Take 50 cents away from 360, you're left with 359.50. So it would take a pretty big move to get into this be in the money or challenge. But we know we got a lot of volatility priced in this week around an event, certainly in play, and that's why it still has value.
Yeah, and I think a good summation there of way to obviously lean into some of the more neutral to bullish activity. But now to shift gears and look at our next name today, which is Cadence Design Systems, also with earnings out after the close today. This name looking still pretty strong over the course of the month. We've gained 21% month to date. Now we're up about 7.5% on the year, and so walk us through what we're seeing here, because it's been a pretty long-term downtrend, unfortunately, for this name when you zoom out and look at the big picture.
Right, so things kind of started to go poorly back here. We had our old high point, 376.45. From there, even though we did make a higher close, we did not take out the old intraday highs. This gives us kind of this double top area near 370, 375 or so to keep track of. Then we started to decline. We could draw a successively lower connection here going across all our highs. Then finally here we had a gap that began at 288 that took us back above many of these high points. However, now we find ourselves just a bit short of here, 340 roughly. So that's the relevant area to watch to the upside going forward. Meanwhile, these lower highs near 328, that's around where we found a bit of consolidation. So that would be a short-term area to watch out for. Also 310 to the downside. Old highs becoming prior lows, and a common situation that we see in trading. So now if we look at our moving averages, 5-day EMA in dark blue comes in near 327. So that lines up roughly with our trend line as well to give us a confluence point for potential breakdowns. But also look here at our long-term yearly 250 one-day EMA coinciding with our monthly in teal. Those come together right around 306 to 307, so that gives us another notable supportive area to be on the lookout for if things do go awry. We can also see that our RSI study, our measure of momentum, still trending upward, but not making a higher close relative to our last one here. So it's a small amount of some divergence here. Price made a higher close, RSI is not doing so. A bit of a mismatch in the momentum. Again, pretty common as we head into an earnings event though. Now we can see that our volume profile study shows that we have a node around 350 or so. The next notable trading activity to the downside is where we saw a bit of chopping consolidation. 320 roughly is our point of control, the heaviest trading area of all. So those give us some pretty easy boundaries to consider going forward.
Okay, yeah, and actually today to Cadence Design's credit, making a 1% move here ahead of this earnings event after the close today. So appreciate it to Rick Ducat for all of that technical setup here. Now as we do think through trading Cadence Designs for just again example purposes, leaning into similar ideas and thinking of like a more neutral to bullish strategy and leaning into perhaps the upside we've seen at least today and over the last month.
Yeah, this is it is bullish, but a little bit more neutral to bullish to your point, because we're not looking for a huge move. We are looking for a move.
Whenever you're in town, I want to buy you a big old fat steak.
The 350 call calendar.
I got a new restaurant I want to check out.
Following Friday, which is May 8th. Now,
real
the
nice
second
one.
move, actually, I think based off option prices, would target a higher level. So it's looking for a more muted reaction, but a positive one. 250 debit means you risk $250, and the closer we can get to exactly 350, the better. The nice thing about this style of strategy, Jenny, it is a customizable one. So in this case at 350, that's the best case scenario. It's like a mountain peak, and at that mountain peak is our strike. So depending on where you believe a stock like Cadence or others would end up, that's where you would ultimately choose your strike.
Yeah, now two names that we don't get frequently discussed, but definitely do start off at least the week of a very busy slate of earnings. So we will leave it there for Chartmaster today. Now coming up next, it's time for FOMO. We'll dive into some analyst conviction on CrowdStrike, which got an upgrade today out of Mizuho, and also with a pretty substantially raised price target. So we'll discuss all of the recent volatility in the cybersecurity space coming up next.
Tesla may be the canary in the coal mine.
Instant reactions, earnings breakdowns, and hot takes that teach you about stocks.
What the hell do they mean by that?
Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Welcome back to Next Gen Investing. It's now time for FOMO, and joining us today is, of course, Marley Caden here in studio, host for the Schwab Network, and we're diving into a bullish call today on CrowdStrike, which has been all over the place. It's one of those like volatility plays on pretty much every single session, but with an upgrade from Mizuho, so at least some favorability. And so Marley, walk us through this note with also a price target raise to CrowdStrike's credit.
Yeah, and it's seeing a nice move to the upside despite not seeing a significant move of this size in the general markets. We're seeing it up almost 2% right now after you said, Jenny, Mizuho upgrading to outperform from neutral. They also raised the price target up to $520. That's up from $490. Right now we're trading about $456 and some change. So, a really nice upside potential there for CrowdStrike. The analyst says that it's grown more constructive on CrowdStrike's fundamentals in recent months because of channel checks. They say those channel checks have become more favorable and indicate what they call very healthy demand across CrowdStrike's platform. The firm pointed to several growth drivers, including Falcon Flex, hyperscaler marketplaces, and AI and security initiatives, adding that it, quote,
well, they're pumping AI for some reason. We're at the 50 right now.
The analyst also believes that the company, quote, arguably has the strongest set of offerings in the space.
Oh, God. Back to 500. It hit 566 before the sell-off came in. They pump it down and then they pump it up. They said AI was too expensive. I don't know what to think about these people anymore. $115 to 500. No, it's pretty good. We're at the 50 right now, so I wouldn't jump in it until it broke the 50. SPX, boom. I'd like to go back to some of them doom and gloom traders this weekend.
sometimes see the forest through the trees.
I kind of appreciate too, is that's the same analyst that covers both these names, that they're kind of free. If you look at it as sort of a buy, hold, sell type of a situation, they're kind of freeing up capital with the downgrade for the new idea too. So it isn't like, oh, suddenly buy CrowdStrike or it's an outperform. Where's that money coming from? They're kind of saying, hey, we're not as positive about Adobe. Perhaps that brings some capital in a portfolio out of a name like that into CrowdStrike. Solely if you follow this analyst, not my words one way or another.
Hey, and CrowdStrike's price performance, at least this month, has been more favorable as well. We're up 17% this month and up at least another 33% off of lows. We're still remaining off those highs of roughly $566 a share, 567 actually, round, by about 19.5%. So when you think they're now trading CrowdStrike here for example purposes, earnings expected the first week of June, so we have some time there, but obviously they could see some market maker moves even priced in just based on the huge names that are reporting this week and over the coming weeks, that I do feel like that this could be a volatility play just as sort of like ancillary move.
Yeah, and since we've talked so much about this note from Greg Moskowitz, we'll defer to him on direction here, and we'll use a bullish example. But it's an at-the-money call debit spread. It's the 457.5, which sort of represents the current share price, is the long call in the May 15th expiration, and then selling the 462.5, which is a little bit over 1% higher than the current share than the prior strike. So looking for about a 1.5% move over the next couple weeks. If that were to happen, this is a $2 debit. So it's also interesting how this shapes up. You risk 200, but you'll notice you can make 300. So you can make 1.5 times the risk on this trade, but you need some help from the market. 459.5 is the break even, guys. Bullish strategy on CrowdStrike, a name that's making a really nice move today, up about 2%.
Yeah, outperforming the overall market, so we will give them at least that starting off the week on a brighter spot. But we will be there for FOMO today, so appreciate it to Marley Caden for that breakdown here on a name that is, again, a volatility player at best, CrowdStrike. But now coming up next, there may finally be some good news for new grads. Entry-level hiring is starting to pick up, but the rules of landing that first job are changing quickly. We'll break down where the opportunities really are and what employers want now when Next Gen returns.
She's got your smile.
Carl.
Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. They have everything we need, all in one place.
I can set up her college fund.
I've been learning about new trading strategies.
Schwab helps me generate retirement income.
All this Schwab is everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the move that we are seeing today in Domino's Pizza. We're now down about 9.75% following its quarterly results this morning. So joining us now for some more insight into this report is Sam Bottas, host for the Schwab Network. And so Sam, walk us through what clearly did not resonate so well with the street for Domino's that now is down about 33% off of its yearly highs.
Yeah, I mean, taking out a slice of the share price today, you could say that much, Jenny, because, of course, we did get a disappointing earnings report here, and it's been very much reflected in the investor reaction, as you can see here, with actually a new low today as well. So a double miss on earnings, reported lower EPS than a year ago. Revenue was at 3.5% to 1.15 billion, so that fell short on both of those metrics. It did see a $30 million worth of losses tied to an investment in a food delivery business, that is DPC Dash. That's the franchisee in China, Hong Kong, Macau. But it also lowered its full year same-store sales forecast to low single digits. And that obviously is one of the disappointments as far as the takeaways are concerned. So the same-store sales were up 0.9%, so that was much lower than the 2.3 that was expected, so they're not happy with that. They were 0.4% lower in international markets as well. Yet still, when you look at the global retail sales, for instance, they actually climbed more than 3%, US stores 2.8%, international up 4%. So that was thanks to a number of new restaurant openings. They opened nearly 800 stores around the world last year. In fact, a lot of these also being in China and India, planning nearly 1,000 more this year. But there is some caution in this expansion plan. I've been reading about, analysts have been pointing out that it could be impacted by these higher energy costs that we're seeing, particularly because a big chunk of that growth, as I mentioned, is expected to come from two key markets, and that is China and India. There is a view that these countries are somewhat more exposed to, obviously, the energy security story, particularly India. China, we know, is a little bit more insulated, but this could be a situation where they're susceptible to a pullback in some key markets, which they have been very much focused on. But for now, Domino's, I was listening to the earnings call saying that both markets are performing extremely well. But it did say it is also growing market share here in the US, even in the face of what it highlighted were some macro challenges, a competitive market. It's been coming out with these new menu offerings, discount deals to try to attract more customers. For example, the stuffed crust, other value meals to obviously address affordability, as everybody's value hungry right now. It's interesting because they did say in the call somewhat reassuringly that they do have the pricing power, but they also have the profitability power, even though this has been a miss on the earnings. And so the market doesn't really seem to be buying it right now as far as the reaction today, even though they've come out with some reassuring language on the call, particularly around some of these markets and growing that market share. What's going to be interesting is basically if we hear a similar thing from some of the others, because Domino's is really sort of kicking things off as far as some of these fast food retailers are concerned. Let's see if we hear a similar thing from, say, Starbucks tomorrow. Got Chipotle, Yum brands on Wednesday as well. We know that Yum obviously has that exposure to the Asian markets as well. Just looking across some of the analysts as to, their thinking going into this report. I mean, just ahead of this, you had Wells Fargo actually lowering the price target to $400. We're currently trading at $332 and change as it stands. They kept an equal weight rating on the shares. They were talking about restaurant delivery sales being up. They did also point to no shortage of headwinds for the group's D rate, saying that basically this makes sense in a choppy near-term trend and waning sentiment. So obviously this, I guess, is in line with that sort of thinking right now. Back in February, also had Guggenheim lowering the price target as well, although JP Morgan did upgrade to overweight. So a little bit mixed, but I think this is going to be a little bit of a wait-and-see story given some of the macro challenges on the horizon now, guys.
Yeah, I think an interesting signal, especially as you did mention, a lot of these other companies and restaurant-specific companies that do have exposure internationally. I will be curious to see if this is a theme then for the duration of this earnings reporting period. So some great points there. And of course, Domino's taking a bit of a hit today, down almost 10%. But so appreciate it, Sam Vadas, for all of that rundown on Domino's Pizza, one of our most substantial earnings movers, at least to kick off this week. But now shifting away from some of these stock-specific news, we're focused now on the entry-level job market, which is showing early signs of recovery, but it is not as simple as just more openings. So joining us now for more on this is Anthony Fonzo, CEO of the Backrack Group, to help us understand what this shift really means for, say, new grads. And so appreciate it so much, Anthony, for joining our show today. You have said that the entry-level job market is improving, but still uneven. So what are you seeing right now as far as conviction that a recovery could be underway?
This is an important topic, and it's good to be here. There is a recovery, but it's uneven, and we measure it in a certain way. We're off of the peaks of the earlier part of this decade, but we're seeing some boosts now with entry-level folks getting roles, and a lot of it has to do with the flexibility that they have now with taking on roles, and we know that this is one of the main reasons here at the Backrack Group. We're doing a lot of our own entry-level hiring. We're placing hundreds of these folks each year, and we're seeing that there's been an uptick with entry-level people because they're becoming more flexible.
Anthony, you're also a founding partner at Jackson Lucas, which is the complete other side of the job market with the executive search and placement there. How different is it on that side?
So at the executive level, and and Jackson Lucas is on several college boards, including Fordham and Georgetown, we're advising entry-level folks to bring more energy to interviews, to embrace more AI when they're going on interviews. We are seeing a difference because we're preparing, and candidates are more prepared to go on interviews. But more importantly, and I can't stress this enough on any level, it's the flexibility. It's the idea that going into these roles, you have to be flexible and kind of get it out of your head that fully remote is no longer on the table.
Okay, to speak to that flexibility that we've seen, I mean, right now from between like the employers, what employers need and what, say, a lot of these many new graduates want, I mean, how significant is that right now mismatch, and how is flexibility playing into that conversation?
There's still, I think, a fundamental gap between what employers would like and what new grads would like, but also we're seeing that new grads are understanding that in order to get the job that they want, they are going to have to be more flexible. And I will tell you, as a hiring manager, and I will tell you as someone that places hundreds of new grads each year, we see it at TBG, we see it at Jackson Lucas. They are starting to understand that they are going to have to be in an office, and it's really better for them to be in an office. They're getting an education in an office that you'll never learn in a classroom. You're working with senior people. You're not getting the same kind of an education that you would have if you're going on a Zoom like this. You're not getting that education by sitting around a Zoom when you could be around people all day.
Anthony, I gotta be honest, AI and the replacement stuff is a huge conversation, and there are times I can think when I called my vet the other day that I was like, wow, this is so impressive, like this is way closer than we think. And then I interact with my telecoms chatbot, and I'm like, this is nowhere close. From your standpoint, where is the AI replacing entry-level jobs conversation? There's some of it, I'm sure, but like realistically, where does that stand right now?
Yeah, it's funny because it's really one of the most asked questions that we have all the time, and I'll tell you the same thing I say to new grads and to employers. AI is not going to replace workforce. It's going to enhance workforce, and it's just going to step up and make the workforce better. We're seeing it now where AI is on all levels, whether it's entry level or senior people. If they're embracing AI, they're going to be fine. AI should be viewed as a program or as an app, much like Excel was 20 years ago, or any kind of a program that's introduced. It's something that's going to enhance you. And companies may realize this already, and they're already changing the scope of roles. At TBG, we're seeing it all the times where jobs were initially made one way, and now they're adding AI to the job spec. So we're seeing it in live. We're seeing it live every single day.
Anthony, kind of a forward-looking question from your vantage point. You may have thoughts on this, you may not. Do you think these technologies and how they open up efficiencies and augment and improve what the everyday worker can do will decentralize, maybe bring out more entrepreneurship? Or do you think it'll go the other way where some of the bigger companies are just doing everything?
That's a great question. And I think if you said, well, we saw back when Microsoft was launched, or when any of these companies were launched, web browsers, there were hundreds of web browsers, and eventually one company dominated. Right now, we're seeing a lot of AI. We're seeing a lot of companies introduce AI. We're seeing a lot of entrepreneurial businesses coming out. But at the end of the day, when we see 10 years, 20 years down the road, there's going to be a few companies that are going to be dominating, much like we see in every industry in technology.
Okay, so as far as some of those that are standing out using AI, what are the specific things that they're doing that perhaps then, say, gives them an extra edge?
Well, I don't want to endorse any AI right now because they all have their pluses and their minuses. But I think what we have seen, and I know that what we have seen in the past, when AI is malleable and they will work with software and they'll be flexible with other companies, those are the ones that typically land on top.
I'll be right back.
So when you see an AI that's flexible with Microsoft products, especially because most companies are using Microsoft in an office, we have to think about this as a business, not necessarily an AI that somebody's using to make great pictures of themselves. AI is going to be business and what you can monetize. And being able to monetize it is something that I will tell you as a business leader, I think about AI as what's going to help my business and what's the easiest to work with my different softwares that we use.
Okay, yeah, so I like that. Good place to leave it. We so appreciate your time today and really great conversation to help us kick off the week. Thank you so much, Anthony Fonzo, CEO of the Backrack Group. Now coming up, Snap is getting a major vote of confidence from Wall Street. One firm says profitability could finally be in reach this year, driving a potential breakout for Snap shares. So we'll discuss this note more in depth when Next Gen returns.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Next Gen Investing. It's now time for Under 30. We are looking at the move today in Snap, which is up just shy of 9% on the session. So joining us now for more on what's moving Snap shares is George Tillis, Senior Markets Correspondent for the network. So George, we got an analyst note, but I mean, is this really enough to send Snap shares 8-9% higher? I'm curious your thoughts.
Well, I mean, I think this is interesting. You know, Redburn has basically upgraded the stock. They've got a $10 price target from $5. I think they're onto something here because if you look at the metrics for Snapchat, including, of course, profitability as well as, you know, monthly active users and daily active users, just to give you some context, you know, daily active users based on last quarter's results around 475 million. Monthly active users are near a billion, 946 million was the print last quarter, as well as average revenue per user, which was higher by about to $3.63 from $3.27 year over year. So my point is they're actually demonstrating some good metrics. The other thing is their Snapchat Plus, which is their subscription-based service, grew about 71% to 24 million actively paid users. So I think the analysts that are starting to look at this are looking at the metrics, some of the metrics that I just provided, inclusive, of course, earnings, which are important. The company is expected to become fully profitable on an annualized basis in 2026 this year at 54 cents and next year at 67 cents. So for what it's worth, you know, the company has a very low earnings multiple on a forward basis that is positive now. It's trading essentially at 10 times this year's earnings and around 8.5 times next year's earnings. So, you know, the company seems to be doing something right in terms of mitigating expenses. They did talk about carving out about $500 million in expenses and they have over $3 billion in cash. So I think that's, again, something important to consider here with this name.
George, seems like technically, too, maybe a bit of a reversal pattern is trying to carve itself out.
Yep.
What do you make of that?
Well, that's the thing. So I like to outlay, fundamentals and catalysts with technicals. If you look at just the technical picture, there seems to be a pretty significant improvement. Whether it's a major trend reversal, the cup and handle formation. Overall, even today, it's trading rather well. I know communication services stocks are higher today. So if you look at, for instance, Reddit, it's also higher. That's pulling Snapchat to the upside. But, we talk about this one quite often. And one of the challenges the company has faced in the past is always near that inflection point of losses to profits. It seems to be, it could change. I'm not just saying it's going to be a guarantee, but it seems to be that they're moving in a more consistent fashion on adjusted profits going forward. They're really looking at addressing expenses. And all the internal metrics seem to be improving. And so, again, that seems to match some of the technicals. So perhaps, again, it may be worth watching here as it's moving higher.
Yeah, and I think a good point there is this name is ripping today. Also, part of this note was, of course, Pinterest, which is also higher by about 2.4%. But Snap, at least trying to make a recovery. We're up now 33.5% on the month. So appreciate it, George, for helping us really break down some of the outsized performance today we're seeing in Snap shares. Now, as we do check in on markets here, Alex, I was hoping we'd see more of an improvement. We have seen at least the Dow increase ever so slightly, but I'm pretty sure, the Dow is actually repriced to the downside, while the S&Ps have moved slightly higher throughout the last hour.
You know what's really interesting? Less names are higher than they were before, but the S&P 500 is higher than it was before. So we're becoming more concentrated as big tech drags us across the finish line.
You know why? Because NVIDIA is up 3.3%. So look no further.
New all-time high.
Yeah, new all-time high quietly in NVIDIA. We'll leave it there for next gen to start off this week. We have the watch list coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Incidentally, next week, we got Rivian Thursday at close. They'll pump the shit out of it again.
Welcome to the watch list. I'm Nicole Petalides. So glad you're with us. It's 2 p.m. Eastern time. We're coming to you live from the floor of the New York Stock Exchange. The Dow's down 89.
Wednesday at close.
A lot of back and forth action today, and we'll explain. Also, our tech spotlight continues. We're going to take a closer look at Spotify ahead of tomorrow morning's earnings report.
Spotify in the morning.
Lenz are standing by. We'll take a close look at the real estate market, particularly
Too high.
On the East Coast in New York. Spring selling season is underway. Some details there. And our panel is ready to take a look at the Mag 7. 5 of the 7 names are reporting this week. Which ones may be your best bets of the group? In the meantime, let's take a look at markets. We know that the S&P and Nasdaq have been up 4 weeks in a row. Right now, the highest point that we did see for the S&P right now, 71.75. So record day for the S&P 500. Right now, we are seeing the Nasdaq to the downside, down 15 points. The Dow Jones Industrial Average down 95 points, and the Russell also losing some steam here. A lot of red
Coca-Cola tomorrow.
The map, folks. The winners are communication services and financials, but on the downside, energy, materials, industrials. Those are where you're seeing some of the down arrows. Names like Hologic,
I'm not much of a Coca.
are the laggards.
UPS.
Winners, as you're looking there, SanDisk, which is incredible. All those memory stocks, and Micron, another great winner.
That resistance.
You also have Comfort Systems, Stanley Black
we got Humana
NVIDIA,
Wednesday morning.
Gains could be a record closing high, because we did see a record closing high on Friday. Here also are how we're doing on the futures
Robin
price.
Hood,
Oil,
Tuesday evening.
96.81 up 2.5%. No surprise there. We're going to talk about Iran. Gold 46.96 a troy ounce. That's down $44. 10-year bond yield 4.33. The dollar 98.29. And Bitcoin at 77,000 and change. It was right around 2-month highs. So we'll continue to watch that. It's 2 hours left in the trading day. The closing bell will be ringing soon. For the market moves, Kevin Green is with me. So we're looking at a few names here. We talked about the different Mag 7 names, but let's talk about Google in particular, Alphabet. You do have them now working with the Pentagon. I thought that was interesting, you know, for these different things, but you also have a little pushback too. Stock's looking good. Your thoughts?
It is. I mean, the stock's making new all-time highs here, and this is on the back of some news that the U.S. Department of War, or the Department of Defense here, is actually adding Gemini for Government 3.0 Pro and 3.0 Flash to its AI suite of platforms to utilize in-house, and not only just to be able to utilize it within the current framework within the DoD, but also for potentially offensive measures, which could be lethal autonomous weapons, mass surveillance, as well as other areas of the market that obviously artificial intelligence within the military space is trying to expand into. Now we are seeing some employees pushing back on this potential deal here. We've seen this in the past. Anthropic obviously had a back and forth with the government. OpenAI looked like they were also trying to do a deal with the government as well. But we do have 560 plus employees that signed a letter urging Sundar Pichai to actually block the military AI use for their models here, obviously showing some concerns that, once again, the AI models themselves could kind of go awry. So a little bit of pushback, but we have seen this in the past. Google's up about 2.5%, and it just shows, Nicole, that you still have to have that edge up, especially in the defense space. And it seems like a lot of these companies, especially the mega cap names that have exposure to artificial intelligence, are definitely trying to lock in a lot of these government contracts over the next couple of months and even years to come here. So very interesting story, but that's why we're seeing stock push higher.
You know, it's amazing. I know there's a real sort of push and pull as to what the government could do or should or shouldn't do. You know, it becomes a long conversation. But doesn't it seem like we have great companies, the government should be able to use? What if the government is at the last man that's allowed to use this stuff? You know what I mean? It just seems sort of backwards. So at some point, there has to be an agreement between everybody. In the meantime, what a run we have seen
for the memory stocks that have had, some are up 1,000% in 1 year, and we're seeing some new all-time highs today again, right?
Yeah, we are. Actually, if you're looking at the stocks, it's down about 2.3%, so some mixed action here. We did see some buyers stepping into the memory names early on. Qualcomm also was up around 11%, but if you're looking at Qualcomm now, it's pretty much flat on the session, and you have this rotation going back into the semiconductor names that we have seen outperform in the past, especially NVIDIA, which has now kind of broken out of its consolidation range. Finally, Nicole, after 8 months, breaking above the $200 level, now it's trading at around $215, up about 3.4% today. And that's once again kind of this rotation that we have seen in this market. Over the last 3 weeks, 4 weeks, we have focused a lot more on the CPU space, so names like Intel as well as AMD have been catching very strong bids. NVIDIA really not so much, but we are now seeing a technical breakout, and we'll see if this actually does continue through the earnings that we will get this week. A lot of the mega cap names that are going to be reporting obviously leverage a lot of NVIDIA's product offerings, especially the GPU. So this is usually a very strong and bullish week for NVIDIA. Maybe not so much for these names that might be reporting that may also be increasing their CapEx spend, and that could kind of maybe halt some of the enthusiasm on the street for a name like Alphabet and what have you.
Yeah, and SanDisk is reporting. Look, I saw Cantor Fitzgerald put a $1,400 target on SanDisk, a $500 target on Western Dig, and Seagate a $700 target. SanDisk and Micron, all-time highs today. I know they pulled back a little bit. We're having back and forth action, but what an incredible group. Okay, let's get to Domino's Pizza. You know, terrible. What's going on here?
Yeah, this is actually maybe a signal that the consumer is slowing down here a little bit, Nicole. We actually did see the company, for the most part, miss both in the top and bottom line. They actually did report revenue at $1.15 billion. Street was looking for $1.16 billion. And the adjusted earnings per share,
that's still a lot of money.
$4.13. Street was looking for $4.27. And they believe that this is because of softer consumer demand as well as the macro headwinds that we are seeing around the world. If you're looking at U.S. comp sales, it actually only increased by 0.8% on a year-over-year basis. Street was looking for 2.7% increase, and then the international comps actually came in.
It's consolidating
on a year-over-year basis, so they are seeing some weakness. They also have some promotions that they are trying to leverage in order to get consumers back into the stores here, but at the end of the day, they
whatever I charted that on is not the right.
But here in the United States,
that's probably the daily.
They have a rough road ahead when it comes to the pizza space, and that's also reflected in their guidance, which once again came up a little bit compared to the street's expectations.
Not the daily.
Yeah, tough moves.
How the heck did I get that on there?
Pizza. Kevin Green, thank you very much. Good to see you. Coming up, I want to spotlight more tech names and Spotify in particular ahead of tomorrow morning's earnings report. The stock is down more than 10% this year, and still to come, big moves. We're going to have more for you there with Tom White joining us with real options trades for Micron, which got a buy and a $700 target at Melius Research today. NVIDIA, which if it gains today has a record closing high. And Intel, what a story that and run that has been. We'll be right back.
My parents didn't really talk about money at all. In college, everybody around me had money. I didn't want anybody to find out.
Call me tonight when you get off work.
I was using credit cards to do anything and everything. I ended up with $20,000 of credit card debt. That's when I kind of realized, like, all right, I have a money problem. This is about how my finances got wrecked and how I fixed it. And if I could do that, you can do it too.
Intern, this place is incredible. It's where I get all your office supplies.
Okay, well,
Fancy coffee,
Domino's.
giant TV. It's everything in one place. It's like
We're gonna go down to a 3-year low.
everything investors need, all in one place. Come again?
No, let's do it right here.
Invest, trade, get full service wealth management.
315.
And everything in between. I think I'm gonna be sick. We have to buy that now.
Invest your way with Schwab.
Real-time access,
Okay.
data-driven analysis from U.S. equity. The dots. Watch
Where are
live.
you?
Subscribe free at schwabnetwork.com.
Schwab Network. Earnings are a really big deal this week. I thought they were big last week, but this is a really big week. I feel like it's one of them weeks where if the earnings are good, they're going to be responsive to it. They're not going to be like good and okay, we're going to pull it back kind of deal where they've done before on us. Again, I woke up this morning here, all I was hearing and the weekend that we were way overbought. I heard it again today, and then I heard that, and I said this last week without being told, but they said it this morning, that we were not broadening out. The broadening out index had failed, and that they got back into tech. We've been lied to over and over again about AI and tech. It's a new revolution. It's not like, I mean, the internet was a big deal. The .com era, and I want to thank Al Gore for inventing the internet. At least he took credit. The government took credit for it. And we know that's a bunch of crap. So, but I think they're going to be favorably responsive to it because we've had such a pullback in the AI. Not a good enough one, but good enough. And it lasted for quite a while. And some of them are already up big, and they have to pull back. It's like NVIDIA. NVIDIA broke 200. That was a big deal. And we just keep getting higher levels and higher. To me, NVIDIA is cheap, just by the price. I mean, but by share structure, the fat cats don't think it is. But again, we were lied to about it for. Once it did its split, they started bashing NVIDIA. Here, I got to get the year. That thing don't work. Now, we've had 5 weeks of straight parabolic run. And it really, it held a Darvas box in the correction. Now we broke that major resistance, which I have at 210, but I think that was on the weekly. That might have been the daily. Weekly's right around 207 for support. On the daily, it ain't the daily either. Wonder if it's the weekly, the yearly. No, well, this one is. That one is. But not that one. It's definitely the hour. So I'm going to go back here and set my alert right off that previous high. Update on Jenny Ray. What happened here? Oh. Oh, I want to tell my sister. I met Miss Beadle yesterday on Little House on the Prairie, the teacher. I met Miss Beadle yesterday on Little House on the Prairie, the teacher.
They report later this week.
Yeah, even if it finishes with an up arrow today, it'll be a record close again, because it was a record close on Friday. And the options markets are pricing in, by the way, for Microsoft, Amazon, Google, Meta, about 15% swing, and maybe even more for Apple on Thursday. I'm sure you heard some of that. I also wanted to get to Bitcoin, since you're there. Are you a Bitcoin fan? I mean, right now it's sitting around 2-month highs, 77, 78 would be a 2-month high. Where do you think Bitcoin's headed? What are they saying there?
Yeah, well, so things are just kicking off here this morning, Nicole, so a little early to report inside information from what's happening at Bitcoin 2026. But look, folks were looking to see if it could exceed what was a previous resistance level at around 73,000. Very happy to see it break over 76. If it can maintain and get over 78, that's the next resistance support level that we're looking for. We think we could see it in the 85,000 range in the next 30 to 45 days. But I think it's going to be a while before we get back into six figures, unfortunately.
All right, so 85,000 is coming. That sounds good. I think people would like that, Mark. It's great to chat with you. Have a nice time in Las Vegas there. Mark Lopresti, CEO of Market Rebellion. Great to chat with you, Mark. Coming up, I want to focus on real estate. There are so many things to look at when it comes to the home builders, but also buying.
I think I'm going to go do a couple errands.
And Dolly and Jenny Lenz are with us with some of the latest details and some of the new rules that people are looking at. We'll be right back.
I think I'm going to go do a couple errands. Yellow. New audio detected. Okay. 71.80s. Belch. Look cheap now. Oh, I need to charge my phone up first. Oak. I've been talking to a couple of friends of mine about the trucking business that have a lot of money.
That these wealthy people should pay more tax when
Proposed New York.
when
Ooh.
he's already paying, you know,
Paying taxes. I saw it. He's creating jobs
Yes.
and he's giving to charities.
That got him to New York,
Right. And,
right?
you
Chicago,
know,
big loss.
I mean, a lot of these very well-off folks and big companies that do building redo things for the people. And I mean, I know SL Green in particular. I know they invested so much into Grand Central.
So I don't think liberals know how generous people are when they have more money. I am not as generous when I have to pay a higher inflation like under the Biden regime, or I'm threatened, or I get high taxes like I did under the Obama regime. I just stopped donating money. Family didn't get none. And then when Trump came into office, I felt like that first time, I felt like I was getting more money in my pocket. So I put 10 grand in my mom and sister's house. I donated all kinds of shit. I got, my cost of living went up $1,100 during Biden, and I didn't have that money to give anymore. And I wasn't going to do it because I didn't like where the money was going. Last year, I put a house on somebody's, somebody, just put a roof on their house. I don't think liberals understand. They'd rather take it from you and spend it on stupid shit. So, you know, I'm a lot more happier when I'm paying less taxes. A lot more happier. I had to turn my business around, just totally market it different and turn it into an LLC so I could save 15% in taxes under Obama. I mean, it was killing me. I was paying like, I mean, God, half my income was going in taxes. More than half, if you count the sales tax. And it was hard for me to run a business with businesses closing down, and so, you know, it's just, and then being a single white man. Oh my God.
Anytime soon.
No, but it could happen.
You talked about some of the home builders and some doing better than others. Can you maybe allude on that or expand on that? I saw that.
Yeah, well, it really depends on where they are building and what they are building. So we're finding that if you're building where there's a need, for example, in the South, you know, Florida, Texas, you know, you're going to do well, and they're doing well. The ones that are building where there's not really as much of a need, like the West, right? Those markets are down, and along with it go the builders that are building there, right? But that's also a short-term story and could change.
Right, and they can give incentives, you know, they can pay some of the taxes, they can pay the maintenance for a year, right? Whereas the average homeowner you're buying from cannot do that, right?
We also saw President Trump banning institutional investors like Blackstone from buying homes, you know, to bring down some of the housing costs, because they would just swoop in and buy, you know, many, and so it's an affordability thing, and that likely could change the landscape as well.
Definitely.
When we think about insurance, I think everybody is talking about insurance, all insurance going up like crazy.
Yes.
Right? What are folks saying to you about insurance, homeowners insurance?
Well, we're finding it's a two-step problem. First of all, insurance rates are going up. Second of all, insurance paybacks are going down.
Mona Lisa, MDLS, MDLZ.
They feel are supposed to be paid.
Tomorrow night.
They have a loss.
MDLZ.
Right? So they haven't had a loss in 40 years. Suddenly they have one loss. And the insurance company's arguing as to what the value of the loss is. I mean, really arguing.
Right, and you've flooding, hurricanes. There's so many problems. There are fires out west. You know, so insurance is really a problem. It's going up every year.
Better to buy
constantly leaking.
Yeah, better to buy a new home or an existing home at this point.
Still a new home.
Still a new home. Like we said, the concessions that home builders can give. And also,
well, it was a cup and handle, but
don't break as easily, right? You don't have as many leaks in a new development, hopefully.
Man, 2 weeks that were kind of destroyed the handle.
Exactly, if you go to a reputable developer. But,
all right, well, I love when you're on. Thank you both. And that is a top story here in the Northeast for folks who have, you know, obviously a second home here in New York City, and Mom Dami cracking down on them. We'll see. Dolly Lenz, Jenny Lenz, thank you both so much for being here. Great to see you both.
Nice to see you.
Coming up, let's preview the week ahead. What's at stake for these mega cap tech names? You have Microsoft, Apple, Alphabet, Amazon, Meta. Oh, I'm so ready for all these big names. What to expect? The watch list returns.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Intern, This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now. Schwab.
Invest your way with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Welcome back to the watch list. This week is the big one when it comes to the quarterly earnings reports. Amazon, Alphabet, Google, I should say, Apple, Microsoft, Meta, all reporting this week. You'll hear from NVIDIA later in the month on the 20th, I believe. In the meantime, May 20th. So in the meantime, let's have our panel join us. John Freeman, co-founder, senior analyst, Ravenswood Partners, and Ron Westfall, VP, Practice Lead, Networking and Infrastructure, Hyperframe Research. Thank you both, sir, for being with us. Ron, I wanted to ask you your thoughts. Do you have a favorite in this group?
Yes, I do. And right now, I'm actually looking at Amazon as being a good, solid bet.
Amazon.
One reason is that we're seeing a projected growth of 25.6%. Following its $100 billion infrastructure deal with Anthropic. So as a result, I think there's some skepticism around Amazon, but it's not unique to them. It also applies to all the hyperscalers. But I think they're supported by the fact that they have $244 billion in contracted backlog. And that is also complemented by high margin revenue from its Trainium and Graviton chips. So as a result, I think they really are going to be a solid bet coming out of this, say, in relation to others like Microsoft, despite the fact that, yes, they're up to $200 billion in planned CapEx, but I think they're going to come out of this looking pretty good overall.
And I think about the fact that Kathy Wood actually said that she sold her AMD and at $75 million worth and loaded up on Amazon. And also X Energy. So I thought that was really interesting as well. John, what do you think? Do you have a favorite among the group?
I do. I actually, from a stock perspective, I mean, I like all of these. I like Amazon. We own Amazon in our strategy. The two earnings I'm really focused on are Google, Amazon, Alphabet, Google, and Microsoft. Both of those I think are really well positioned, both as, you know, in terms of growth.
Man, everybody's so excited.
Because I don't think people are really giving their cloud businesses enough credit. For Microsoft, we're talking about Azure, which is about a third of revenue now, you know, growing probably in the upper 30s again, you know, maybe even 40%. You know, this drives Microsoft's growth at, you know, probably, it's about 17%. We're a little above consensus for the year. Of about 17% top line growth, and you're not paying much for it, right? The PE is in the low 20s. Same kind of situation with Google. Google, you have to pay a little bit more of a premium, but still, I think it's very attractive given their search business is on fire still. And then, of course, their cloud business is growing, you know, well into the 50s probably this quarter. So I like and you know, I think both of those companies are you know, really well set up to be big beneficiaries of the continued generative AI trend.
Yeah, I think about the CapEx spending, and that was something that we saw noted here from OpCo today. They said that the CapEx spend is maybe high for Microsoft, for example. And so we were well over the $600 billion mark for the hyperscalers. We're expecting more. You know, that is the CapEx story could really move stocks one way or another. I remember that first time that Meta came out with a CapEx spend that floored us all, only to see the rest of them all come out with the same thing. Ron, what do you think when you think about your CapEx expectations announcements?
I think it's definitely confirming like the market is really there. I think, yes, when you're looking at CapEx for this year, it's approaching $680 to $700 billion. And so that's where you do get some of the sweating from some investors. However, and I think this is reinforcing what John is pointing out, when you're looking at the trajectory for their cloud businesses, it's pretty much all solid upside. And to be specific, if you look at their aggregate total access market, addressable market for 2026, it is up to $5 trillion. So you can see the variance here, that the fact is that this CapEx is really going toward not only earnings that are being locked in with these contractual obligations with those who are buying their cloud services, but also the fact that you're looking at content advertising, when you're looking at infrastructure and combined with cloud computing and overall AI potential, this is all looking pretty solid for all of them, and that's why we're seeing pretty much a good runway across the board.
Yeah, I mean, what do you think here, John, when you talk about the CapEx spend? How much is too much, and what are your expectations?
Well, so, in terms of CapEx relative to revenue, and relative to revenue growth, when you've got revenue growth accelerating and CapEx accelerating maybe a little faster, that's still okay given the fact that, maybe CapEx can roll over the next year and so forth. But in this AI situation, I think you're going to have sustained high CapEx, and that's just the new normal. And the kind of the price of admission if you're going to be a hyperscaler, right? And so you're going to be able to compete at that level, then it becomes an oligopoly, I think. It's still an oligopoly, and I think it really does prevent, a lot of new entrants. That said, some of these new entrants also do some fantastic optimization things, like what Nebius and CoreWeave do. So maybe they're, acquisition targets, I'm not sure, but I think it comes down to the core businesses. If your software is connected, right, to an infrastructure, like a cloud infrastructure, as is the case with Google, Microsoft, and Amazon, right? That's a great place to be, and I think investors should take a look at all three of those as long-term growth opportunities with relatively low downside, given the multiples that they're at now.
John, just quickly, would you recommend buying the MAGS ETF of the MAG 7 names on a day like today, let's say ahead of the earnings, or no, you wouldn't do that? Quickly.
No, I wouldn't do that because I can't tell what Apple's going to report on. So,
Apple's at support.
There's a fair amount of uncertainty, I think, with Apple. Apple might become interesting under new leadership, but cell phone, smartphone sales are being pressured because of memory, and because memory costs are being pressured because, AI has an insatiable demand for it.
Yeah, both of you wary of Apple. Different from our earlier guest. I mean, you had mentioned it, Ron, and John, you too.
Huh.
Very interesting. Okay, we'll have to wait and see. Apple is the one name that is down right there. I can see
it is
down the worst today. John Freeman, Ron Westfall, great to see you both, and thank you for a great preview of those MAG 7 names.
Oh no, man, I like it.
MAG 7 reporting this week.
For an overnighter.
On the move, and we will spotlight an ETF that actually aims to take advantage of the overall commodity basket. We will explain. The Dow's down 50, the S&P is in the green, up 9. We'll be right back.
Gosh, 70, what? Oh, that's today. May 15. 270 strikes are too high for Apple. And the next swap should be 280. May 15.
Sometimes, you know...
Ouch. Oh, God, you ruined your hair.
Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at _Vardis and connect with me on LinkedIn or Instagram for more.
Alrighty, well, I'm going to call it a day.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms.
What's this?
Bring your trades into focus.
Hello, folks. Just got in from working.
Including over 400
I'm getting ready to go working.
Tailor the platform.
Been a good day.
With nearly endless customization. And track market trends with up-to-the-minute news and insights.
Earnings, big earnings week.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange where we are getting ready for a ton of headlines all week long. And we want to have you ready as well. We're looking at some of the sectors that
I'm ready. I've been waiting for you for a long time.
Earnings that are due out. Kevin Hanks is joining me right now. We've already had some back and forth action today. What are some of your takeaways from this Monday?
Yeah, Kevin.
Already as the S&P hit a record, and I need to check on the NASDAQ. Did that hit a record yet today as well, too? Let's see. Nope, just Friday. Okay, so your thoughts?
You know, Nicole, there's so much going on as we get at the second half of the week that I think markets are really waiting for news. We're seeing some eking out headlines from Iran and the U.S., but nothing really concrete that the market can grab hold of. And the rhetoric out of Iran has got crude oil prices higher. It's got the proxies for crude oil all higher on the day. So we're waiting that crude oil, as we sit here, up over 2%. Now, in terms of the S&P 500, I've got 5 sectors higher, 6 lower. That's good news because the information technology is higher, communication services are higher, but consumer discretionary is not. That's making the market real mixed as we get to the end of the day. So I've got the S&P up about 1/8%. I've got the equal weight S&P down, but less than 1/10%. So very little movement. Biggest mover of the day is crude oil and all those proxies. Like I said, we are waiting for the big events to come Wednesday, Thursday, and Friday of this week. We'll get some data. We'll get some earnings. Obviously, Wednesday we have Fed news. Right now, it's 6 down, 5 up, Nicole. A very balanced, low movement day overall.
All right, and I was looking, by the way, Goldman Sachs was upping its targets, right, for oil overall. For Brent, for example, they had it from 290 from 80, and it could be even, that's the base case, but it could be more than 100, in a severe case, 120. So they did up their targets on oil. All right, thank you, Kevin Hanks. It's time to take a look at the commodity space and talk ETFs. So let's do our ETF watch list segment right now. Mo Sparks, Chief Product Officer at Direction, is with us. So let's talk about your broad commodity strategy. Could you share that with us?
Yeah, it's quite the strategy. Obviously, as we just heard, given the time, it's really challenging to be able to pick an individual name within metals, energy, or kind of across ags from a commodity perspective. And what we created with COM is a product that is diversified across each of the 12 kind of names underneath it. And what that gives an advisor as well as an investor is a diversified portfolio that can systematically and transparently kind of go long or flat individual names based upon where the market is. And so we just heard, obviously, crude is moving today, but who knows where it'll be in another 3 months.
I do. Think about, when we talk about commodity strategy, I mean, what different commodities are really in there?
Yeah, so as I mentioned, COM is built to give you broad, diversified commodity exposure. You have 12 names kind of underneath it, headline from something like crude to natural gas across the energy complex, and then you go into ags, you have sugar, you have wheat, right? And so really diversified for that exposure, which I think is fundamentally different. And what's nice about it is this systematic rules-based approach to the strategy. And so as an advisor or as an investor, you have an opportunity to sit back, get a core diversified commodity portfolio in a single trade.
In your mind, is it sort of evident that this is going higher because of the Iran war or inflation or geopolitics across the board? I mean, in your mind, does this go higher?
Yeah, I mean, I think that as we look at the macro landscape, there is an immense amount happening. And so I think that that's not changing. I mean, we every day get what we think maybe is a little bit more certainty, only to kind of walk it back. And so, if I'm an allocator, what I look to is every time there are macro events, it's an opportunity for me to reassess my portfolio. And I think that as we look more broadly across those portfolios, we tend to see that traders and investors under-allocate in alternatives, right? And I kind of view commodities in that bucket, and so it's the right time.
Elon Musk is about to get a lot richer.
The product is built to give them.
Can this go higher if stocks go higher? Meaning like the S&P 500, because I know this is at least somewhat based on supply, demand, maybe some shortages or, tight point A to point B on the supply chain. So if COM's going up, can that also go up at the same time when stocks are going up? Tom Lee, for example, said the case for stocks moving higher in general is strengthening. So there are plenty of people who come on who think the S&P 500 is higher than where we are now at the end of the year. Can COM move up with it?
I think it can, and we've seen historically there's an opportunity by which it does so, but I think more importantly,
Musk is going to get richer.
An advisor is a diversifier within the portfolio, and that's the intention of the product is, you build for a core equity exposure. I think we all see the backdrop. And I spend a lot of time kind of across AI and semiconductors, and clearly it's been a very, very interesting start to the month here in the last 18 days. In that market, we've seen it go higher and only go lower. But as I look to commodities, I'm looking for something that maybe moves differently. And so they can move together, but oftentimes we tend to see they move in a different direction. And we very clearly saw that across the first quarter of this year, as commodities were big winners, right? As we saw a pullback and kind of flattening of the bond market. And then the equity market, really tough March, obviously, is roared back here in April.
All right, Mo, thank you so much. It's wonderful to see you. Mo Sparks, Chief Product Officer at Direction. Coming up, we'll take a closer look at some outside trades that you want to take a look at. Tom White is going to join us. He has big moves for Micron, NVIDIA, Intel. The watch list will be right back, and they're all higher.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your
What was that
way.
one I was looking
Sounds
at?
nice, right?
Hey, Bob.
Hey, Andrew.
Last year,
Baba.
my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Vulnerable.
Stroke.
He's vulnerable.
Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Have him teach you vulnerable.
I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a
Dad, took me 5 years, but I finally got to pronounce vulnerable. And it took 10 takes here today on this commercial, but I got it.
Where we highlight outsized options trades that are
'Cause I was vulnerable.
Joining me right now, Tom White, and we
To
are
the word
looking at
vulnerable.
Micron hitting a new all-time high. I did see that Melius Research put a $700 target on this name with a buy
God.
rating, and
MU, 700 again?
Trade.
Here they go.
They're
stuck.
You got something on the other side of this daily.
$700.
It's up 45% this month alone.
Woo!
3 years from $59 up to a whopping $531. So tell me more about the trade that you found.
Yeah, Nicole, you look at some of the stats over the last 12 months, up 550% over that period. RSI on a technical basis, stocks overbought, right? But all these memory chip stocks are overbought. RSI of about 72, anything above the 70 levels considered overbought. You've got earnings from STX, WDC, and SanDisk.
That makes me vulnerable.
This week, that might kind of move
$600
also, but this has been the big winner over the last year. That Melius note that came out basically.
Well, I did call it
This has always been a really cyclical
pullback.
part of the tech segment, right? In chips and memory chips, is that they said that
Look at that
they're
beautiful
gonna have
setup.
supply constraints through the end of the decade, and typically we see some seasonality in a lot of these things, but
vulnerable.
not right now in this AI build out that we've got going.
So I'm going to go back
And
to
it's pretty
500.
interesting. The put call ratio is about 0.74 right now. That's actually pretty high compared to what we've seen during this rally, because typically you see a bunch of call buyers. But something that stuck out to me today was out in the May 1st weekly option. So really short-term positioning from this trader, maybe thinking we're expecting a pullback even with the stock up about 4% today. Trader bought over 7,000 in the May 1st weekly. 510 puts, paid an average debit of about $16.50. So the break even where this trader starts to make money is below $493.50 over the next 4 days. That's about 5% below the current share price. So outlaying some capital for this bearish outlook here in Micron that maybe it needs to pull back here a little bit.
And SanDisk, Western Dig, Seagate have been incredible. Can't erase the price targets. We talk about so often the AI memory shortage, which said they're really trying to pump them out. But anytime there's an AI shortage of memory chips, that means rally for this group. Let's talk about NVIDIA.
Shortage of memory
Looking like
chips.
a record close again today. What stood out to you?
Yeah, fresh intraday all-time highs today, coming on the back of that settling at a record high on Friday as the stock continues to move to the upside, up another 3% today. And call volumes over 3 million contracts. That's about 3 times normal daily average volume that we've seen over the last 5 trading days. So that's really picked up here. And if you start taking a look at the space in general, the Philly Semiconductor Index is up 18 days in a row. It's pulling back here a little bit today.
46.
But it's being driven by NVIDIA, AMD, Intel, these big names that have had pretty good runs. Remember, NVIDIA was stuck at between about 190 and 170 for months earlier this year. So it's finally seeing that breakout. They don't have earnings for a few weeks, but it's probably going to move on the back of some of the other Mag 7 names that report, those other 5 that report later this week. So I think that's going to be in focus, but a lot of call buying in there today, not surprising on that, even with the stock at all-time highs. But something that stuck out to me was in the May 8th weekly option. So these expire in 11 days. Trader earlier this morning bought over 15,000 of those 210 strike calls, paid an average debit of about $5.90. So the break even at 215.90, well, we're basically there right now. So the stocks continue to move to the upside throughout the day. So pretty good trade by this trader already. They've still got a week and a half in the position. And as I mentioned, call volume 3 times normal daily average volume. that we've seen over the past week, and we always see NVIDIA in the top 2 or 3 as far as call volumes on a daily basis. So yeah, another breakout to the upside, and this trader thinks we're going higher.
All right, last but not least, what about Intel, which is up about 85% this month? You found a trader that's actually expecting some more good news.
Yeah, that nearly 24% pop that we saw on Friday post-earnings is putting the stock at all-time highs, which we hadn't seen since the dot-com bubble, basically 26 years ago. Pretty good report. Beat on EPS, beat on revenue, hiked up their guidance way above even the high whisper numbers. And this is all about CPU pricing, doing really well, and the founder side of their business and the investments. Government, NVIDIA, SoftBank, all investing billions of dollars in Intel and propelling the stock. But we did see some more bullish activity in here. And this was out in the June monthly options. So you got about 52 days until expiration. Trader bought over 10,000 of the June 95 strike calls. They paid an average debit of about $6.87 on these calls. So the break-even for this trader where they start to profit, 101.87 over the next basically month and a half. That's about 22% above the current share price. But that's not out of the realm of possibility when this stock's up, over 100% over the last 12 months. RSI, 82 level, severely overbought on a technical basis, but they keep on pounding into calls in Intel, Nicole.
And you know what? For the first time after 18 days of gains, it looks like the stocks may have a down arrow. It's up 36% this month. So we'll see. That's another piece of news. All right. Right. Nice to see you, Tom White. Thank you, friends, for being with me on the watch list.
Schwab Bank Investor Checking, the checking account built for investors.
We got Power Hour coming up.
Client satisfaction by J.D. Power for 7
3
years
minutes.
in a row. With Investor Checking, you get the award-winning features of our checking
Come on,
account,
Bubba.
plus cash management solutions, all designed for investors like you. With unlimited 18
We'll see what Baba does tomorrow.
cash withdrawals worldwide.
I don't want it to open
no
down.
overdraft fees and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking.
I mean, Apple would be a great buy right down here. 261. If we get another $5 dip.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening
260.86.
got you covered.
That'd be a strong buy. What was resistance
Pro traders
now becomes support.
A higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With
Trader's tip.
Action, we break it all down in real time with speed,
Trader's
accuracy,
tip.
and precision.
I think one of the most important things is
So I'm looking for a pivot point, and I found it. And then I see this little higher low, higher low, higher low, higher low, higher low. So I want to draw a trend line from that, where it bounced off the 200. And that'd be right there. And I could probably pull back tomorrow. So I set an alert there. I'll wait. Oh, we hit it. We hit that support today. This morning. So that's interesting. Apple Store workers in Maryland location file unfair labor practice charge. Oh. Unfair labor practice. Apple? Store employees at the soon-to-be-closed Towson, Maryland retail stores, represented by the International Association of Machinists and Aerospace Workers, filed an unfair labor practice charge with the National Labor Relations Board against Apple, alleging it illegally discriminated against unionized workers. If I had a business that went union, I'd close it down. I would simply just close it down. I would. I'd just close it down. Think of all the money I'd save. You know, we'll just take it somewhere where people want to work. That's why my airfares went up so frickin' high, because of the union strikes that happened during Biden regime. Same as the car industry. They jacked up car prices. They had to pay for it. Had to pay. I think UPS was another one that went on strike and couldn't afford paying their employees like $117,000, $20,000 a year. But I hardly ever ship anything. I get free shipping from Amazon. UPS is about ready to break a resistance here. Unexpected log lower first. UPS expected to log lower first quarter profit, restricting weights on operations. Well, that don't sound too good. Maintains a neutral rating. They got earnings coming out. Whatever it did, I hit my resistance that I had charted. SPY could hit the 200, 214.47. It's so much easier to make money that first hour and a half of the day. Nice. He hasn't left yet, has he? I'd like to know where my glass cleaner is. Peekaboo. Wayfarer, which is a W. We got Caterpillar coming up Thursday morning. I got a big old, man, I'd do an earnings video tonight and just pick out my favorite ones and create a good watch list for you. This week's really a hot week. Cat. God, cats. Pooh. Look at that. That's impressive. $170. So the 200, the 200, the 200, the 200, the 200, the 200. And we'll put her right above around 809. Yeah, this is Jim Howard. I called you a little bit ago. Bye-bye. Jenny Horny's up.
And so that's something to consider here. We do also know that they now expect their global retail sales to be up in the mid-single digits for the year.
Going down.
Forecast in February had a gain of around 6%. Management did also appear to soften its forecast in the U.S., with U.S. same-store sales now expected to be up in the low mid-single digits for the year.
We got Lilly coming up.
Expectations for a 3% gain. So still for its first quarter, they increased their order count as well as their market share in the United States.
Lilly.
But again, it does seem like right now as they're bringing in this customer enthusiasm
Ooh,
and bringing
Lilly
in
looks
good deals,
tempted.
it's definitely taking at some cost. I mean, we're down 9% today. We've been down 9% pretty much throughout today's session.
Yeah, it's been a consistent downside move, and I did just check. They are still the worst performer in the S&P today for Domino's on the heels of that report. This last one, not a huge move tied to it, but a very interesting story here. Meta just up about 0.2 last I looked, but very interesting new partnerships. One of them sending solar energy from space.
Yeah, I think this is very interesting. Meta signing the first deal really of its kind for as far as this capacity reservation agreement with Overview Energy for up to 1 gigawatt of future space solar power, giving Meta access to electricity generated from satellites in orbit rather than traditional ground-based power plants. So Overview Energy does collect sunlight in constant orbit, roughly 22,000 miles above Earth, and does beam that energy as low as intensity as infrared.
That's interesting.
So this is really interesting. An initial
yeah, it is.
We're live about solar system, space solar system.
We both think it's interesting.
2028, with commercial power expected to be delivered now in 2030, meaning that it's a long-duration infrastructure bet rather than like a short-term bet on some supply, which is obviously fueling Meta's data centers. But the financial terms of the Overview deal were not disclosed, but Meta does become one of the first major companies to formally secure the rights to future space solar capacity, positioning it ahead of at least some of its other hyperscalers if that technology is able to scale successfully. There's a big if there, which is perhaps why we're not really seeing much more movement in reaction to this news. But Meta did say that this is designed to increase their output of existing solar installations by, again, extending more of their production into nighttime hours, which addresses one of the biggest power limitations with all things renewable energy, which is right now especially accretive to anything that is energy intensive as AI data centers are. So I think it's really interesting if you're like deep into the weeds in alternative energy, but obviously Meta is so huge. It's like, how much does this move the overall needle? Does this lead to monetization? Not really, but it does show they're at least, expanding their partnerships and trying to advance this technology, which is, if you're deep into the energy weeds, this is an interesting story.
I feel like we're living in a futuristic film, right? We're talking about orbitable data centers with the space.
Vulnerable.
Now we've got orbital solar panels sending solar energy back to Earth as a possibility. So, here we are, just out in orbit. But Jenny, thanks for breaking all of that down for us today. We really appreciate it. Jenny Horn, co-host of Next Gen Investing here. And I do want to send it back to Sam for a look at what we have coming up next in the show.
Well, Molly, we're going to check in on fixed income and discuss why your next guest says securitized fixed income deserves a bigger role in the portfolio. That's coming up next on Market on Close.
We're vulnerable.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
I have a question for you.
Oh, God.
Sure. When did Granddad first start investing?
Is today bad commercial day? Dad. How come Grandpa quit sleeping with me? Then she hugs her dad. Oh, gross. Whoever was that behind that commercial needs to be shot. Well, not a bad day. Should I do a SPX lotto? No. We had triple bottom right there. We had a quad bottom right there. We had a number 5. 1 bis, 2 bis, 3 bis, 4 bis, 5 bis. Oh my gosh. Oh. Jim, are you okay? What'd you do with your phone, you ding dong? What does your house need that you don't have? Well, a little too late for that one. Man, I was getting a good trade right there. It's too close to set an alert. Yeah, maybe let's go to 1 minute. Man, that's a solid spot. We got a Head and Shoulders right here. Interesting. That wick hit that right there. That right shoulder line. I think it's, yeah. Oh, look at that. That's an interesting candle. Read it open. Lily would have been a good trade this morning. And it still might be tomorrow morning. And I'm going to keep Lily on watch tomorrow. Lily. Lily. Well, I'm from the hills. My girlfriend is Lily. We'd always go to the pond and play with the lily pads. She would bring a sack lunch full of chickens, mashed potatoes. I love my Lily. Hey Lily, I got a pork rind stuck in my throat. I sound like an old goat. Me and Lily, we go to the movies. She'd cuddle up my girl, Lily. We'd get home and she'd be cooking that chicken again. She said, honey, are you getting tired of chicken? I said, no, Lily. You make the best chicken. I love my Lily. She's always been there for me. Feeding me chicken. Feeding me chicken. I woke up next to Lily. And she gave me a big old smile. And I told that woman, I'm gonna love you for a long, long while. Lily, I love my Lily. I'm gonna take his triple bottom. Now we're 50 years older, and I'm still holding on to my Lily. Holding on to my Lily. My Lily. She don't have that blonde hair no more. It's turned gray, but I still love my Lily. Jim, you're one of the best composers I've ever met in my whole entire life. AMD's back to the 200. Scott Ritter says this speaking is the busiest week of the quarter is here. I agree with him. He must have been a mole in my room. Okay. I want to trade Lily. LLY. May 15. Oh my God. Oh no. Oh. May 1st. Oh, I can't afford Lily. Unbelievable. No. Never mind. I wrote that song for nothing. I can't afford them. Wow, them options are expensive. They shouldn't be. I'm disturbed. I'm very disturbed. Here it comes. Now, it does not set my alert. Well, it ain't gonna matter. I could buy a couple shares. 2 shares of Lily. That's what they're buying. 1111526 Somebody bought 100 shares of them. Wow. 100 times $873. $873. I thought I saw something. 872 times 100. 87,000? That don't sound right. I guess. $87,000. Oh, that was 400 of them. 873 times 400. Or sold for 400 is 300. 50,000.
Infrastructure for asset management.
Sam, thanks for having me back on the program. Great to be with you. Sorry that I'm not in Chicago today. What's happening right now is that AI is going from something that we're all very curious about to a CEO level mandate. Every CEO has a mandate from their board to figure out how to use this technology. And Investment News was out last week with some new reporting that 43% of wealth managers are in the market this year for the first time in a long time looking for a new technology stack. And of those 43%, 80% are now saying that it's time to unify data across front, middle, and back office. And this is something that we've been working with our customers on at Ridgeline since we founded the company. Now, cumulatively about 700 billion or so in our customer base focused on this goal. And it reminds me of some advice that we got from an advisor early on when we started the business. When there's a paradigm shift, people switch their system of record, and AI is certainly the catalyst for that. And we're seeing that in the market, and that's driving the momentum in our business with a new customer almost every 2 weeks last year. So it's a pretty exciting time.
Can you just give us some examples behind those numbers, though, Jack? I mean, you know, when I think of wealth managers, I think of how Charles Schwab and the CEO, Rick Wurster, came out and explicitly addressed the AI disruption fears. And he said that AI won't come and eat their lunch because they're able to use AI to help their clients. And I thought he was very poignant, and you know, he really elaborated on how they're actually utilizing the technology to try to gain more market share. Can you explain how this is actually being used by the industry?
Yeah, there's no doubt about firms like Schwab are in a unique position to use AI to continue to do what they do really well. I don't know the exact numbers, but Schwab's first quarter net new flows were something like 180 billion plus. And if you think about it, Robinhood is actually just about a $300 billion manager. So a couple quarters of Schwab's flows equals one Robinhood. So certainly their size and scale is a major competitive advantage. And AI purports to help their advisors do what they do for their clients even better by helping them really personalize the advice to a level that previously was not possible. And what Schwab and frankly everyone's doing in the market first is slaying the dragon that is fragmented data, because the it in AI is the data set, and you really have got to wrap your arms around all of the data that you need for AI. And we focused on that by building a unified data model that is industry specific for asset and wealth managers. And we're using that to feed the AI. Now, you've probably heard that all of these AI models have what is called a context window. You could think of the context window as essentially the AI's memory at runtime, or the mind's eye of the AI. And the key is to introduce data in the right format and at the right time into that context window to generate rich and reliable output. And so the first thing that you've really got to do is slay that dragon on fragmented data. And the Schwabs of the world and also smaller asset wealth managers are doing exactly that, Sam.
And Jack, I want to talk about some of the data that you sent over, because you say 43% of wealth managers are exploring new tech stacks, 84% want fully integrated platforms. What is all of a sudden driving this urgency? Because this is not a new conversation.
Well, we're all experiencing the explosion of tools like ChatGPT in our personal lives, and we want to bring those into our professional lives. And we've been on a journey over the last 2.5 years helping our customers go from answer engines ultimately to agentically automating their businesses. If you think about it, A lot of us use AI or ChatGPT like a better version of Google, and I certainly did it over the weekend when I asked ChatGPT how many days there were to Mother's Day. But there's so much more that you can do with it. And so we're on that journey with our customers as well. We first launched the Universal Assistant, which is a natural language-based way to use our software through voice and text. Not too dissimilar from the way that you use ChatGPT in your personal lives today, but with your data about your investors and about their portfolios and the action that's going on inside of their portfolios. That is one of the most popular ways to use Richline today. But from there, we launched AI agents, which are essentially digital coworkers that can join and extend your team. We have customers that are live today using our reconciliation agents, for example. Now, these are agents that will log into Richline's system multiple hours before our human users are awake and start to actually electronically communicate with the banks and prepare an intelligent set of recommendations for human users once they're at their desks to get their trading days started. And then where we're headed, and actually the bleeding edge of all of this that we're pretty excited about that we have going on in the labs right now, is AI computer use. Now, this is where you give the AI access to a keyboard, to a mouse, and they can use a browser like a human would and actually log into our system and start to drive and use the system. And you probably at this point heard of products like Anthropic Cowork, or maybe you've heard of the fastest growing open source project of all time, OpenClaw. These are the same ideas whereby you give the computer
give me a
AI
chance?
access to a computer, a browser, and then use it like an operating system.
Okay, here we go.
This has some profound benefits to helping our customers automate their businesses. But as
I'm sorry, but it's my turn now. It's my turn. We've got a Head and Shoulders at 714.82. One more red candle. And I straight across, Head and Shoulders. Oh. Oh. Dadgummit. One more red candle's all I needed. Now what the heck just happened here? Oh, I got a headache. Well, that wasn't right. Not too bad. It moved up 100% from 45. The 7181s. I mean 7180s. Amazon and Apple are the only ones down today on the Magnificent Seven. Oh, there it is. Lily hit my support. Lily. Too bad they're expensive. Oh gosh, look at that. I have a target on SPX to 7,200. Shoot. Trade with Jimmy. Tim Cook? Well, let's find out. I bet you already know the answer. Probably because he had sex with Elon. Or it could be health issues. That or he's just rich. We'll ask Google AI. Why did Gore could be better, Tim Cook step DOW down? They don't want to tell us. Gort? Why did Tim Cook step down? Tim Cook announced April 20th, 2026 that he'll step down as Apple CEO effective September 1st. Transition role is this is planned. This is a planned long-term succession, not a sudden resignation. Business performing strongly. The product roadmap and pipeline took incredible. He's choosing successor John Turnus. No real reason. In short, it's not because of illness or controversy. It's a deliberate handoff at the moment when Cook believes the company is in excellent shape for the next chapter. I think it's because of innovation. If you want my opinion, he's not keeping up with innovation. But don't you always want to resign at the peak, at the highest point in your life? Like a boxer should, you know, instead of fighting that last fight, take the last win and call it quits. Probably to save his name. He probably seen some problems coming down with AI. They found a better CEO. That's my opinion. I'm sticking to it. No more cover? Yep. SPY pulled back again. We got 4 minutes left, and I'm getting out of here. Don't forget to buy my Powerball ticket tonight. How? I didn't even know I had series. When I bought, they gave me series when I bought my car. I didn't even know it. Them bastards. I had series. Oh, I didn't even know it. Trial ends 7/26. Huh. I don't want it. Where's the knife I was looking for? I didn't see if Kevin was on.
Gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with...
Ding, 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 ding. 2 adults. All right. Well, that's the way it goes. Not a bad day. The first half of the day was excellent, pretty clean. I think if I'd paid a little bit more attention to the second half, it'd have been just as good. But my bodily instincts was telling me not to trade that much and just kind of pay attention to the news and see what's going on. So Iran comes out with a new peace deal. We'll see how that goes. And that's it. I'm going to go do a little hallway, and I'll be back here tomorrow. See you later, Bobby.